Good morning, everybody. Thanks for coming. Welcome. Just a few things. If you're watching us on YouTube, hello. Good to have you. If you'd like and help, subscribe. It helps a great deal. We appreciate it. And Greg would appreciate it a lot.
Good morning, everybody.
Oops. Let me go ahead and pause the other broadcast. I'm not listening to myself about 30 seconds late. I want to say thank you for coming. It's been a great conference. We're kicking off the last day right now with Jamie. You can see him probably below me or maybe above me. He is joining us for the first time. He's going to be giving his very first presentation. Before we get started, I have to read a legal disclaimer and I have to do a few other things. Again, if you're watching us on YouTube, like and subscribe. If you have questions at any time, we will have some time for Q&A at the end of Jamie's session. So please feel free to ask. And let me just read our legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators or features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading MetaStock, and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in this presentation should be construed as investment advice or the solicitation to buy a security. So before we kick everything off, I want to say thank you to some of the sponsors we have. American Association of Individual Investors. You can find them at AAII.com. Hugely well-respected, well-reputed nonprofit organization. I'll be talking about them throughout the course of the day and some of the services that they offer. They're all very affordable. AAII.com. And thank you. Also want to say thank you to Stocks and Commodities Magazine. Stocks and Commodities Magazine has been supporting the summits and conferences that we do for at least the whole time we've been doing it, which I need to figure out how long that is. Stocks and Commodities Magazine is a great magazine, 1.3 million subscribers. They've been great supporters of everything that we do here, and we appreciate it. www.traders.com. We've talked a lot about the Traders Forum. You can join it for free. It's a community of traders talking about ideas, technical analysis, all that kind of stuff. TheTradersForum.com. And of course, we're MetaStock. MetaStock, we're doing an extended trial. I'm going to talk about that after Jamie's done. So let's go ahead and kind of kick off. Jamie is his first time speaking here. He's the founder of The Rational Trader. He's a co-host with Lewis Navier in the Rational Trader podcast. He's going to be talking about the new market shift and finding and trading a high-rated stocks using the Billionaire's blueprint. And as always, we always love having a brand new speaker on here. We get to break him in a little bit. Jamie, welcome to the channel. It's good to have you. I can see you.
Thank you.
Okay, cool. Let me go ahead and make you the presenter. I'll make sure before I get out of the way that we can see your screens and everything looks good. And I'll be here the whole time. So if you need me, just shout at me.
Okay.
While you're doing that, Yogs asked for the last recording yesterday. I'll find that in a second and send it to you, Yogs. I'll send it in chat in case anybody else wants it. And Neil, good morning. Thanks for saying hello. And I can't see your screen, although I can see your desktop right now.
Yeah, you can. So I had the presentation. How about that?
It looks perfect. First try.
Aha.
Jamie, it's yours. I'm going to get out of the way.
You have proven that you can teach an old dog a new trick.
There you go. You look great. Everything looks great. Let me know if you need anything, okay?
Excellent. I appreciate it. And thank you all for joining us today. In my older age, I'm really grateful, especially when other people decide to spend their time listening to whatever it is that I'm presenting. So I know it's a Saturday. The weekends are precious. I know mine are. So very grateful that you could join us today. And I'll try to go through this presentation and make it as valuable for you. Hopefully you'll learn something new, something that you can apply. And maybe for some of you that are really interested, my publisher is opening the doors for me to invite new members at a special introductory trial offer. So we'll throw that out there as well. My name is Jamie Dlugosch, and this is the 2 Sigma stock strategy to beat market manipulation. I had some technical difficulties earlier today, so if I stumble through the presentation here, that's kind of what's going on. We have our own disclaimer. You heard the disclaimer for the webinar here, but I should probably read my own, or at least show it here. Trading is risky. I just call this the common sense page. You know, please, please, please don't be doing something that is out of your comfort zone. Trading does involve risk. You can and will have losses. No system is perfect. While we think the 2 Sigma trading that we're going to show you here today is pretty darn powerful and impressive, you can and will occur losses even with a system that we think is the greatest thing since sliced bread. So again, just use common sense for this part of the presentation, and I'll get started. With a trip down memory lane, let's dive back in time. Remember the Back to the Future flying cars. It's the roaring 20s. We had let the good times roll, but we also had horse-drawn buggies in the 1920s. And I did this presentation for, not for the first time, but it was the first time I noticed in this picture that this is Congress and Baker Street. So anybody joining from San Francisco will recognize this is a horse-drawn trolley from back in the 1920s. Prohibition. Alcohol was banned back then, which for some people I know must have been a horrible situation. And generally speaking, the world was stuck from an innovation standpoint, similar to maybe where a lot of people are feeling today with respect to the markets, the economy, just the world in general. And of course, that's when the best light bulb opportunities present themselves. You know, everybody has that aha moment, and that's really what I'm here to show you today. No, I'm not talking about flying cars, although I did see stories just in the last few weeks about companies that are, you know, trying to bring that fantasy to a reality. I'm not talking about robots, and robots are now becoming more and more prevalent. No, I'm talking about the very simple pleasures of mixing peanut butter and chocolate, 2 very yummy treats that are even better when they're mixed together. Yes, believe it or not, the Reese's peanut butter cup was invented back in the 1920s, 1928, I believe, and millions, if not billions, of candy bars sold later made billionaires out of the inventor of this very simple innovation. Well, winning, believe it or not, in the stock market is no different than finding that aha moment that perhaps can grow into a billion-dollar opportunity. I've found that people tend to overcomplicate trading, specifically investing too, although people have gotten a little bit better about their rigor with respect to long-term investing. I don't know about you, and some people love this stuff, the charts, the candlesticks, the graphs, and tick for tick, they're watching the market and it's doing this, and there's a candlestick here, and there's a drip there, and there's a teacup here, and there's a handle there, and oh my God, it, to me, it makes my head wanna explode. Same thing with all of the endless news cycles that are out there. It seems like every second there's some different story. And believe it or not, and I'm sure most of you know, that there are hedge funds with algorithms now that trade off of these tick for tick breaking news stories. People also tend to chase trends. that Wall Street has created specifically, believe it or not, to fail. And most people that create these schemes on Wall Street, they know they're going to fail, but they don't care. They're out for themselves. They want to put money in their pocket. They are not here to make you money ever. Don't ever, ever forget that. But what if you had the right stock combined with a repeatable strategy? To me, that's how you build life-changing wealth. And really, both of these ingredients are important. The picking the right stocks and having a repeatable strategy that will stand the test of time, no matter what market conditions are present. Personally, I've been in this business now going on 35 plus years, and I didn't always see things as clearly as I do today. Really, the analogy is applicable for me. I felt oftentimes, and maybe you have too, like a man wandering in the desert. And that's after wandering the desert for 7 years or so, I had an epiphany. And truly, the light bulb went on that was kind of amazing. And what I discovered, I came into this business in the 1990s and was trained as a fundamental value investor with a guru that was one of the best in the country. His name was Al Frank. And, Al taught me everything he knew about being a long-term investor. But while I was out wandering the desert, I discovered that my own skill sets and experiences really, I kept seeing the Golden Gate Bridge being a bridge to investors, or being a bridge for traders that take you from being an investor to being a trader by finding the right stocks, by having a repeatable strategy that you can use. And when I started in this business with my friend Al Frank, our average holding period, we would analyze stocks and only recommend a stock that we believed could double in value. And we were really good at it. It took, on average, 6 years for our average recommendation to double in value. That's a crazy, crazy long time. In 2002, I started a newsletter called The Rational Investor and broke off on my own because I realized that while we were looking at a number of value metrics, I wanted to learn more about all of the stocks that doubled in value or more. Was there a quality or a certain aspect underpinning of that particular story that I could hone in on to make a simpler strategy while at the same time reducing the amount of time it took for that said stock to double in value? And lo and behold, I was able to do that by focusing on the PEG ratio. And the PEG ratio allowed my recommendations to, my historical record was every stock I recommended, it took on average 3 years to double in value. Today, with the 2 Sigma trading approach, what do you think my holding period is today for doubling your money? Well, with 2 Sigma, we found that we could double our money in 12 to 18 months. So it's ironic because I started this exercise by saying I wanted to make the process more simple. And I've actually, 2 Sigma has actually made the process more difficult. But if you bear with me here, that makes sense because technology has changed. Technology has allowed me to be more complicated and complex with my analysis in a way that allows me to find the right stocks to trade. And when I do that, we have found that an investor can double their money in 12 to 18 months, or trader, I should say. I don't like those labels, to be honest. But anyway, so you'll see me using investor and trader interchangeably. And in some markets, you can do it faster, right? You can be in sometimes the absolute right conditions, and you can grow your profits even faster. I know what you're thinking. Another so-called billionaire blueprint to beat Wall Street, as if I'm just, expect you to take my word for it. Well, I mean, I kind of do expect you to take my word for it, if I'm being honest. And I'm sure you've heard people before sell you this story. But I think I've been through the battles and have the scars to prove myself to you that I can actually outsmart the sharks that are rigging the system. They're very, very manipulative. But what I like to do, and what I think I do best, is find arbitrage opportunities to exploit those that are manipulating the market. So you've heard it all before. Why do some traders keep winning year after year while other people are getting crushed? That's a simple question. And for some of you out there that are experienced, I'm hopeful that you are, doing better than those that are getting crushed. But surprisingly, I found that it's remarkable how many people really struggle with their trading. They're following false trends. They're being inundated with constant noise and distraction. It's almost like the magician, right? It's like, look over here, and then over here I'm picking your pocket, right? It's the classic distraction of Wall Street that again is really set up for you to fail. And I found that the people making the big money on Wall Street are not just lucky; they're actually following a repeatable system, and that's important. It's, I'm not generally, well, I shouldn't say that. I am the Gemini that I am, right? I can be two things at once. And what I was going to say is I'm not much of a rule follower, but at the same time, I very am much a rule follower. So I'm kind of talking out of both sides of my mouth here. But truly, following a repeatable system is a differentiator if you want to be successful. And today, I'm really here to show you how I've developed a repeatable system that anybody can use to grow wealth in their portfolio. Since inception, I started Two Sigma trading in early 2024. We've made 140 round trip trades. My average holding period is 28 days. And on average, every trade that we've made on average has gained 4.9%. If you annualize that using the 28-day holding period, that comes to 63%. This, to be fair, is actually includes the last few months that have been really challenging trading-wise. We're actually still making money, believe it or not. 2025, thus far in the current year, we've made 13 trades, 5 of them of the round trip variety. I made 5 new trades just this past week. The system really was spitting out a large number of opportunities, so we were very active last week. But these numbers are actually lower than what I think they can be over an even longer period of time. So what sounds easier? Staring at your computers, pulling out your hair, looking at all of these charts, and really for those traders that do that, and I'm not knocking it, it's honestly just not for me, but I would be pulling my hair out if I had to trade that way. I really like, again, a simple rules-based approach that doesn't require me to sit in front of my computer screen. My eyes would go bad. They're already going bad. So what if somebody could hand you on a silver platter the right stocks to trade, right? That would be a pretty good deal, wouldn't it? It's easier said than done, of course, and that's what I'm here to show you, how you can find the silver platter of right stocks to be trading. A little bit about myself, I've already shared. I've been in the business for now 38 years. I am the founder of RationalTraderDaily.com. I am the co-host with my good friend Louis Navalier of the Rational Trader podcast. And that's really where the ideas for Two Sigma trading were generated. And right now, today, we're in a market that, even the most respected strategists on Wall Street are having difficulty forecasting where we go next. You have a new administration in Washington, and irrespective of your political views, the one thing I can say about what's going on today is that there's a lot of change going on, and change has an impact. And that impact, the first derivative of that impact is volatility. And so that's one thing. The second thing, you have a market, by all accounts, from a fundamental value standpoint, you have a market that is overpriced. The valuations, even with the little hiccup we had here over the last 2 weeks, stocks by any measure are expensive right now. We still have inflation. That hasn't gone away. The Federal Reserve's target on inflation is 2%. We got the PCE report on Friday. I guess you could argue we're moving in the right direction, but there are still lots of issues that need to be resolved. And of course, front and center for me are the market manipulators. To me, Citadel is the biggest violator in this regard. They're out there to make money no matter what happens in the market, and basically by taking advantage of people. And the cold hard truth is, this manipulation isn't stopping anytime soon. These guys like Citadel are akin to insurance salesmen or insurance companies. They really don't care if the hurricane hits or not. They just need to frighten you enough to buy a policy. And if you do that, and they do it in enough volume, they make money whether there's a hurricane or not. And what they want you to do, those insurance sales people, is to chase gimmicks. They want you to chase the latest fads on Wall Street. Some of these are obvious, right? .com boom. Well, it was hot and then a crash. Then you had the housing boom. It was red hot. Remember, Countrywide was a darling stock for the aggressive Momo crowd. It was hot and then it crashed. Meme stocks, recently, right? Meme stocks were red hot and then they crashed. They made movies about it, for crying out loud. Cannabis stocks, cryptocurrency, AI stocks. It really just goes, it's a never-ending list of fads for investors to chase. And I call it fear of missing out investing. And FOMO investing simply, in my opinion, or trading for that matter, does not work. So I don't like the system any more than any of you all, but it's what we have. So we have two choices. We can either keep guessing, chasing trends, and probably losing like everybody else, or we can learn how to use the game against the manipulators by trading the right stocks at the right time, just like the big players do. So I'm asking a question. This is really our moment. Will you be on the right side of it? Will you make the right decision to find and trade the right stocks? Okay, no, I'm not going to do an Abraham Lincoln impression, but 77 years ago, the landscape, like I said, the average holding period to double my money was 6 years. Today, it's 28 days. Let me share with you a little bit more about my own personal transformation from being an investor, long-term investor with a 6-year holding period, to a trader now with average holding period of 28 days. If you knew me personally, it would be, you would see it easily, right? But I'll explain a little bit more detail. This market manipulation stuff, when I was in business school back in the early 1990s, we were taught quite a bit about efficient market theory, and you just take that stuff in when you're young and you believe it. But watching time and time again, and I grew up in a brokerage firm household as a child, so I've been around the industry. My father was in the business as an investment banker, and boy, some of the, speaking of guys out there taking advantage, I love my pops, but he took advantage of people, bottom line. And he would argue, it was for the good of capitalism, and for the most part it was, but there were some other things that went on that, would make your skin crawl. So over many years of watching market inefficiency, it really, for me, culminated with the evolution of the passive investment strategies. These people are asking you to take maximum risk with minimum returns. And I mean, every time I think of the word passive right now, this is going to be disgusting, but I kind of vomit in my mouth a little bit, right? It just, that I regurgitate. It really, I have a physical reaction to this stuff, and it makes me mad, really. So that's the driving force behind Two Sigma trading. What are the 3 biggest issues for traders and investors today? Number one, I've said it before, most people tend to fall victim to Wall Street and factors beyond their control. Number 2, missed opportunities because of chasing false trends. And again, that's the FOMO. People feel like, oh my gosh, there's all sorts of money. I mean, look at Bitcoin, right? And for all I know, Bitcoin may go to $1 million, right? But it's also, how do I say it without offending people? I mean, I have boxer shorts that I could turn into a Bitcoin and do the exact same thing. That there's no store of value in my boxer shorts, but with the right marketing scheme, I could make them, well, you get what I'm trying to say. It's a trend, it's a fad, and the diehards, I don't want to hear from you. I know I'm probably making you angry, and I don't mean to do that. I just don't understand the Bitcoin thing. So number 3 is the volatility. Most people don't really have experience trading volatility, and volatility can be dangerous. So as I mentioned earlier, a couple of years ago, I started the Rational Trader podcast with my friend Louis Navalier, who's one of the best stock pickers in the country. Louis is an investor, he's not a trader. And the idea for the Reese's Peanut Butter Cup came up in the podcast because oftentimes we talk about how what I do is the chocolate and what Louis does is the peanut butter. And when you mix these two things together, wow, it's really powerful. And what happened on one of the early podcasts, multiple podcasts, was we would be analyzing a particular stock in Louis' universe and always talking about this idea of reversion to the mean. It was just an anecdotal discussion at that time, but it was coming up time and time and time again. And that really got me thinking that there was something more here that I needed to look into. And so I embarked upon, well, I have done white papers and research projects with Navalier over the years. The last one was in 2018. I did a kind of an alpha generator white paper utilizing longs and shorts as a way to generate alpha while keeping your beta low. So Louis has access to a lot of great software and data that I applied to this idea of reversion to the mean. And so I started simply by saying, let's take some of your highest rated stocks, Louis, and finding out whether or not we could generate a rules-based approach to define this concept of reversion to the mean and, by golly, trade off of it. So what is 2 sigma trading? Well, out of that research, we did indeed develop a rules-based approach. Number one, it starts and stops with trading only the highest quality stocks. These are the highest rated stocks. And if you think about it, that makes a lot of sense, because what does it take to be a high rated stock? Well, I'm going to go over some of the variables that we look at, but at the end of the day, what you want as a trader is to be involved in a stock that somebody else is going to, a larger pool of people will desire at some point down the road, right? The classic lesson I learned in business school on valuations was not following some model, but the value of a stock is the price somebody's going to pay for it, right? And in this particular case, by identifying the highest rated stocks, what you're really doing is finding the names that, and I can specifically relate this to institutional investors, the biggest pool of capital that's out there are the ones that will, at some point, and it happens time and time again, you get into this high rated stock and the next thing you know, and there are reasons for this, the institutions start buying. That's the holy grail of owning the highest rated stocks. Once you have a high rated stock, then you need a trigger. And because we're talking about reversion to the mean, it makes sense then that we would generate a trade that starts when we hit 2 standard deviations below that mean. And once we enter a trade, rule number 3 is just as important. You need to have strict rules on exiting the trade using, again, the reversion to the mean as exit trigger 1. And the best case scenario is we get a pool of buyers pushing the stock to 2 standard deviations above the mean. All right, let's go find some high quality stocks. How do we do it? Well, as I said, there are several variables. Alpha front and center, super important. For those that aren't familiar with alpha, alpha is the amount of return on a stock that is non-correlated to the rest of the market. So if you're not just riding the wave of the market to push your stock higher, you actually are generating positive returns irrespective of whatever's happening in the overall marketplace. We want to have low beta. Beta as a measurement of risk, again, relative to the market. Beta of 1 means you're taking market risk. That's why typically I like stocks that have a beta below 1. I'm looking for strong earnings growth. I'm looking for strong revenue growth. Margin expansion is huge. And again, these are the key ingredients, right? If you find a stock that has all of these ingredients, then you've increased the odds that an institutional buyer is going to come along and pop the stock. beating analyst estimates consistently and having a strong earnings history of doing that. And then having analysts Wall Street coverage where they're constantly increasing their estimates on a particular stock. All of these things are super, super important. But they're also, like I said, the complexity of this is, again, my head's going to explode. But what the computer does for us is it takes every single one of these indicators that I've listed here, and we can add in probably 25 more on top of this. And each particular variable is then measured against every other stock in the market, kind of like a ranking, top to bottom, right? So you do that for all of these variables, and like I said, there's in total, call it 30 of them, okay? And for each one, you get a different ranking, right? Because no stock is, well, there are perfect stocks out there, but I digress. Each one's going to have a little bit of a different ranking relative to the other stock that you're comparing it to. And we're doing this for all 6,000 plus publicly traded stocks in the market. I remember when I started in this business, my first job in money management, our office space, we had a giant office and like 5 desks. But you know what filled up the rest of the office? File cabinets full of 10 Qs and 10 Ks. We actually had to go through this stuff by hand to do these calculations. You had computers back in the early 90s, but to do the calculations, but to actually get the data, you didn't have like a fact set like you do today. So anyway, WTH on all of this stuff. Again, to do all of this would take hundreds of thousands of dollars in time and analyst effort. Again, I'm going to hand it to you on a silver platter, and I'll explain that later on in the presentation. Rule number 2 then is diving into the stats. I love stats. I'm a poker player. I'm always trying to evaluate probabilities, expected values, and in this case, we have to use 2 standard deviations. 2 standard deviations is simply a statistical measure measured off of the mean. And for those of you traders that understand, or maybe you use standard deviation, you'll recognize that what we're doing here is Bollinger Bands. And here's where, again, the computers can really save you time and money. Every financial portal now will let you calculate or show you a chart of the 2 standard deviation bands as well as the mean. In this case, I'm just looking at the 2 standard deviations for NVIDIA. What you need to keep in mind with 2 standard deviations, or what you should keep in mind, is that what this is telling you is that a stock is going to be trading between these bands 95% of the time. So there you go with pot odds, right? A stock then that trades below 2 standard deviations has a 95% probability of getting back above the 2 standard deviation. And as Louis and I discovered and discussed in our podcast, this reversion to the mean of these great stocks that get pushed down, and I'm agnostic as to why a stock may be trading lower. I don't give a rat's behind about what the reasons are. I'm agnostic. All I know is that when I touch this 2 standard deviation line, I trigger a 2 sigma trade. And of course, then rule number 3 is exiting a 2 sigma trade. And that's really the concept of reversion to the mean, exploiting market inefficiencies. These inefficiencies will happen during earnings season. They'll happen because of short covering. The most recent best example of that, you may be familiar with the research firm and hedge fund Hindenburg, a real notorious short seller that was out there. He put out these reports on a particular stock. Well, first he would do the analysis and then get himself short, and then he would go publicize his short out in the marketplace. I mean, it was all self-dealing. Well, they went out of business. One of the stocks that they covered was so happened to be a stock that was highly rated and was in our 2 Sigma ecosystem portfolio. The short selling created the opportunity, and then when he went out of business, what do you think happened? All of those shorts were covered and the stock soared, and it was just a fantastic win for us. Animal spirits is another reason why, you just get bull markets for whatever reason, and that pushes a stock back to the mean or beyond as well. So if I can recap the 2 Sigma trading process, first and foremost, we only consider the highest rated stocks in our universe. We use 2 standard deviations to trigger our trade, and when we are 2 standard deviations below the mean is that trigger. And on an exit, we use reversion to the mean as our first exit, 2 standard deviations above the mean as our secondary exit. There is some discretion that I'll use. Again, I can't help myself. I'm a macro guy, and I apply those as well to the exit. Since inception, the numbers speak for themselves of 2 Sigma Trader. If I can, that 127 is a typo. That should be 140. Since inception, we've made 140 trades, 105 winners. That's 75% success rate. If I can share with you some of our 2025 trades, I mentioned that we've opened 13 trades in 2025. We've closed 5 trades in 2025. And so 8 trades are still open. FTAI Aviation was a highly rated stock. Again, that's step number 1. Is this a highly rated stock? Yes. Then we go to our chart on FTAI, and you can see here on January 15th, the stock collapsed below 2 Sigma. Now, I didn't put the trade on at that moment in time for good reason. The stock wasn't on my watch list, because to get on my watch list, the stock has to be trading below the mean. And here we were, this was kind of a sudden collapse in the stock. Well, this move put the stock on my watch list, and the next time it got below 2 standard deviations on the 21st was when we entered the trade. 2 days later, I had a 21% gain in this position. Now, I used discretion here, and I'll be the first to admit I was wrong doing that in this particular case. You can see FTAI continued to run, but I tend to follow the axiom, hogs get slaughtered. So if I have a 21% gain after 2 days, I'm going to lock it in. And that's what I did here with FTAI. Fox News Media, Fox A was the ticker symbol. This also is a highly rated stock, traded below 2 standard deviations on the 21st of January. You can see it breached 2 standard deviations above the mean on, January 28th. And we closed that trade. And here too, the rules are the rules. I got out of the trade. By all accounts, I could have held on, I suppose. The stock continued. And that'll happen because these, again, by finding that pool of buyers of your stock, by using only the highest rated stocks, you're getting, you'll often see runs, but you'll also see situations where exiting proved to be the right thing to do here. So more times than not, that is the case. It just so happens that these last 2 that I'm showing you here, the stocks continue to run higher. Cinemark is an example of one where I'm glad I got out. We opened the trade on, it's a highly rated stock, and on the 21st of January, trading at 2 standard deviations below the mean. And we got out on February 5th, right at 2 standard deviations above the mean. And you can see 10 days later, the stock collapsed. Now, here's what's interesting, and maybe you're picking up on it, but Cinemark is a stock I'm going to own again, right? Because it's still highly rated, and it's trading now closer to 2 standard deviations below the mean. So if you are so kind to join our community of 2 Sigma traders, you'll often find, we'll get into a stock and we can trade it, 4 or 5 times, depending on circumstances, following this reversion to the mean approach. Of course, NVIDIA, lots of people want to know about NVIDIA, and we love NVIDIA. It's a highly rated stock. Its numbers, from an earnings growth, revenue growth, margin expansion, 70+% margins, gross margin for NVIDIA. My God, find me a better stock. So it's highly rated, and we entered a trade on January 27th into NVIDIA. And in this case, we closed the position when it traded above the mean for a 7.2% gain. Vertiv, another highly rated stock, on January 27th, it too traded 2 standard deviations below the mean. And on February 10th, if I can, that was at above the mean. So it hit our exit trigger and we executed. Again, we utilize some discretion here. It's a good question to ask, and I'm not sure I have the perfect answer of, why would you close a position at the mean versus closing at 2 standard deviations above the mean. It's risk reward, right? And here in this case, we already had the reward of 21%. And again, I'm not going to be a hog that gets slaughtered with my trading. One of the trades that's still open, we're actually in the red on this one, just proving that we are fallible, just like everybody else. Google's a very highly rated stock. We love this stock. It traded 2 standard deviations below the mean on February 7th, so we got into the trade, and it subsequently has sold off since then. We're still in the trade, and the reason our holding period is 28 days is because we have the patience to wait. And in this case, if I have to wait 2 months, at some point, I am a strong believer that Google is going to revert to the mean price, and when it does, that's when I'll exit this trade. Another trade that's still open is Allison Transmission. That also is a highly rated stock that got dragged down with the tariff conversation with Canada, I guess. So could you make an argument that this is a stock you want to avoid? Again, be agnostic about whatever the reason is for a stock, as long as the fundamentals that you're analyzing stand up to your rigor, then it's a stock that is on your watch list. And when you hit 2 standard deviations below the mean, like we did on February 12th, we opened this trade and it is still open. We are bouncing along right now with looks like about a 2% gain on this one. Okay, so these are real-time examples of what the power of 2 Sigma trading can do. I think it can do for you as well. Let me go over a few stocks if I can. I'm going to check the time here. It looks like I'm running a little bit over on time, so I'll do these real quick. NVIDIA today, what would you do with NVIDIA? I showed you we just recently traded it in January, closed it in February. This selling, I created this chart before NVIDIA reported earnings, and it was trading above the mean. I can't remember off the top of my head where NVIDIA closed, but it got down close to 2 Sigma. So this very much is on my watch list as a stock I want to take a look at. Tesla, same thing, highly rated stock. It's trading, it's been really kissing the 2 Sigma now for several trading sessions. It's on my watch list, and at some point I'll add it to the portfolio. Carvana, love this stock. I mentioned the Hindenburg story. That drove Carvana close to $300 a share, but subsequent to that, it sold off again and hit 2 Sigma. I did not pull the trigger. I should have and wished I did. because I think this one's going to go right back to $300 a share. So these are some stocks in real time. I do have one 2 Sigma trade that you all can make right now. So if you don't leave with just the knowledge, you can leave with this particular trade, and that's United Airlines. It's a highly rated stock because of its earnings growth, revenue growth, and performance against earnings. It's trading below 2 standard deviations below the mean. We entered this trade, just full disclosure, in our 2 Sigma member service, opened a trade on United Airlines on Thursday, but it's yours there for the picking. All right. Let me get to, if I can, my little pitch here. And I said my publisher has been kind to open the doors for a limited time to you all at a special price. What do you get as a 2 Sigma trader? I do a hot stock watch list. I do daily market videos. These daily market videos, by the way, are not daily. They're Monday through Thursday. I call them daily. And they, Louis Navalier joins me on these videos. It's really fun getting 2 old guys talking stocks. I feel like those 2 old guys in the balcony from the Muppet Show. That's kind of what we do. No, I'm kidding. Of course, in all seriousness, we break down highly rated stocks on a 2 Sigma basis. We interject our macro opinions as well. So a ton of value in the daily market videos. I do a Discord, which is a lot of fun for people. And of course, you know, your typical publishing thing, trade alerts by email with your exit targets, entry and exit targets every week. I'll be doing, and after I finish recording here with you all, I'm going to be doing our weekly update that comes out on Sunday. Once a month, I hold a member-only meeting that comes, you know, with lots of great fodder talking about our 2 Sigma portfolio, new stocks on the watch list, new topics for education purposes, whatever questions members might have, I answer them there. And then we do a portfolio tracker as well. I do this because, and I never, you know, when I was in business school, I would have never guessed I would have been in this particular business. But I was exposed to it early on by, like I said, my friend Al Frank, who passed away in the early 2000s. So, you know, it just, I got the bug. I do it for love. I really, and hopefully that came out in this presentation, that I really care about what I'm creating and the ideas that I'm sharing with you all. And when I get a testimonial like that, it's really great. I'm 99% certain you're not going to find these trades anywhere else. It really is unique to take my chocolate and Louis' peanut butter and mix them together. His highest rated stocks and my 2 Sigma spin. I've showed you the results before. They're really good. So the offer at www.tradethirsty.com/90. This is a 90-day introductory offer. We're giving it away to the first 30 people that sign up. So there's a time limit here because it's such a great offer. You're going to get all of the things I mentioned. Plus, in another trading service I do my macro ETF trading called the Money Fortress, which is super cool. And it's, I was surprised my publisher put this in the offer because, well, it's super, super valuable. The Money Fortress, I do a one intraday trade. Our dual mandate is preservation of capital. It's kind of a hedge fund product. I'm trying to preserve capital, but at the same time, generate significant market outperformance or alpha. 2025, year to date, I'm up almost 10% in the Money Fortress. And last year I was up 30% with the rest of the market. I didn't outperform the market per se last year in the Money Fortress, but Years prior I have. So really cool that they're offering this for the 90 for 90 offer. www.tradethirsty.com/90. Okay, I'm done talking. Thank you for listening. I'm super, super grateful that you all stuck around. I'll hand it over to Jeff. Hello?
Yeah, do you have time for a couple questions?
I absolutely do.
All right, we got the links in the chat so you can take advantage. That's $90 for 3 months. That's like $30 a month. You're crazy.
Well, it's not me. You can thank the folks at Trade Thirsty. They came up with this. So.
All right, I'll tell Jeanette she's crazy then. How does your strategy work when you enter a bear market? Boris wants to know.
Great question. And again, we're agnostic as to why a particular stock is trading lower, and that includes if there's a bear market. Now, let's see, how can I answer this? I follow the system is the system, right? And I follow it rigorously. And there are great stocks to buy in bull markets. There are great stocks to buy in bear markets. I should say great stocks to trade, right? Following this 2 Sigma approach. And, since inception, we've had, generally speaking, we've had an up market, but we also have had periods like the last 2 months where the market is down. So like I said, if in 2025, if you put $5,000 into each of the 13 trades, you'd be sitting on a $2,500 profit right now, okay? And, the S&P is at the flat line for the year, and the NASDAQ and the Russell 2000 are both solidly underwater. So I like to think that the system works irrespective of market conditions.
Okay. Let's see. Juan says, how do the hedge funds manipulate the markets? that might be a pretty. You give us a Reader's Digest answer of that question.
Yeah. Well, I hear you, and I'll keep it referencing Citadel, right? So Citadel is because of their size, they'll have inside knowledge as to and because they're an order taker, right, and a market maker, they can see where the trends are moving in a particular stock, and because of the sheer weight of their money behind them, billions of dollars behind them, they can push the price of a stock by placing buy orders or sell orders. It's really that simple. If they want a stock to go down, they find the money to sell it, right? And that's it. And it may be because they have some complex option exposure on the other side of the equation. But it's the size that allows the manipulators to do what they do.
All right. Neil wants to know, how do your fundamentals compare with IBD?
Investor Business Daily, I would say that they're probably similar, although I can't really, I'm not intimately familiar. But you could theoretically, come up with the same factors that we're using and plug it into their database as well and see what comes out. If that's something you want to try, I wouldn't be averse to someone, checking it out. And again, the key is making sure you have the stock that is high rated and a stock that is desired by somebody else down the road. And we think we know what that looks like.
All right, last question. Actually, I might have to. Yeah, I'm kind of curious. This is my question, just because I'm curious.
Okay.
Do you use technicals too, or do you use primarily fundamentals?
Well, again, I think it's a bridge. The Bollinger Bands are a technical indicator.
Right. Okay. Yeah.
So, but it's both. It's the fundamentals and that specific technical, I do not use any of the other technicals that you all have available to you.
Do you also deal with commodities? Yogs wants to know.
Okay, so another good question, and there's a lot going on here. Right now, we are individual stock-based trading only. However, for our annual members, we've been offering some option trades that arise mainly during earnings season from time to time, that we can, we're kind of in the laboratory right now, where we could do futures, commodities, and options, as I said.
Okay, and then Yogs also wants to know, what do you look at to qualify as highly rated?
Okay, so the factors in the presentation that I mentioned were alpha and beta, earnings growth, revenue growth, margin expansion, analyst estimates, performance against earnings, like an earnings history track record of beating estimates. That's super important. A company that struggles to beat their estimates is not usually a stock that someone desires. It's that simple.
Okay, very good. And you, just to confirm, you don't do currencies.
No.
Okay, all right, very cool. Let me go ahead. Jamie, that's the end of the questions.
Okay.
Appreciate your time today. That was great. You did a good job. The links in the thing, tradethirsty.com/90. If you're in YouTube or go to webinar, you can see those. Thank you for all the questions, guys. And Jamie, thanks for your time. Appreciate it.
Jeff, thank you so much for hosting. I hope I left people with good information. And if anybody has questions, also, feel free to reach out to Trade Thirsty. They can get a hold of me.
All right. Very cool. Thanks, Jamie.
Okay. Take care.
Okay. Let me do this. Okay. I should make myself the presenter too. I'll show my screen. All right. That was great. Let's go ahead and I just want to talk a little bit about our sponsors for a second, and then I'm going to kind of do a little bit of a lesson on the IchiMoku indicator. So I'm up next. As we get started, I just want to say thank you to all of our individual sponsors again, the AAII, AAII.com, Traders Magazine, www.traders.com, great magazine, lots of good, really good information there. Of course, MetaStock and the tradersforum.com. So with all that being said, I'm going to read a little bit of a legal disclaimer. Well, let's see. Oh yeah, that's right. We're a little bit out of order here. Mr. Lewis, would you like to come in here, and would you like to help me give away a prize?
I would like that very much.
Okay, cool. As you saw, the presentation that's geared up next is the one with Steve Bigelow in there. But we did that yesterday, so don't worry, I'm not going to do that again. Although I could go through some of the patterns I didn't cover yesterday. We could talk for a while on that. But I do want to give away a little bit of a prize. Greg, it might be a good idea if we tell people if they're qualified to get a prize, how they can make sure they're qualified to get a prize, all that kind of good stuff.
Okay, so first of all, how the actual drawing works, because people are asking about that as well, is Jeff essentially takes a list of everyone that has registered for this event. Then he asks me to draw a random number, and he goes down the list, and that's how the winners are selected. However, how to get on that list is easy. Just go to metastock.com, click the banner on the top, and then that will take you to our MetaStock Traders Conference page. There you can review the schedule, check out all the stuff, and then register, and it takes about 2 seconds.
Very cool. Good job. Now, I'm going to give away some of Steve Bigelow's books. So, perfect. Steve Bigelow is a big friend of MetaStock, great technician, somebody that we love a lot. And so we do have some of his books that we're going to give away. He's got High Profit Candlestick Patterns. I've got that right here. We've got Eliminating Emotions by Steve Bigelow. 2 really good books. And then we've also got a mouse pad. Wonder if I can get a good shot of this right here. It's got all of the major patterns.
That's premium.
And look, I haven't even spilled coffee on this one.
No, not yet.
Not yet. The day's young. Yeah, watch, it'll happen a little bit later. I'll be grabbing my coffee or something. In any case, so those are all going to be delivered to you. As long as you've registered, you're going to be on this list, as Greg said. Greg, I just need a number. The maximum number, anything between 1 and 9,065 today.
Okay, that number will be, according to Google Random Number Generator, 6,737. 6737.
That is in the USA. James E. And with a Gmail address. So there's probably a few James E's on the list. Let me go ahead and make a note of that. I'm going to put you on the spot here.
Okay.
I want you to introduce me. Go.
That sounds delightful. I was just going to suggest maybe I should introduce you.
While you do that, I'm going to go ahead and make a note of this prize winner.
Oh, okay. Well, if anybody's watched, well, am I introducing you or not, young man?
Go for it.
Okay.
I'll shut up.
If you've been watching this event, or really any event we've done for the last ever, you must know our very own Jeff Gibby. He's been in at MetaStock for 26 years.
27.
27 years, longer than me, actually. I've been there for about 20 years. This is a good time to point out that the average time for employees at MetaStock is about 13, 14 years. So it's a great company to work for, and we really enjoy it. Jeff Gibby started, I think, in sales, and now he's currently the director of sales as well as business development, which means he's in charge of all sales as well as getting partners his team getting partners to partner with us in distributing MetaStock. He is a family man. Right now, you notice he's in his home because it's Saturday. And who wants to drive to the office on a Saturday? He loves dogs. He's been a personal friend of mine for years and years and years, and he's just a swell fella. And he knows a lot about trading and more about MetaStock. I would say he's in the top 3 in the world of knowledge on MetaStock. Yeah, did I miss anything?
Yes, but keep going. No, I'm just kidding. You did great.
And he's gotten, so I spent some 5 years in Japan, so I'm pretty good at saying things like IchiMoku. Jeff took a little more tutorial, but he's getting a lot better at it. And I'm very proud of the way now he pronounces his Japanese words.
That's too bad, because I really like offending your ears. All right. Very cool. Thank you for that, Greg.
Jeff, I'm going to bow out and break a leg.
All right, very cool. Let's see, we're doing okay on time. I appreciate that as an introduction. One of the things that I absolutely love are doing these events, and appreciate your being here. I want to say thank you to our sponsors again. They've been very valuable for us to be able to help host them. All of the speakers, I feel like we've had some technical hiccups and some reschedulings and that kind of stuff. But I feel like everybody that has done very well. We certainly really appreciate all the work that goes into putting this together, all the speakers, and you here for being here. I will do my best. If you have questions about kind of the topic or questions that are kind of even not related to the topic, feel free to chime them in. We try, and we've been doing pretty good at kind of keeping up and allocating enough time to properly answer questions. And usually, like with this presentation, when I start to talk a little bit about IchiMoku, it goes a little bit short anyway. So any questions that you have will very much help in terms of doing this. It doesn't go extremely short, and I'm not too worried about kind of not being able to talk for a few minutes. We could always give away more prizes or tell bad jokes or something. But I will start by saying, if you have a symbol that you want to look at, throw it in the chat. Because I don't kind of like to go in and kind of say, okay, well, here's some symbols that look really, really good historically. Really what I want to do today is kind of give you an idea of what IchiMoku method is, how it works, and kind of give you a really good feel or a boot camp on the IchiMoku method. So with that all being said, put a symbol in the chat. If not, I'll pick one. But let's go ahead and get started. So With this one, I do need to read a little bit of a legal disclaimer. It keeps our lawyer happy. Today's demonstration is designed to instruct you on MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse a purchase of a security, nor are we paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. So I do have, I see a symbol from Yogs and I see a symbol from Blue. So we'll go ahead and when we open those up, I'll use your symbols. So we've talked about MetaStock ad nauseum this week. I gotta go ahead and kind of just talk a little bit about 19 mostly. With 19, I can do a presentation that lasts about an hour and a half, 2 hours, about everything that just was included with 19. One of the things that I find really nice as somebody that's been extremely tenured at MetaStock, going on 27 years, almost 27 years right now, is the amount of changes that we've made recently. And if you haven't looked at 19, I would recommend you get it. You're going to notice if you're using a little bit of an older version that everything has been re-updated, that's a brand new container. I love the tab-based interfaces and that kind of stuff. And there's so many new things about 19 that it does take a long time to actually kind of go through them all. I'm not going to do that today. But if you haven't looked at it, you should. Definitely the things that we've been adding and the things that we've been changing in the last 18 and 19 and up to even before that, just the amount of stuff that we're making, the progress that we're making has been incredible. So I'm proud of that. We have, and I have said this a lot of times, MetaStock's been rated #1 in its price category by the readers of Stocks and Commodities magazine. So yeah, I've said that. I don't know. And just to kind of give you an idea of some of the things that are in 19 is new theme support, new charting workflows, the tab-based layouts, the fact that you can have multiple monitor support, you can put charts on any screen, you can have different layouts assigned to different screens, and all that can be remembered. Makes it a lot easier, a lot more modern. New charting styles, new drawing tools, and then what we're actually going to talk about is the new trading systems. So let me kind of go in here. In terms of the new trading systems that are actually put in 19, there's ETS 2.1, which was a system that was very popular. Was put together by John Ehlers, and I would recommend you play with that. A lot of people bought that as an add-on. It's a very, very popular add-on, and now it's just included in the program. I'm not going to talk about it today, though. If you want, though, there is information about it on our 19 videos. If you go to metastock.com/what's new, you can do that after the event if you want to watch even more stuff by us. That's a good place to find out kind of a whole thing of what's new. We also added the IchiMoku master system, which I feel works really well in kind of the catalog of systems that we've got. And I'll talk a little bit more about that as we get into it. I showed the gap identification system and the ability to scan systems yesterday, and that's really cool. And then the ARMA. My focus today is really going to be around the IchiMoku method. This used to be an add-on that we would sell. It was a popular add-on. People really like the IchiMoku method. There's a lot of people that teach how to use the IchiMoku method and kind of have advisory services around that. I'll have to call him back. So from a perspective of losing my train of thought, this was an add-on. It was very, very popular. I really, really liked it. And there's some things about it I really liked to know why I wanted to include it with MetaStock. One of the first systems that I very much initially fell in love with MetaStock when I started was a system called the Candlestick Expert Advisor. And I won't kind of go into a whole lot of detail on that, but I'm going to attach it to the chart just to kind of give you an idea of what it does. And there's like 300 systems in here, right? There's a few hundred. I don't know if 300 is the right number to give out, but there's several hundred systems that are in here. And all of them can kind of go in and kind of help you identify different stuff on the chart. Like, let me just get this candlesticks attached. We'll go ahead and click on OK. And you'll notice with this candlestick, this one is built into MetaStock. It goes in and it tells you there's an engulfing bowl here. Here's a rising window. You need like about 32 patterns. It's going to help identify on the chart. And even more than that, if I kind of go into the expert advisor, it'll explain the pattern to me. And for me, when I was brand new at MetaStock, I was like, wow, this is really cool. It can help me understand what candlesticks are. It can also help me understand what MACD is. It can also help me. And so with the work that Robert did, Robert Denman is the guy that designed it. What I really liked about it is it helps you understand what IchiMoku is, but it also helps you implement it. And I felt like it would work really well in our suite of tools, because so many experts are designed to kind of help you understand technical concepts, in that case like candlesticks. But aside from that, aside from the candlesticks, also MACD or trending indicators or Bollinger Bands. All of these are kind of built-in methods that kind of help you understand and identify opportunities on the chart. And testing works really well because you can test them and see what works and then learn about them. But the way that this was built, I thought it would work really well at MetaStock. So I called Robert. This would have been a few Christmases ago. And when we were getting 19 ready, actually, I think it was 2 Christmases ago. And I just said, hey, I want to include 19. I want to buy it from you. I want to make it available to everybody that's available, that uses MetaStock. And so this was included now with MetaStock 19. We bought it from him. So anybody that installs MetaStock, you'll have IchiMoku Master. I want to spend a little bit of time. I'm going to sit up a little bit. Posture. I want to spend a little bit of time explaining what IchiMoku is, what the indicators are, how you use them, and then I'll kind of go into kind of how that can be implemented on a chart. The gentleman that you see on the screen is a picture I could find on the internet of Goichi Hasada or IchiMoku Sanjin. Okay, IchiMoku Sanjin is kind of like, I guess, an AKA for him, and it roughly translates to what a man in the mountain says. I think I have some notes here. I don't, but let me tell you from memory exactly kind of who this is. And he developed his strategies. I believe he released them. He developed the IchiMoku method, which IchiMoku Kinkohui, I believe, and Greg can correct me if I'm wrong, roughly translates to one chart at an equilibrium at a glance chart. And IchiMoku Sanjin is just an AKA that he had. He developed this methodology over the course of about 60 years, released it, I believe it was in the 60s, to the public, and it's been in public domain ever since, okay? A very, very popular method. As I said, there's a lot of people that teach courses on how to run the IchiMoku method. What I'm going to do, what I'm going to spend the next, maybe 30, 40 minutes is actually kind of going through exactly all the indicators that are used as part of this, how they're calculated, and give you a rough idea of how they could be used. Okay. Again, if you have questions, let me know. Just type them in the chat, and we will go ahead and just talk about it. IchiMoku traditionally has a lot of uses to it. It can give you, there are 2 primary ways that you can use it to get buy and sell indicators. So as we go through, we'll kind of discuss this. There are a number of different ways in using the indicators that you can determine bullishness or bearishness. And we'll talk more about that as well. With the use of the Kumo or the cloud, you can use it to anticipate the future price direction, show support and resistance now and into the future, show stability of the trend, and help you anticipate where potential reversals are coming in. And because it helps you identify support and resistance at different levels, it can help you identify where stop losses would be. Okay, so let's kind of break down the indicators. I'll talk about how they're calculated, and we'll kind of go in and we'll look at a couple of these stocks that you guys have provided, and just kind of say, well, what are the indicators telling us, both now and with the chart data that we can see on the left. Okay, let's start with, here's the indicators. You've got the Tenkan-san. This is where Greg's ears might start to hurt. The Kijun-sen, The Senku span A and the Senku span B, the distance between those two indicators are what's called the cloud or the kumo. Kumo means cloud in Japanese. So if I ever say kumo cloud, I'm just saying cloud. You can tease me about it. The Chiku span, and then the other important indicator in there is that you want to reference is the close. Okay, we're going to start with at the top of these. So we're going to go through all of the indicators and kind of talk a little bit about how they're calculated. So going to the Tenkan-sen, okay, the Tenkan-sen, if I is in this illustration, is this pink, purple, we'll call it purple, this purple line. If I wanted to calculate the Tenkan-sen, what I would do is I would find the highest high value for the high for 9 days, and I'd find the lowest low value for the 9 days. I would add those together, divide it by 2, and it's going to give me that midpoint for the highest high plus the lowest low. 9 periods divided by 2. Okay, it's not a moving average, it's a midpoint. But I kind of to help me kind of conceptualize how I should be looking at this, I kind of look at it as in the same way that I would look at a short-term moving average. You know, if you're looking at a short-term moving average system, the idea is for kind of how you would interpret this are similar. Okay. To be clear, because every time I say that, people are like, it's not a moving average. It's not a moving average. But the ways that you can kind of look at it is this is your short-term midpoint. Okay. We're going to compare it to a bit of a longer-term midpoint. For the Kijun-san, which is the red line here, we're going to take the same calculation, but we're going to go 26 bars back. So we take the highest high value for 26 bars, the lowest low value for 26 bars, add those together, divided by 2, and that'll give us a midpoint. Okay, so the kind of the common sense logic that you use with 2 moving averages apply here too, right? You're looking at a shorter term midpoint and comparing it to a longer term midpoint. Okay, if, as we're looking at in this chart example here, the prices are generally rising, what you're going to have is you're going to have a Tenkan-sen value that is also rising, but it's also going to be above your Kijun-sen. Okay, and so explaining it that way in my head helps me understand, okay, this is what I'm looking at and this is how I evaluate it. If your Tenkan-sen is above your Kijun-sen, it's actually bullish, just as if you had a shorter term moving average, a longer above a medium term moving average, that would be bullish as well. So the concept's very, very similar. And the primary, one of the secondary buy signals for that is the cross. So if you have a Tenkan-sen cross above the Kijun-sen, that is actually the secondary buy signal. Okay, so just looking at that, let me kind of cross over into MetaStock here. And what I'm going to do is I'm going to just kind of open the charts here. We'll do a few of them. You know, we may not look at all of them. You know, again, this is just for illustrative purposes, but I'm going to go ahead and open up all of them. We've got TTM from Yogs. We've got HIMS from also Yogs. And then UNG. I just read the message from Mike in YouTube chat, and it's like, I'd like to see you. And I'm like, well, you should be able to. I think he wants to see you. All right, let's go ahead. And what I'm going to do to open up the IchiMoku template is I'm just going to kind of, this is a list of all of the templates that are here. And so I'm going to come down here, and I'm just going to type in, start to type in Ichi. Oops, it thinks I started with I. Okay. And I'm going to go, there's 2 in here. There's IchiMoku Advanced and IchiMoku. And the advanced one is a little bit beyond the demo today. So I'm going to just do the IchiMoku here. And I've got the 4 stocks that we're going to load in, all loaded up here. Let's go ahead and open up the chart. And this should put all of the indicators on the chart for me. Well, all the indicators for IchiMoku on the chart for me. And we'll just kind of analyze what we're doing. With you, we're very much sideways in this chart. You can kind of see with the cloud, it's been very, very flat. Right now we are bullish, and we could kind of, as we get through it, we can kind of do a score. But right now, it's just say U has been kind of a little bit sideways. We're at the end of a downtrend. We might be looking for that to kind of reverse. Let's kind of look at, but if we're looking at just this hard right edge, you've got your Tenkan-sen above your Kijun-sen, which would be bullish. Where that happened, you had the cross up right here. You'll notice that there's a little buy signal. That's because, as I said before, it's a secondary buy signal. Let me go to UNG. You can kind of see the same thing right now. Here is where the Tenkan-sen crossed above the Kijun-sen. Okay, that's bullish, and that issued a secondary buy signal. Okay, HIMS. Let's take a look at HIMS. Let me put in the correct symbol for HIMS. Here you can see the Tenkan-sen is right now above the Kijun-sen. It has been since right about here, and that is bullish. So you kind of get an idea of kind of how this is and how this works. If we're down below the Kijun-sen, as we are right here, that would be more bearish. Okay, so that's just one of the ways we're looking at bullish and bearishness, is the relationship. Where is the Tenkan-sen with the Kijun-sen? Okay, when that cross happens, as it did right here, that is a secondary buy signal. Okay, all right, let's go back to the chart. We'll talk about a couple more of the indicators, and let me know again if you have questions. I'm reading Greg's comment. Thank you, Greg. Okay, again, just to kind of recap, Tenkan-sen is above the Kijun-sen, that's bullish. If the Tenkan-sen is below the Kijun-sen, that's bearish. The cross indicates what I call a secondary buy signal. Okay, the primary is the cloud. We'll talk about the cloud now. So the cloud, as I kind of alluded to earlier, is also referred to as the Kumo, which means cloud in Japanese. It's a combination, or it's the space between two indicators, the Senku span A and the Senku span B. I need to fix this slide because it doesn't say Senku span B, but I think you'll catch along. Okay, the Senku span A and Senku span B are two calculations. The area between those two indicators are shaded, and that is what's referred to as the cloud. Okay, if I wanted to tell you how to calculate the Senku span A, I would take the Tenkan-sen A, or I'd take the Tenkan-sen, the Kijun-sen, I'd add those together, divide them by 2. And the reason this is actually plotted into the future is because it's projected into the future by 26 days. So if I take the value here of Senku span A and Senku span B, I added them together and put divided by 2, the plot that I would get is right here. It's this Senku span A, or this blue line. Okay. The Senku span B is actually the same calculation we were talking about before, except for I take 52 bars. So I take the highest high for 52 bars, the lowest low for 52 bars. I add those together, divide them by 2, plot those 26 bars into the future, and that gets me this green line, which is the Senku span B. Okay, I think it's easy. Okay, as I said, the distance between the Senku span A and the Senku span B is the Kumo. Okay, and there are a number of ways that we kind of use the cloud as or should use the cloud according to the way that Goicho Hasada did. I was trying to remember Goicho Hasada there. Okay, number one, if price is trading above the Kumo or the cloud, that's going to be bullish. So right here, where we kind of went from under the cloud to above the cloud, ever since that's been trading above the cloud, that's going to be bullish. Okay. Number two, if the Senku span A is above the Senku span B, Greg, you should maybe have held off on that compliment. I'm just going to say that. If the Senku span A is above the Senku span B, that's also bullish. Okay. And actually, when the Senku span A comes down below the Senku span B, as it does right here, that's actually called a Kumo twist when they change positions. Okay. And that's also when the Senku span A goes down below B, it's a bearish bearish Kumo twist. If it changes up above right here, as it does right here, it's a bullish. Okay. Now that's a lot of stuff. Okay. I want to restate it, and then I want to kind of look at some chart examples. Okay. So the first thing is when the price comes up above the Kumo, that's a primary buy signal. Okay. A lot of people, that's what they look for. They want to look for when that cross happens as an indication of when to buy. So if we're looking at that right here, you can kind of see that's where that primary buy signal came in. Okay. The other things that we'd look at is the relationship of the Kumo to price. So if I look at Kumo to price, as long as we're trading up above the cloud, that means that your Kumo is you're bullish in relationship to your Kumo. Okay, so as long as we're up above the cloud during this whole move up, that would be considered bullish. We're trading above the Kumo. Okay. If the Senkou span A is above the Senkou span B, that's also a bullish indication that the price is likely going to continue to rise. And we also treat this cloud as an indication of where future price might move. So if we're looking at this right now, we would anticipate, as long as we're trading above the cloud, that this cloud to act as support. Okay. Once we trade down below it, we would treat it like a normal resistance, and we would treat it like resistance. Juan asks what's the difference between IchiMoku and IchiMoku Advanced. There's actually, Robert put together an advanced version that looks at distance between the cloud and some other things. And there's a whole YouTube video on it. It has a little bit of more information that's in there. I'm not too familiar with it, one, because I don't use it extensively, but that's the difference. It has some bonus indicators that Robert used in his own trading. Okay, and if you want to learn more about that, there are trainings that are available on the website to help you use it, or on youtube.com/MetaStock. Okay, I think I covered everything so far. Okay, so there's a lot of ways we can look at the Kumo as trend bias. We can look at the price relationship to the Kumo to understand if we're bullish or bearish. We can look at, we want to understand that the Kumo acts as support or resistance. We want to look at the direction of the Kumo both now and into the future, and the Kumo twists are bullish or bearish. And that's a lot, but it's also pretty straightforward. And we do have, with the IchiMoku Master, a way to help you keep track of it. Okay, so let's kind of go in here again, and that does cover almost all of the indicators. We still have this one here, but let's just look at our HIMS example right here, and we can kind of identify kind of where the primary and secondary buy signals are, and kind of make assessments to where we're really bullish or extremely bullish and that kind of stuff. So again, we'll start with the Senkou span A and Senkou span B. We had a cross up above the Senkou span, a cross of the Senkou span A and B that happened right here. Also, when we crossed up above the cloud, so those are both bullish things. That's a primary and a secondary signal that are happening at the same time. In this area, we're trading above the Kumo, which is bullish, and you can see that we have a little bit of a trend ribbon to help you remind that. Okay, right here, we're also above the Kumo, so you can see that here. As we're trading below the Kumo, we would say that that is bearish. Okay, so it's all fairly well labeled here. The Kumo right here, let's just kind of take a focus on these last cluster of signals, I guess. If we're kind of evaluating this, we don't want to trade it, well, you can trade it whenever you want. I generally prefer to trade it after it's crossed up above the cloud, which is, so I'd be looking at it seriously here. But all of these crosses that we have above the TK are gonna, or all the TK crosses are stuff where we can do it, okay? While our TK is above the Kumo, you have green bars. That's just a reminder that that's bullish. And I think what I want to do is actually kind of help show you how you can use this to kind of help you remember all the conditions, because we've talked about most of them. So I'm going to go ahead. I'm going to go to the view. I'm going to go to expert commentary right now. And we'll just give that a second to load while I just up my thing. And by default, it's going to be right here at the very end of the chart is where it's going to be looking at. And so if we're looking at kind of the relationship here, let me see if I can just move this back to kind of where we got the buy signal. You see this little arrow on the chart that indicates that that's the day the commentary is looking at, okay? If I'm looking at it this day, let's say I ran a scan for stuff that was crossing above the signals, it's going to give me a kind of an explanation of what the IchiMoku is looking like. So here we've got the TK cross, that's the Teikens and Kinjinsen cross. That's going to give us a bullish there. If we had a price Kumo relationship, that's the relationship of the price and the cloud. That's also bullish because we just crossed up above it. If we look at the current Kumo direction, where we're at right up until the current time, that's also pointed up, which would be bullish. If we look at the future Kumo direction, that's also headed up, which is also bullish, okay? If we look at our Chikou span relationship to price, now Chikou span I haven't talked about yet, so I'm going to hold there. we'll come in. We'll talk a little bit more about the Chiku span, but you can kind of see how it's kind of helping you score all these things. Okay, there are probably about 8 things to keep track of right here. 1, 2, 3, 4, 5, 6, 7. There's exactly 7 things to keep track of here. And this is just kind of telling us, are these bullish, are these bearish? According to kind of the IchiMoku method, it's just a stock that's poised to kind of go up, okay? And it's kind of scoring that off for us, okay? Also down here, as you're learning through this, and this is why I think it worked really good in a MetaStock environment, if I'm looking to score all this stuff and I want to understand what's going on, just like with the candlestick expert where it was telling us what was happening, I can kind of scroll down here and it's going to kind of break these up for me. So right here it says the Tenkan-sen-Kijun-sen cross is the predominant signal, so the primary signal of the IchiMoku trading system, similar to a moving average, but instead it uses midpoints, The black part is kind of an overview, okay? It's what I told you, but abbreviated, simplified, and kind of just spelled out for you, okay? The blue part is what it sees on the chart. So you've got a neutral bullish TK cross inside the Kumo. However, the price is above the top of the Kumo. This qualifies as a valid entry signal. Note, observe the other existing conditions to help validate the strength and quality of the signal. Because it's a one chart at a glance, you want to kind of take into account all of the things. And then it goes on to talk about the close above the Kumo, in the Kumo, and what that means, and what it's currently doing, the most current Kumo direction. So it kind of does lay all of these things out, including the 2 indicators that I haven't talked about yet, which is the Chiku span and the close. So from a purpose of kind of helping you understand and remember, that's what I like about this. Because I've seen so many, over the years, I've seen people charging, you know, $5,000 for an IchiMoku class. And not only is this helpful for me to understand what's going on, it really lays it out for me. It helps me score it. If we come back up here, we get a scoring. And as we'll talk about when we go into scanning, it helps me implement it in the market. And for that reason, I felt it would work really, really well in the MetaStock toolbox. There's so many things in MetaStock that are built to help you understand what's going on, built to help you test to make sure that it works well on the stocks that you want to do, built to help you educate yourself. And then if it's something that you really want to implement, like the other couple hundred systems in MetaStock, you can go ahead and run scans for it. And I'll show you how those scans work in just a minute. But let me get a little bit back to the presentation real quick. So we talked about the Kumo, all of the uses of the Kumo, and hopefully that was understandable. There's really only 2 indicators that are left. You've got the Chiku span, which is right here on the chart. And that's today's closing price, but plotted 26 bars ago, okay? That's all it is. The other thing that's important is the close price. Where did the price close? And that's important for the IchiMoku method. We compare the close price to the cloud, but we also compare the close price to what it makes up the Chiku span. We compare where the price is to where it was 26 days ago, okay? So when we're using the Chiku span, I want to make sure I was using the right word for a Chiku span. So I was. Good job. We're looking at the relationship of where that is to the Kumo. If we're trading above the Kumo, if our Chiku span's above the Kumo, that also lends credence to the trend, where we're at in the trend. So in other words, if it's above the cloud and we're in a bullish trend, that means that our bullish trend is more stable. Okay. If it's down below the cloud and price is right now above the cloud, that means that it's not stable. If it's in the cloud, it's neutral. Okay. We're also looking at the price in relation to ship to where it was 26 days ago. Okay. So if we look at where that Chiku span is, and we compare it to the price of where it is 26 days ago, we want that to be above the price to lend credence to the fact that we're moving up in price. Okay. Yeah, I think I explained that pretty well. Okay, and we'll just kind of go back into the HIMS chart to kind of talk about kind of the way we would see that. So this right here is the Chiku span on the HIMS chart. If we look at, and I'm going to kind of zoom in just to give us a little bit of a better view here. I should have done this a little bit earlier. There's a lot of indicators and that kind of stuff. If I look at this bar where we could have scanned and got this entry signal here, if I'm kind of evaluating that, our Chiku span is actually going to be right about here. right? I'm guessing this is about 26 bars ago. We wouldn't have, since this is the current price, we wouldn't have a current value on the Chiku span right there. We'd be looking at it roughly probably right about here. But from that, I could make an assessment, okay, this is above the Kumo, that's also bullish, and it's above price because our price is moving up. Okay, so that's how we would use it in terms of validating trend. And you can see right here, actually our Chiku span in relationship to price is neutral, giving us a not trade not recommended. And our period since the last Kumo twist, remember that Kumo twist was here 14 bars ago. It was a bullish one and it happened about 14 bars ago. So it's basically tallying up all of these and telling us, okay, based on all of the conditions that Goichi Hosada talks about, this is bullish, 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 this is neutral, this is bullish. Okay, and it'll, regardless of the chart that you're looking at, it'll tally that up and kind of give you an idea of how it works. And if you want to get more information, if you want to remind yourself about the IchiMoku method, you can come down here and it'll explain all of those parameters that we made. I was reading Greg's comment. I need to not do that. Marina, it's good to see you here today. So I will reiterate that comment. So great add-on. It's just included as a bonus for everybody that has MetaStock 19, and a reason in and of itself to buy 19. Again, the reason I like it is it helps you understand a method that's very, very popular. I believe it was the 1960s that it was released to the public, and it's been in public use. Goichi Hosada developed it for up to, I think it was about 60 years. Now, I usually have that printed off, but you know, I like to be a little bit more precise. But when I'm using stuff from memory, I'll let you know. So, in any case, now of course I like the way that the scanning works in MetaStock. We've been talking about scanning, and one of the primary buy signals, again, if we just want to talk about, I'm kind of gonna play with this a little bit. I should just select it. Okay, one of the primary buy signals that we have for the IchiMoku, it seems like. All right, I'm gonna not touch it anymore. We've got the primary buy signal and the secondary buy signal. Those are the kind of primary things that would indicate that it's time to take a trade. Again, the primary is when we close up above the Kumo, and then the secondary is when we have that Tikusen Kinjusen cross. Okay, those are the two signals that you want to look for, and those are the ones that are built into the scan. And as I've said so many times, let's scan it. Let's do one. All right, I'm going to open up our Power Console here. I'm going to go to our Scanning tab, and I'm just going to right here search it for Ichi. Okay, there's only one scan in here. It's going to kind of consolidates everything into a single scan. I'm going to go ahead and run it. And actually, you can see the scan that I normally run every day is the CPS because it's already selected. And then let me just make sure we just run the one. Okay. Let's go ahead. What have I got selected here? I'm going to take that off. I'm going to do index, just some index constituents for the purpose of this. Of course, you can scan anything you want. I'm going to do the Dow Jones Industrial Average, the NASDAQ 100, and the S&P 500. Okay, I'm going to go ahead and start that exploration right now. I'm going to go ahead and drive this over, and it's going to go through all those stocks. In total, there's about 518 between the Dow, the NASDAQ, and the S&P 500. There's a lot of overlap, so it's going to go through all of those. And what it's going to reject is ones that don't have a primary entry signal or a primary exit or a secondary entry signal, and that's either long or short. So we'll have a little bit, I'll explain exactly how to see which one is which. I like the way Robert did it, but it does require, it's a little bit different than some of the ways we've done some of the other scans, okay? You'll notice it's rejecting about 90% of the stocks. So again, what I want to be able to do, regardless of the methodology that I use, and if you like IchiMoku, this is a really clean way to do IchiMoku. But regardless of the methodology I want to use, I always want to be able to just focus on the stocks that have an opportunity. So, or whatever markets you are. If we did just do a small market scan here, you can scan this against anything you want. And we have an optionables list. You can scan all the optionables. We have an ETF list. We have about 200-300 different markets around the world: India, London, Those are really big markets for us. Singapore, Hong Kong, anything that you're kind of interested in scanning, you can scan. You can just decide what markets you want. I think, well, I think there's hundreds of thousands of instruments you could actually access here. So, and right now we've got the scan up. What I want to do is actually just highlight over this signal right here and just remind myself what the 2s and 1s mean. So I'm cheating a little bit. The 2 means it's a long main signal, and then the 1 would be a re-entry. So any signals that are ejected from the Explorer or any of the that come on the exploration list are already going to be above the cloud. So it's either going to be because it's closing above the cloud, which would be a 1, or a -1 if it's closing down below, or it's going to be a 2 if it's closing up above, or if it's above and the TK crosses again. So let me kind of go in here, and I'm just going to sort it based on 2s and 1s. So again, the 2 means it's above the cloud and didn't cross above the cloud today or on the current bar if you're doing intraday, but it had that TK bullish cross. The Tenkan-sen came above the Kijun-sen. Okay, hopefully that's clear. The 1 is just it closed above the cloud, which are the kind of the ones that I like to kind of focus in on. Okay, we had talked about the different bullishness or bearishness of the actual kind of the conditions that can be either bullish or bearish, like is the close above the Kumo? What does the current Kumo look like? What is a future Kumo? What's a Chiku span in relationship to price and Kumo? What he's done in the exploration, I think, was brilliant. He's made it so that you can actually go in and see from the report exactly how those conditions line up. And he even gives a score. So if I want to focus on ones where it has 6 of the conditions true, in that case, I can see that CarMax is issuing a primary signal, and then it's giving a score of 6 right now. Okay, and I could just look at this in order of score. Okay, and I'm going to do that. I'm going to sort it based on the score. So right here we've got CME group is giving us a 6. That means you've got your TK cross, your closes above the Kumo. You can kind of see where everything lines up. You've got CarMax, it's giving a 6. You've got AFLAC, which is giving a 4. You've got Invitation Homes, and so it allows me to see based on bullishness what has a buy signal and how bullish it is. And then that way, if I want to focus on the 6s or the 5s or the 4s, I can. I don't even have to open up to the chart. In this case, I just want to focus on, we'll just open up the 6s, take a look at them briefly, and then I'll wrap up and move on to Marina. So let me go ahead and do that. We'll go ahead and kind of make those full screen. I think my scan might be a little funny. No, we're using the current day. Okay, well, we did close up above the cloud, so I think that's why we got this on a signal. If we came in here and looked at the expert advisor, the expert commentary, same with CME group, that came in down under the cloud and closed above it. But if we came in and looked at the expert commentary, everything's bullish. This is issuing a buy signal. We could look and go ahead and buy it. The other thing that I didn't mention is, and I didn't talk about that as a use for support, is that the cloud acts as support and resistance, and so does the Kijun-sen. So if I'm looking at areas to exit, Goichi Hosada didn't really identify key areas of exit, but some logical places for us to look at would be maybe the Kijun-sen, where it's at. The next pair is the Senku span A, which would be either the top of the cloud or the bottom of the cloud, or the Senku span B. So he does identify those as areas you could look to get out of if you start to challenge those areas as well. So there you go. That's kind of a nutshell of how it's all kind of put together, how it works. I think it works really well. It's a fairly complicated indicator, but it's not. It's actually pretty simple, as long as you kind of remember everything that goes on with it, okay, what the indicators are. And I think Robert did a really good job. And Robert Dedman is the guy that designed this. He's done a lot of system design for MetaStock over the years. And what's kind of funny is over the years, we've bought all of his products and included him in MetaStock because they're so good. In fact, all of the performance systems he wrote as well. And we bought that from him in 18. If you use any of the performance systems, those are creations that he created. He did a really good job with them. So this is just included with MetaStock 19. Again, here's kind of the list of things that it helps you do: buy and sell, bullishness or bearishness, future price direction, support and resistance now and in the future, trend now and in the future, identification of stops, if again you'd be using the indicators as stops, and the anticipation of potential reversals, primarily when that crosses up or down below the cloud. So there you go. How'd that go? Again, the expert advisor ties it all together for you. Does a really, really good job of pulling that together. We talked about scanning. We ran through a scan. You do have, this has been a question that's come up a lot. Can I test these ideas? And we include it with this system test. You can take basically any of these methodologies. You can use medium stops or loose stops. You can test it with tight stops. You can test it with just the future and current cloud directions. All of these are methods you can go in and say, how did this work? I'm interested in trading IBM. How did it work on IBM or Google or HIMS? HIMS has been something Yogs has brought up quite a bit this session. But yeah, you can go in and you can test these ideas. So you can see, okay, well, these are, you could even, with our tester, you have the ability to go in and say, I want to see how these methodologies perform against the whole S&P 500, like as an example, and then you could identify which ones work really well over the last couple of years with stocks. So I think our system tester is one of the better ones out there. So again, this is all included with 19. 19 was a massive upgrade. 18 was too. It's so nice to see kind of like all these changes that we've been able to implement over the last couple of versions, and ever since, you know, we got ourselves back as an independently held organization and can really ramp on the development. It's been nice to see just how far we've come. So we've got a long ways to go, and we're working really hard on kind of stuff we want to add, but man, we're making so much progress. I do want to thank all of the MetaStock users and those of you that have been using MetaStock for decades like me, those of you that helped vote for us. I'm going to go ahead and correct this slide right now, because it did come out in 32 years in a row. It's been voted the best software. So I'll go ahead and correct that now so I don't have to later. In any case, okay, let me talk a little bit about the pricing. We have two versions of MetaStock. We've got MetaStock RT, which is real time. It includes, Bobby did a demonstration on all the news and fundamentals that are available in MetaStock Zenith. He did a good job of that. It includes that product. And just to recap that product they spent $1 billion designing. It's backed by all of the Reuters news. It's got tons of fundamental macroeconomic data and of course news. A very institutional product that's included. The MetaStock with its scanning engine and the testing engine and the ability to go in and identify stocks, that's included. The white glove installation appointment is included. The data for that you need is included. All of that's only $265 a month. And if I compared that to a similar data feed like Bloomberg, you'd be looking at $2,200 a month. So it really is an institutional quality feed with a great software at a very affordable price, $265 a month. We also have our DC, MetaStock DC. I mentioned this a little bit earlier. MetaStock DC got a huge upgrade. If you would have used, and it was an upgrade that was free at the first of the year, but last year, if you would have been using MetaStock DC, it would update after the market closes. And you could run your scans after the market closes and all that kind of stuff. And it was very, very popular at that. The free upgrade that we released this year allows you to see a 15-minute delayed bar on most instruments and run a scan during the day. So you can see, even though you just see daily charts, you can actually go in and run a scan before the market closes or see what your positions are doing. And again, that was just a change we just implemented, and we didn't charge anything for that. So it's very, very cool, because for me, I could just run my scans and at any time during the day and just see what opportunities exist, see what the charts look like. It's great, $75 a month. You get MetaStock delayed data from Zenith. You also get market data. You also get, you don't get the news at that price point. There's no way we could make that work, but you do get MetaStock and all the technicals and all the stuff that's helped make MetaStock be rated #1 for 32 years in a row, and it's just 75 bucks. So both versions are in, we're going to invest time on you. We want it to work well for you. A lot of our employees, as Greg said earlier, have been with us for decades. I'm on 27 years. I love it here. I'm not going anywhere. A lot of our customers, also decades. I talked to customer number 83 the other day. It was pretty cool. So as part of your installation, we're going to give you a free white glove setup. We're going to have somebody sit down with you. They'll show you how. They'll make sure you understand how to do everything that you want to do in it. If it's running scans, if it's running IchiMoku, whatever you want to do, they can give you a really good tour of the software. They're going to sit down with you for up to 2 hours. Okay. They'll give you free unlimited support anytime you have questions. Our support desk is great. We keep more people in our support desk than we keep in sales and marketing put together. And that's just anytime you need them, you call them. They're in our Utah-based office with the rest of us, and they do a great job. In fact, we survey everybody, and it's not uncommon for them to get like 100% satisfactions for the whole week, every week. So it doesn't happen every week, but it happens consistently. So we're going to give you also the Unleash the Power of MetaStock, which gives you kind of walkthroughs and trainings on some of our favorite features in MetaStock, and you get that as well. We want to invest some time on you. We don't want to just have you subscribe and, oh yeah, okay. It wasn't that helpful for me. Let's go ahead and cancel. We want you to be a customer of ours for decades, like everybody else. So we're willing to invest some time in you and make sure you understand how to use everything, make sure it works for you. And I do feel one of the things that you get with MetaStock that you don't get with a lot of other people is that support. I think the people element is huge. With MetaStock, I think they do such a great job. So in any case, the offer that we're going to do is if you buy a month, we will give you the second and third month for free. I'm going to do some math for you. That means that for 25 bucks a month, you can be using MetaStock May, June, July till July 1st.
Hey, Jeff.
Right? Yes.
Sorry, the link on here, the link on the bottom, I don't think is correct. You might want to point that out.
Ooh, here, let me fix that.
It should be conf promo, which I put in the chat. Sorry to interrupt.
No, that's fine. There we go. Thank you for looking at that. It wasn't, let's see, okay, yeah. So I forgot where I was at, but you're gonna get all of that. If it's helpful for you, oh yeah, I was misquoting a date. June 1st. You'll run it till April, May. June 1st will be your last day. It'll be 25 bucks a month to try a software that's been rated #1 in its price category for 32 years straight. So you can do that at 800-882-3040, metastock.com/sales-chat, metastock.com/conf-promo. And there you go. I'd recommend you try it. I run scans every day. I don't think I'd be able to trade as well as I do because there's no way I'm looking at that many stocks every day. I don't have the time. And if I did, I don't know if I'd have the energy to work through them all. So in that case, 800-882-3040, metastock.com/sales-chat, or metastock.com/conf-promo. All of those will get that to you. So, oh yeah, I was going, where's my next slide? It's a different PowerPoint. It was all together. All right. There you go. I think we can, okay. We're gonna get to where I need to be in this PowerPoint. We did have some schedule changes, so this is what I was originally gonna talk about, which I did yesterday. All right, let's go here. All right, Greg, we have a time for a prize. I want to mention the Traders Forum. You can find the Traders Forum at www.thetradersforum.com. It's a community site that is officially a partner of MetaStock. We've been working on it. We do a couple sessions a week. We didn't do one this week, but last week we did one, a 101 on what Dow theory is and the 6 constituents of it. We have an active group of people that like to get in there and share trading ideas and why they're trading them. We've got a collection of all kinds of really good training that's up there. We have special guests. We had Marina in not too long ago. We did like a little bit of an interview with her, like a little podcast. It was pretty fun. And we do that once a week as well. So it's a free site. You can join at thetradersforum.com and all of that stuff's available. We also do have a little bit of a premium section that has a growing collection of training up there, and you can get involved in that as well. I'd recommend it. But www.thetradersforum.com. Gregory, let's do a prize.
Absolutely, let's go. And Marina's here too. It's a party. Let's give some stuff away real quick.
All right, let me go to my prize list here. Let's see what we got here. Hey, Marina, you look great today.
Thank you.
Maybe I'll have Marina help me do a prize since she's on here.
Sure.
I'm absolutely thrilled to bow out and let our
You can stay around too.
presenter do that. Now I just need to find the button to get that the heck out of here. Okay, break a leg, you guys.
Greg, you don't have to leave, but you can.
I'm never really gone, Jeff. I'm always here.
Yeah, me too. Especially
the voice
this
from
week.
above.
We've left our desk. Okay, we're going to give away a prize, Marina. We're going to give a Dave Landry's 3-month core trading service. It's a $291 value based on his current pricing, and it includes everything that's in his gold subscription plus some more benefits. So I have one of those that we're going to give away. Now, we've said this a little bit, but if you're watching us on YouTube and you want to be eligible for prizes, all you need to do is register. There's a pinned link up above the right-hand corner over there somewhere. Just click on that, fill out a registration form, and you will be on the list. What I'm going to have is I'm going to come over to my list, so we know that it's a Dave Landry prize. And then Marina, what I'm going to have you do, are you pretty good at just picking a random number? That's what I need you to do.
I can do that.
Okay. I need you any number between 1 and 9,065.
Oh my goodness. 5453.
Okay. Andre K with a Yahoo address. So I'm going to say this again real quick. If you get an email from me next week and it says you won a prize, I'm not scamming you. I'm not trying to fish for details, that kind of stuff. The sad thing is we get a lot of unclaimed prizes, and that makes me sad. But I'm not going to chase you around for a whole bunch of time. I just have too much to do. So if you get an email saying, hey, you won a prize, and I need your address so I can send it to you or something like that, answer that email so that you can get your prize. And if it's me asking for bank account details, somebody spoofed my email address. I won't ask for those by email. Fair enough? All right, Marina, let's get you going. Marina does the trader check. She does a great job. She does a lot of price action. She does a trading boot camp that she's going to talk a lot about today. Marina, what else should I say about you? Help me do my job.
I'm not sure, but I do want to say about the white glove service, because I just had it done, and it really is as great as Jeff says it, and actually better. I was very, very impressed with the customer service. It was
we have some partners through it too, and they're like, "You do this for everybody?" So
yeah, it was phenomenal.
Speaking of phenomenal,
very impressed.
Marina is phenomenal, and I'm going to get out of her way. It's your turn, Marina.
It's turn. Well, thank you. Hi, everybody. Thank you so much for being here. This is one of my favorite places to be. And you know, it's funny, Jeff, you keep on like saying, how long have we been doing this together? When it used to say 25 years. So now it's 32 years. That means 7 years we've been doing these together.
And it doesn't feel like it's been that long.
Not at all. At all. But I can't believe we're already in March 2025. So there you go. COVID was 5 years ago, which is just mind blowing. I feel like COVID just happened.
I agree.
So
completely. Yeah.
Crazy. Okay, let me set myself up. If you could please give me the access to the questions, that would be super great.
Oh yeah, I can absolutely do that. Let me do that right now.
Thank you. All right, and I'm actually I'm distracting myself. I keep on seeing only myself. So let me remove that. All right, cool. Now I get to see the screen and the questions, and I love questions, people. So please, please, please send them your way. The whole point of these presentations, these live events, is not so much for me to just talk. It's actually, I really want you to get something that will be able to be actionable for you, right? For you to be able to take it and really, really do something with it. So I always say day trading is not a spectator sport. So life should not be a spectator sport. What does that mean? It means get interactive. Ask, no matter the question you guys have, it is not a bad question. There's no such thing as bad questions or dumb questions, right? Because if you have that question, chances are someone else does, and they might not even know they had that question until you asked that question. Actually, one of my favorite things that I've been saying probably for over a year is, I don't know what I don't know. So we are always learning, right? Like that's the coolest thing of all. So remember, you don't know what you don't know. And sometimes people will ask a question that you didn't know. And all of a sudden you're like, wow, I want to know that too. So let's ask away. Okay, let me set myself up here. And this is me. I am Marina, the Trader Chick. Today I want to talk about some of the most important things that we tend to overlook, or we tend to kind of jump in front of or leave them behind. And that's usually the foundation, the understanding of the markets, understanding what day trading is, investing, there, even the trading lingo. There's just so many things sometimes that we feel that we are kind of lost in the weeds or aren't fully understanding what's going on, only to realize that it was just the basics. And a lot of times we get too excited and we just jump through that without doing and realizing that the basics is what holds us together, right? It's what keeps us strong. It's those pillars that when you are a bit confused, they are there to hold you. It's literally like when you jump into the car today, you definitely forgot that at one point you did not have the basics, the automated understanding that you had today, right? Like when you first sat down into the driver's seat, you probably had to figure out where was the seat belt, where is the gear shift, where is the clutch, where is the brake, where is the accelerator. Today we take it for granted. But if you did not know those basics, if you could not fall back on those basics, are you going to be able to hit the brake if there's a car coming at you if you don't know where the brake is? Chances are no. So it's the same thing for day trading. A lot of the times we end up losing or making bad decisions in the markets is simply because we don't have the basics. So that's exactly what I'm going to be focusing on today. And that I can guarantee you, that you will be able to go up to the next level in your trading or even investing, whatever that it is that you are doing. But before we do that, I want to just do a really quick intro and fun who I am, because a lot of times we forget that we are people. We bring our experiences to the charts. When we sit in front of our monitors, we are not robots, right? We come with filters and understanding, and usually it's what life brought us to. So I want to just give you a little bit of who I am, and then this allows you to think of who you are on a different level as well. And that's really the goal, right? For you to really try to get in touch with who you are and why you are seeing the market as you are seeing. So I am Marina, the Trader Chick. I am an expat. I'm now living in Barcelona, Spain. We used to live, I've been an expat now for over 22 years. And before I moved to Spain with my family, we lived in Guatemala for 14 years and Costa Rica for 7 years. So I've been technically an expat now for over 20 some years, 22 years. And it's probably the best decision of my life, the fact that my kids were able to explore and experience living in 3 or 4 different countries. It's been fantastic, right? And before I became a day trader, I was actually a fitness instructor. So why do I say this? Why does that matter? Number one is because a lot of people have this myth that you have to be a math whiz, you have to have an economics background, a financial background, a software background, an engineer. No, I was a fitness instructor, literally. I was actually one of the very first spin and Pilates instructors ever in Manhattan. So that also shows you my age a little bit. And the cool thing about day trading, you can do it from anywhere in the world. And that is something that is really important for my lifestyle, because not only do we move around a lot, but I travel a lot. I travel at least 3 to 4 months out of the year. And as much as I would love to be one of those trust fund babies that I could just, access that, I do work. And what do? You could day trade from anywhere in the world. That's the beauty of it all. So before I start the presentation, I know that we have a limited amount of time. So you could go here and get the whole presentation for free. So you could then go into the replay and check it out. Go to makingofadaytrader.com. makingofadaytrader.com. If you aren't able to open it, what happens is Google is always doing some sort of, I don't even know, one of those issues. You need to remove the S from the HTTP, okay? And then you'll be able to access it immediately. makingofadaytrader.com. All right, guys, what in the world is day trading? Why is it not investing? So if you could get anything from my presentation, I want this to be one of the most important components. I always tell my kids, no matter what you do, no matter if it's a class, if it's a presentation, if it's a show, if it's a book, if you could get one thing that you could implement, you have already gotten so much more. So if this is the one thing, even better. What is this one thing? Unlike investing, with day trading, you do not want to diversify. So I'm going to give you this example. Imagine your child or a child comes over to you and says, hey, I want to learn how to play a musical instrument. And you're like, awesome, which one? And the kid goes to you, well, I want to learn how to play the piano, the violin, the drums, and the guitar. And you're like, but they're all so different. They are 4 incredibly different instruments. You need to choose the one. You need to choose one instrument and master that instrument. And then you could, if you decide, move on to the next. But until then, you're not going to learn anything, right? Another example is, we all know who Liberace is, right? Love him, hate him. I don't care what your judgment of him is. The bottom line is he was an absolute master at the piano. I can guarantee if he picked up the guitar or the flute, he'd probably be pretty good. He's just musically inclined, but he stuck to what was really good. Find that one, guys. You don't want to diversify. I cannot even tell you the amount of times that I have people coming to me who become my students, and they're like, okay, I want to be able to trade crypto, equities, futures. And I'm like, no, you're not going to be able to do any of those well. Let's stick to the one. And that, it's funny enough, they end up sticking to one, and then they never go to more. Because why? They're doing really well. You don't want to spend your whole day in front of the charts. So they're done within a couple of hours, and then they get to enjoy the full day. All right. The other thing, the other big difference with investors versus traders is that when investors invest in companies, they don't truly care that much about the ups and downs in the overall, right? For instance, if you're going to be investing in Apple, chances are, if they're going to be coming out with another iPhone, you want to stick it out. You know that it's going to be a good thing, or whatever they're coming out with. Day trading, on the other hand, we don't care if the market is going up or down, because we can profit from either one, and we definitely don't care what's happening in 3 months, right? Because we are only looking at the technical analysis right there in front of us that day. So that is the main difference. All right, now I want to bust some myths, because myths are literally misconceptions, limiting beliefs. And a lot of times when we have these misconceptions and limiting beliefs, you know what happens? They just become blocks. And those blocks usually hold us back. So today we're going to be busting some of those blocks so that you guys could just go straight through and not worry about them. First and foremost, the biggest one is that day trading is gambling, because we're constantly hearing the statistic that 98% of quote unquote traders fail. Well, let's talk about those 98%. Imagine you or somebody you know wants to be a pilot. All right. And let's pretend your older child decides they want to be a pilot. And then they're like, you know what? I want to become a pilot. I already rented a plane. Let's go. I'm going to take you up in the plane. You're like, oh my God, no, that's like a suicide mission. Because chances are they have no idea how to fly a plane. That's why it's understandable that You would go to pilot school, you would you would do simulation hours, then you would have many hours with, I guess, an instructor, right? Because otherwise, if you say, I want to be a pilot, and in the same breath say, I've already got a plane, let's go, that is gambling, right? That is so risky. But if you heard, wait, he went to pilot school, he did all his hours, you took the risk out. Same thing goes for day trading. You don't want to just sit there and throw your money. I call it actually donating your money to the market. You want to actually have a system. You want to have a strategy, right? That's how that truly works. The other massive, massive misconception is that you need $25,000 to get started. That is such a lie. That is a lie. Why is that a lie? Because today you can start with very small accounts. This predominantly is focused on, when they tell you $25,000, it means that they are also, the brokers, that's who they are offering you a margin account. I will get to the margin account because margin accounts should be illegal. So I will talk to you about that in just a minute. So that is the calculator, because technical analysis has nothing to do with math. Anyone can do it. Oh, and I love this, that it's stressful and chaotic, that it has to be stressful and chaotic, right? That's how we see it in the movies, and whenever we hear about it, right, we look at, this is what they're showing us. This is so unsustainable. There is not a single human in the world that could sustain anything like this for maybe more than a month or two, and I think that's even pushing the limit, right? I have one chart. I have my laptop, and that is it. I don't even have a desktop. Guys, you do not need this. This is horrible. This is analysis paralysis. This is ulcer inducing. You do not want to have anything like this. This is not true. You do not need this. Okay. And the other thing is that you need to buy the latest algorithm, the latest software. If you have one really good, strong platform like MetaStocks, you don't need much else, really. Like, these good, strong softwares, they come with so much already included in there. You do not need to be, it's literally called the shiny object syndrome. You do not want to be running after the next shiny object, okay? That is dangerous. The other thing is that you are obsessed with the research and the news. I have, in the beginning, when people come to me, especially equity traders that sign up with me, they're like, oh, I wake up at 4 in the morning, I sit and I do all this research, and then I'm on in my charts all day, and then I research after. It's horrible. Again, completely non-sustainable. Look, guys, the majority of the research is usually, the majority of the news, I should say, is usually, I call them telenovelas, right? Because a lot of times they have absolutely nothing to do with the actual stock. Just stick to the technical analysis, and that's all you will need. The least market research you do, to be honest with you, the better, especially for day trading. Maybe if you're investing, that's a whole other thing. You do want to know what products they're coming out with, what the investments they're doing. That is a little bit different. But on a short term, you don't need to know that. Does not make a difference at all. And this is a biggie. This is a biggie because a lot of, especially beginner, amateur, novice traders, they have this notion that you need to be in and out of trades all the time. And interestingly enough, this is another syndrome. There's many syndromes. This is another one. It's called trigger happiness. Okay. I'll be honest, I had done it myself. I remember in the beginning, I was going through like 40 trades in a 2-hour session. I mean, it was crazy. It didn't matter if I ended up winning because I was always eaten alive on the commissions. Today, a pro trader and being around many pro traders, I actually kind of, I compare them to big game hunters. Why? Because if you think of a big game hunter, when they go for their big game, are they going to be shooting like a prairie dog or a field mouse or even a large spider? No, they don't want to waste that energy. They are sitting there waiting for the big game. Pro traders go for the big moves, right? And that usually happens because they have a very distinct, very trusting strategy that they fall back on. And honestly, most pro traders, they take maybe between 1 to 3 trades per day because it's high probability, high profit. Boom. That's what it is. Because the most radical way is usually to trade conservatively. Okay. And normally the smaller profits daily is what brings you those big profits yearly. When you make those big aggressive moves or you're trigger happy, you end up losing more. You know, a lot of people don't talk about that, but just you want to be consistent. And the other big thing is I personally coined this term, FOMAT. I know that you guys have heard of FOMO, fear of missing out. I have FOMAT, fear of missing a trade. What does that mean? Literally that. I cannot even tell you the amount of times, like when we're sitting in live chat rooms, people are like, oh my goodness, there's a trade. And then they start to chase that trade. They, of course, get in too late. By the time they get in too late, the trade already turns and it becomes a disaster, right? Here's the thing, guys. I'm going to give you something for reals. There's always another trade coming.
Hey, Marina, let's see. I lost your audio.
I did too, Jeff. I was just about to call you. I wasn't sure if it was on my end or hers, but we are losing Marina. She's been going in and out for a little bit.
Okay, let's see. Well, unfortunately, she doesn't appear to be coming back.
Well, I can say while we're trying to get her back online, I also have FOMAT, like every day.
Hello. Okay. All right.
I still see her screen, and I still see that she is logged in.
Right.
Marina, if you can hear us, sorry everyone for this interruption. We seem to be having a little technical glitch with Marina Villatoro. She was just in the middle of her presentation, and we just lost audio. We appear still to have video, but I'm not sure if it's just frozen there or if she just hasn't advanced to the next slide. Anyway, Jeff, you want to maybe give her a call on your cell because I don't think she can hear us.
I'm working on it right now.
While we're working on this, we'd like to remind everybody if they want to see a schedule of today's presenters, they can go to metastock.com/traders-conference. There you can go ahead and see everyone that's speaking. This is the final day of a 6-day event, and we have about 4 or 5 speakers left this afternoon. Coming up next, I guess I can share that with you while I'm not going to take the view away from Marina because I don't want to further complicate the issue. But
she's completely offline, so like she's lost her internet. So
okay.
Go ahead and take the view. I'm going to see what kind of I'm going to get in touch with her. So
all right, I'll go ahead and
handle the entertainment section though.
Yeah, I'll go get my tap shoes and we can get going on here. Give me just a second to pull up the right window and I'll share my screen. No, that's not the one. Just another moment. Again, folks, we apologize. We seem to be having a little technical issue. We're trying to get Marina Villatoro back online. And while we were trying to do that, I thought I'd share a few things with you. If I could get my computer to work right. I wasn't prepared to do this, so I beg your pardon. All right, let's see if I can share that real quick.
You guys hear me?
Oh, I can hear you now, Marina. Yeah.
Okay, sorry. I guess my internet went. That was so weird.
Yeah, no, I was about to call you.
Again?
So yeah, welcome back.
Yeah.
Thanks. So are you able to see my chart?
Right
I mean,
now,
my screen.
I see FOMAT, fear of missing a trade. I'm not sure if that's the current slide you're on, but that's
just
what we're
from
seeing.
before she logged
No,
off.
it got stuck, I think.
Okay, but now
There we
I
go.
just need the control back to you, Marina.
Awesome. Thank you so much.
Okay, now I see
Now we
your
can see it again.
screen again.
Okay, yay. I don't know how much you guys heard.
That's about where you left off, Marina, where we heard you were talking about fear of missing a trade.
Okay, cool. Thanks. All right, guys. So I'm going to move on for the big stuff because as I mentioned earlier, if we could get the one thing out of this whole presentation is you want to not diversify. You want to be able to really focus on one specific market. What we actually even call in the markets are instruments, right? Because once you master that market or that instrument, then is when you truly become a real trader, and then you could diversify if you want. But first, start to truly specialize in it, right? And master it. Okay, so the real question is, what is there to trade? Look, there are 5 different markets, and within the 5 markets, you want to get in even deeper. So let's just do a really quick recount of the different markets. Forex. All right, what is Forex? We all know what Forex is. It's foreign exchange, right? It's currencies, it's pairs. Usually it's, one country, 2 different countries per pair. And obviously the big ones that we know of is US versus the euro or the yen or even Australian. But the thing is, you only want to do maybe 1 or 2 pairs. Why? Because even though it's currencies, it's really not, right? It goes down to more of diplomacy. What is going on with one leader versus the other leader? And sometimes you have no idea what goes on behind closed doors until it explodes in our faces, right? And that affects the currency. So that is actually why you want to really be on top of it versus you want to be on top of each currency pair that you are trading, right? So the least amount that you trade, the more specified, the more of an expert you become in that. Equities. I love it when I ask people, hey, what should I trade? What do I trade? And they tell me, oh, equities. And I'm like, well, there's like 5,000 or 6,000 equities alone on the US market, just in the US alone. So obviously you cannot possibly trade them all. So when I hear people say equities or stocks, I know that they are struggling. Why? Because a professional would be like, well, I do pharmaceuticals or tech or entertainment sector, or I only trade the big ones, Tesla, Meta, Microsoft, whatever, Apple. Why? Because they are such high volume, high volatility stocks and companies that they are fun to work with, right? So you don't want to do too many because they also do different things. So you really want to watch the ones, and you want to, again, get pretty into it. Or index funds, right? You could do index ETFs as well, or small caps, big caps, but you want to get specified, okay? Then futures, another one. Oh, I trade futures, I trade commodities. Really? So are you doing wheat, gold, crude, and the E-minis? Because they are 4 different, super uniquely different markets that you cannot possibly do them all. I personally love the E-mini. That's the one I really gave my soul, heart and soul to, because I love it. It moves easily and fun, and it's on the futures market. It's the index of the S&P 500. So again, if you're going to do futures, which future are you going to focus on? And do that one. And options. A lot of people are into options, but then they're also into equities and crypto and futures. Well, again, which ones do you want to do? And I mentioned crypto because obviously we've seen crypto, especially in the past couple of weeks, months, I should say, go completely bonkers, right? Up and down, up and down. Crypto could be super fun, but again, there's like 6,000 altcoins, and then there's these projects. Choose your cryptos, guys, and focus on them, okay? And one very big tip, Do not ever leverage. And that's gonna bring me to the margin account. Don't leverage. And crypto is the last market you ever want to leverage. I don't know if you have seen how erratic it is, but if you are leveraging, boom, you could be stopped out in split seconds, and then it could go straight to your price target. But by then you've already lost it all and owe a lot of money. So now I'm going to go into the margin. Remember I mentioned margin accounts should be illegal. I call margin accounts loan sharking accounts. What is a margin account? First, we need to understand brokers. A broker, you cannot avoid a broker. There's just no possible way to avoid a broker. So whoever is going to sit here and think that they can avoid that, it's not possible, right? A broker is that salesman. When you go into a store to buy jeans, the person that you hand those jeans over who charges in the cash register, that's kind of like what a broker is, right? So we just have to go with them. It's very important back to the what market are you going to trade, because there are many different brokers, right? There are many specialized brokers. If you want to be a futures trader, do you really want to go with a crypto exchange or an equities broker? No, even if they say they have some, they charge you very high commissions, and that is not their specialty. So they probably will also charge you a lot for the feed. I'm going to explain those things a little bit more, but you want to know exactly what you want to trade before you go for the broker, right? You cannot go and buy a screwdriver in a lingerie shop, right? It's literally going to buy crypto in a futures broker. They don't, it's just not going to happen. And if it does, it's really bad sale, right? You're wondering what's going on here. What is a margin account? Brokers tell you all these different quote unquote perks. Perk of a margin account, there is none. So what is a margin account? Literally, a broker is telling you that they are going to lend you money. So not only are you going to buy with the money that you have in the broker account, but now you're also borrowing money to buy more uncertainties. So if you lose, it doesn't matter. You still have to pay them back, and now you have to pay them back with interest. There is no reason why you should be borrowing money to buy any kind of markets. None. There's none. You just want to have the money that you can afford to work with or lose. And actually, what we call it is play money, because in the beginning, that's what it's going to be. You need to have money that you are unemotionally attached to. All right. That's the only way that you will become a successful trader. All right, understanding commissions and live feeds. So if you are with a broker that is equities, but you're buying crypto, guess what? They are going to charge you outrageous commissions. Why? Because they have to go to the broker that deals with crypto. So they just become a middleman even more. So you want to go to the direct ones, right? That helps cut out massive commissions, probably. In some places, some brokers, they don't even have commissions. Like, for instance, I have a Charles Schwab account. I can go crazy with my equities. I don't have to pay a penny for commissions. So you want to be in the right place, right, to do those things. And now feed. If you want to be a trader, a day trader, do you really want to be on delayed feed? No, you want to be in real time. So you need to pay for that. And that's okay, because that's just part of the business. You need to have real feed. I actually call feed the gasoline that drives your car. Okay, without it, you can't do anything. And it's really important to have the proper vehicle. And what is that vehicle? It is the chart, the platform that you are using. You cannot be a real professional if you do not have one of these. It's literally like if you want to be a Formula One driver and you show up in a minivan, right? It's not going to ever happen. So you need to have the proper software and the platform. And that is where all you need to really focus on. All right. So look, everything in this world, regardless of what we do, it doesn't matter if you are a kindergarten teacher, a trauma surgeon, a rock climber, or a day trader, there is a lingo that you are gonna understand for what you are doing, right? It's just how it goes. What amazes me is the amount of people that go and donate their money to the markets, and they don't even understand the basic lingo. They don't know what a buy or a sell is. And we're not even talking about the other basic language. So I want to just go through some really quick lingo, because that alone is going to help you so much right away. All right, intraday trading. It's literally being in and out of all your positions in the same day. That's it. It's really that simple. Why does that matter? Because if you are a long-term investor, are you going to be looking at a chart that is a 1 or a 3-minute chart? No. But if you are a day trader, are you going to be looking at a 1 week or a month chart? No. So when you know what you are doing, you are also going to be looking at the correct time frame. Because if you're not in the right time frame, you're not going to be doing a successful job. All right, bull market. When you hear bull market, it literally just means the market is going up. Bear market, the market is just going down. It's not negative, it's not positive. There's no reason to, get all emotional about it. It's just the facts. And actually, day traders make more money on the down than they do on the up. So it could be a positive thing. And there's trends. We all know that there's trends, right? We know that there's two for sure, which is the up and the downward trend. But I have to tell you that to be successful, you need to know what the sideways trend is, because usually that's where the majority of the money gets lost. And once you understand what the sideways market is, you will be able to not only stay out of bad trades, but you're going to be able to understand when the good trades are happening. All right, this is really important. We all know about the risk management, right? We all know that you need to put in a stop loss. However, it's just as important to have a profit target. Why? First of all, ego, greed, these are the heavy hitters that come and attack our minds. So if you have a profit target in place and all of a sudden your ego or your greed takes over and tells you, oh my goodness, it's going to continue, and you remove your profit target, of course the trade turns and then it stops you out. You have to have that profit target. You need to be able to just take out and not worry if it continues on further, because you are the winner here. And the other thing is the risk management. We all know we need to do it. We all heard of it. We all know that we have, this is a certain amount of money that I want to risk. But the amount of times that we put in these imaginary mental stops is terrible. It's literally like putting in an imaginary or a mental seatbelt in the car, saying that you're going to put the mental seatbelt on your baby, and when you get into an accident, thinking that you're going to save them. It's never going to happen, right? You need to buckle them in. You need to put in that risk management and the profit target and stay out. And again, usually with a very good chart, you could do that right from the interface. Indicators. I personally only use 2 indicators, but again, the indicators are on with the charting platform that you are going to have. So before you go and spend hundreds of thousands on indicators, see what is available and see what is available directly with your charting software. Okay? And like I said before, the trending markets, guys, if you don't know what a sideways market is, chances are you are losing all your money to the sideways market. So you really want to understand it. All right. Now, what is buying? What is buying? Going long, right? A lot of people don't even know that. So buying long is super simple. It's literally you are entering low, exiting high, and taking the profit in between. You are buying at a low price target price and exiting at a high price. Boom. That is buying, going long. Selling, going short, shorting the market, whatever you want to call it. That is literally you are entering high, exiting low, taking the profit in between. Super easy to understand. You do not need to put any emotional weight towards it. This is it. If your technical analysis is telling you to enter here and then exit there on a sell, on a short, on a downward trend, that's what you do, because that's what we do. The other very important thing to understand, and this is really what decides between an amateur trader and a pro trader, is entering on a market entry or putting in a limit order, meaning you are telling the market where you want to be filled. Because when you enter a market entry, you automatically are telling the market that you don't have any idea what you're doing. Because what it looks like is like, oh, wait, this looks really good. I'm going to go here. So the market knows that you are an amateur and it finds you. I bet you guys didn't know that. It's called slippage. So for instance, if you want to enter and you just put it in at a market entry, it usually gives you 20% less of what you have wanted to, where you have wanted to enter, and the same goes for when you want to exit. Okay, so you need to be putting in your price action, exactly where you want to enter, your limit order, your order weighting, and the same goes for your stop limit. You want to tell the market what you are risking. You do not want to market exit, because again, you'll end up losing 20 to 25% more. That's called slippage. To avoid that, you just have to put them in. And technical analysis, guys, if you don't have technical analysis, then you're really not going to know what you're doing. With technical analysis is literally showing you, you know what technical analysis is when you get in the car and you go on a road and you have the lanes drawn out for you, you have the red lights, the green lights. That is technically technical analysis for driving, right? It keeps you in order. You have a strategy. You know where to drive, which side to drive on. You know when to stop. You know when to go. That's technical analysis of the markets. Okay, so what is our technical analysis? I'm just going to give you 4 super basic ones, but they are, to me, they changed my entire trading for the better. Resistance and support areas. You need to first of all draw these in. And again, going back to the platform that you're on, they all have drawing tools. Even if it's just a line, you need to draw them in. So what's a resistance area? It's when the market is going up and all of a sudden starts to hit a ceiling. It hits it over and over and over again. That is an area that the market is respecting. You need to draw that in. And the support area, it's a downward trend, boom, and it starts to hit a floor. That's the support area. You need to draw that in. And my favorite are reversal patterns. I personally think they are the telltale signs. This is usually the double bottoms, triple bottoms, double tops, triple tops, head and shoulders. These are my favorites. Divergence. What is a divergence? It's super simple. And to me, divergence is my holy grail. I do not do anything without divergence. And it has been 99% accurate for me, which is amazing. So what is divergence? As you can see here, the price action is going in one direction, and I personally use the MACDs, and my MACDs are going in the other direction. Is it telling me that the market is about to shift? No, but what it is telling me is that the market is losing its strength, and I never want to be in a market that has no strength. Okay, so let's put it all together. Remember, I told you I have the entire presentation for you right here, makingofadaytrader.com. Go and get it. And let's put this all together. So when you have your chart and you're putting in your technical analysis, this is when you can start to spot some of the most profitable trades. And one of the most profitable trades is the breakout trade. But if you don't have your area drawn in, if you don't understand what's happening with the market, you're going to miss out on this powerful trade, right? So you need to understand how that all works. And with the breakout trade, this is how I spot it, right? So the market has been flat. I have my resistance area drawn in, and then boom, it breaks out. I immediately put in where I want my entry to be. I put it in, and that's what I wait for. And my MACDs are also strong. This is how you put it all together. It's not rocket science, guys. It could be actually very simple, but you do need to understand these basics. Okay, so this is the thing, guys. We have absolutely everything we need to take action, right? We have everything we need to take action. We have these amazing live presentations and summits and events. We have YouTube with tons of gurus and tons of information. We have podcasts, books. But at the end of the day, when you're sitting in front of your chart, how do you know that you are doing it right? How do you know that you are doing it right? Who's there to help you understand that? Because all of this is great, but at the end of the day, you're saying to yourself, well, how do I really get started? And usually this is not from beginners, interestingly enough. I get this question asked often from people who have been trying to trade for a while. And they ask me, what is it? What can I do to turn this around to become profitable consistently? And I have to say, 100% out of 100 times out of 100, it's usually they lack the basics. It's literally what's happening is that people are putting in windows, but they never built the wall to keep those windows in place. So the windows are just constantly crashing, right? Those walls is your basics. That is understanding the basics. And it's literally like getting in the car, what I mentioned earlier, the steering wheel, the gear shift, the wipers, the blinkers. This is basics, right? But you can't drive without knowing where the horn is, right? Because if there's something that is in front of you, you want to let them know that you're there, you're going to miss out. You could even probably get into an accident. And imagine this. I know that this is a little bit far-fetched, but still, imagine somebody who enters your car has never, ever, ever been in a car before, and you tell them, all right, buckle up your seatbelt. It's going to save your life. And they're looking around, they're like, seatbelt, buckle up. I don't know what that means because no one's shown them. Once they're shown, they automatically know, and it's a lifesaver nonetheless. And this was my own sad truth. I spent over $20,000 on my own trainings, and I still ended up struggling for years. Why? Because I was sitting in all these different live chat rooms, or I was with all these different conferences, and they were talking this big talk, and every time I was asking questions, can you please explain to me what is divergence? Can you please explain to me what is resistance? And I was either completely ignored or treated as if I was born with this information. And none of us are born with any information. We learn everything, right? That's the beauty of life, is that we're constantly learning. And what ended up happening is that I lost almost $4,000 within 5 minutes. And that devastated me. Why? Because at that point, I was already trading for almost 2 years. I was not being successful. It was really difficult for me. And this $4,000 loss really took a toll on me. And I ended up quitting. I was done. I felt defeated. I felt like a loser, and I quit. I walked away. But here's the thing. Every single one of us in this room, we are all bit by the trading bug, right? We're all bit by the trading bug, and it never stops itching. And you know why? I'm going to tell you why. Because deep down inside, we all know that we could do this. And that is exactly what happened with me. I quit. I left for about 4 months, but I knew deep down that I could do this. If other people are doing it, then I definitely can. So what happened is, I came back. First of all, I used to have 3 charts. I got rid of 2 of my charts. I literally donated my high definition monitors to the garbage men. I don't know what they did. Hopefully they used them. And I eliminated, out of my 10 indicators, I went down to 2. And I started to study the basics. And I studied them for years. And a few years back, one of my students says to me, he's like, you know, you're very similar in teaching philosophy and the way you do it as John Wooden, Coach John Wooden used to do. And I was like, who's this Coach John Wooden guy? I never heard of him then. So of course I checked him out online, and he was a legendary, I think to this day, he is the legendary coach for basketball. And I mean, this guy was other level coaching, right? But his entire philosophy and training was, when in doubt, go back to the basics. And I mean, this guy has 88 national championships, 10 NCAAs. He trained A-star basketball players. Yet every season, regardless of the amount of NCAAs and national championships they've won, he would start them from the basics. What does that mean? He would show them how to tie your shoe, how to roll up your sock, how to dribble the ball, because it doesn't matter what you have done before, because if you're on that court, your shoe isn't tied, and you sprain your ankle, you're out for the rest of the season. So it makes no difference what you've done before. You always have to go back to the basics. Start with the basics, and that's when you could truly flourish, right? So today I have a very special offer for participants only. I never give this away. Nobody else gets this offer, only for people that come to these events, because it's really special for me that you guys have taken that time to be here, and I'm really grateful for it. My introductory course, Bootcamp for Day Trading. You can do it on any apparatus, desktop, laptop, phones, tablets, you name it. And all of this, one-time price, one time, for $97. Okay, guys, I want you right now to take a few minutes. We're almost there. We're almost done. But just really be present. Go here. Go to bootcampfordaytrading.com. Go and put that into your browser, bootcampfordaytrading.com. Put it in and then follow along. Let's see, what can you get for $97 that brings you the same return on investment? You guys like to play golf? Let me tell you one thing. Golf, when we lived in Guatemala, we played golf a lot. It was like $29 per person. Before we moved 2 years ago, it was $119, and that was in Guatemala. Okay, you guys like to go out to eat? I don't know about you guys today, but going out for a decent meal with a glass of wine is more than $99 for 2 people. Okay, so I'm going to break it down to you. Here is all that you get in bootcampfordaytrading.com. You get the simplified day trading package. You also get the platform tutorial. I know that MetaStock comes with the white glove service, but sometimes we just want to get it up and running, and that is already included as well. This way you could go right in and start trading. That's the fun stuff. Then we really dive deep into the anatomy of the market, the movement, the trends, understanding upward, downward, but really focusing on those sideways trends, reversals, divergences, because I have to tell you, once you understand reversal patterns, that is where the magic happens, and including divergence and support and resistance areas, because divergence to me is my holy grail, and it's so simple to spot, and once you get it, you'll be having aha moments all the time. And we're going to be able to understand the breakout, right? The breakout trade is the most successful trade out there, but if you don't know what you're looking for, how are you able to master it? So we're going to master that as well, and understand the fake out breakouts, because with fake out breakouts, they happen. And if you avoid it, then you don't have to lose money with that. All right, and you get unlimited access to the curriculum. All this is valued at $1,600. But you guys will get it for $97. Here's what some of my students have to say. And I have students from all over the world, because that's the cool thing about trading. You can do it from anywhere in the world. Michelle, best money I ever spent. I just finished the boot camp. The best money spent. Derek, you're the only mentor that truly checks the work. Adrian, I am enjoying your boot camp so much and learning every day. Now, quick question. Remember I asked you, how do you know you are doing it right? Because this is so important, okay? If you don't know how you are doing it right, you don't know what, if your charts, if you're looking at the charts correctly, you're not going to be able to master it, right? So to help out, I am including one entire month, 1 month included in the $97, unlimited one-on-one coaching and feedback with me. Unlimited. All right, that means you guys could ask me all the questions you want. We could look at your charts, we could examine it. All is included in that one-time $97, okay? And that alone, having that mentorship, could bring you to the next level. All right, and I also have a live trade chat room where we implement everything that we are learning and watching the live market and the live trades. They are 2 separate things, and you get them both. All right, so $97, bootcampfordaytrading.com. I want you guys to go to bootcampfordaytrading.com right here. Let's go over really fast what you get. Everything in this course. 30 days one-on-one mentorship with me. 30 days live chat room. And you know what? And this is the reality, is this is worth less than 1 price of a trade. Normal average trades, $200 to $400, right? Easily. $97, you are going to 10x your return on the investment and be able to take out your friends and family to 100 of these things. But here's the thing, because of my mentorship, I'm only able to take on 25 students. And let me tell you, the room is full, and I usually sell out pretty fast. So I just want to let you guys know, this is your chance. I'm not taking on any other students this month. So this is great. March 1st, dive in right now so we work together. This is a no-brainer, right? So go here, bootcampfordaytrading.com, bootcampfordaytrading.com. So I would recommend going here. This is the order form right here. You can see it. oops, what did I just do? bootcampfordaytrading.com. So let me add in this link here. And oops, how do I put it in? Oh, there we go. And I'm going to make it available for everybody. Oh, I don't think I can
Marina's
do
already
that.
in there.
Okay. I don't see that. Cool. So guys, go here, bootcampfordaytrading.com. Oops, what is going on here? There we go. So this is the order form. And as you can see, it's a one-time payment of $97. But if you do need to have a payment plan, I do have 2 times $59, but you automatically get included. Automatically included into the course, and you have full access, and we can get started immediately. Okay, so let's go here together, bootcampfordaytrading.com. I am here to help you guys. Let me know if there's any questions, because I don't have the question box available. So if there was any questions, I'm not seeing them.
I'm sorry. I thought Jeff would respond. I'm not sure if he's at his desk. I don't see any questions, Marina. And GoToWebinar. Let me look over onto YouTube. No, we have a very, very attentive but very quiet audience.
Okay, that's cool. All right, guys. So please go here, bootcampfordaytrading.com. I'm just going to show you one more time here. Oops, hang on a second. All right, so if you put in bootcampfordaytrading.com, and you should just take a screenshot of this right here, and it will take you to this order form right here. So I would recommend take a screenshot here. If you cannot access it right now, put it in right here, bootcampfordaytrading.com. And I'm excited to have you guys in the course. Thank you so much. And thanks, Greg and Jeff. I don't know if he's still there, but thank you so much for having me. I really love participating with MetaStock.
Can you guys hear me now?
Yeah, we can hear you now.
Right.
Okay, cool.
It's a tech issue night.
Do the unplug, plug it in again trick. All right, very cool. Thank you very much, Marina. Bootcampfordaytrading.com. We actually put the link in for that into the chat. So you can just click on that.
Okay, cool.
Either from YouTube or otherwise. And I'm sorry, I was quiet. I couldn't get my microphone to work. So there you go. Thank you very much, Marina. Appreciate it.
Thank you. Bye, everybody. Have a super night.
Bye, Marina.
All right, we can do this. Oh, we'll go ahead and show my screen. As we kind of migrate, I want to say thank you to one of our, oh, here, we can also turn on the camera. I want to say thank you to Stocks and Commodities Magazine for sponsoring the event today. They sponsored it for so many years. Great magazine. You can get articles all the time from it, or every month. They have 17,000 articles that are all available with a subscription. They have 1.3 million subscribers. They've been making the magazine since 1982. And you can get a subscription at traders.com. I want to say thank you for their sponsorship. So, and without further ado, Greg, should we do another prize?
Yes, I think we should. I think we should absolutely do that.
Let me run in here. Let me grab my prize list real quick.
Okay.
And
Okay.
We are going to give away a TechnoTrader Trade Management Planner. This will work with Excel. It'll work with Google Sheets if you don't have Excel. It's designed to kind of allow you to manage your trades and plan your trades and journal your trades, which I think is extremely important. Normally they sell it for about $500. And so, hello, Ken, we can see you. And so we're going to give it away.
Okay, I'll do that real quick and I get out of your way. Oh, well, Ken.
No worries.
Ken comes and goes.
I just need, give me a number between 1 and 9,065.
You got it. That would, oh, I was just on there. That number would be, according to Google random number generator, 3,219, 3219. While you're pulling that up, boy, I have to say, I really did enjoy Marina's. Marina's always a good, level-headed, down-to-earth kind of speaker. I enjoy her style. And it's been a while since I've heard Ken. I'm looking forward to hearing what Ken has to say today.
Yeah. Okay, let me write down this prize. TT. Yeah. All of our speakers have done such a
we have great speakers. There's no way around it. We have a great lineup.
Yeah. Let me remind everybody, we've been talking about MetaStock all week, all that kind of good stuff. If you want to get an extended trial, you can buy a month. You get a second and third month for free. We've talked about scanning, testing, all the support you get with it, the white glove installation support. I really liked how Marina's like, yeah, I went through that. You know, it's funny because a lot of times we will talk to new partners and kind of get them interested in MetaStock and get them running, and we will send them through that. But they get surprised. They're like, "Do you do this for all of the customers, like everyone?" We're like, "Yeah, it's
Every single one."
So if you want to get that extended trial, pricing starts at $75 a month. You can go until June 1st, and it's an extended trial. If you buy a month, we'll give you the second, third month for free. So it's about $25 a month, which is, I bet, more. Which is, I bet, less than what Greg spends on coffee every month.
Yes, I'm a coffee diva. I'm not sure if you just said that right. It's if you buy one, you get the second and third free. So if you buy one, you get 3 months total.
Yeah.
Up through June, you're saying?
Yeah, that'd be June 1st because it's March 1st right now.
Okay, wow.
Can you believe we're already in March?
I cannot. March came in like a lion here in Southern Texas.
Metastock.com/conf promo.
All right, I'll get out of your way. Break a leg to Ken.
All right, let's do that. All right, Ken is next up. It has been a minute since we've had Ken in the room. He took a little bit of a break, but he is back with a vengeance. So I don't know if that's technically accurate or whatever, but he is back, and we're really thrilled to have him back. Ken, welcome back to the room.
Well, hey, Jeff, it's great to be back, and you've got a lot of great speakers lined up as usual. So, Norm and Marina and good people. So, yeah.
All right, I just sent you the presenter screen, so it should pop up and say, "Do you want to share your screen?" That's what I want to do after we're done today. Get on a hammock.
How do I choose the right screen?
In screen, it'll give you a little drop down. If you go back to the GoToWebinar thing, there's one that says screen, and there's a share screen, and you just select which screen you want to share. It's under sharing.
Okay, sharing. There you go.
You see where it says show screen, and there's a little drop down right there?
Yeah, let's see.
Okay.
Found it.
Okay, you found it. Good. Yeah, I see your stuff.
All right. Well, sounds good. So, can I go ahead and get started?
Yeah. I'll get out of the way. Your turn. Go.
Thanks. Hey, well, welcome aboard, traders, to this event. Hey, I wanted to say that feel free to post tickers of your choice. That's one of the best things I like doing for everybody in these webinars is I'll tell you if I think the chart's great, if it's not so good, and how to trade it. So if you have any instruments at all, hit me up with your favorite stock or ETF to trade, and I will go through that list. Hello, Jeff, could you read those off to me periodically as they come in?
I'm sorry, what did you say?
I was asking traders to tell me which charts they want me to look at on MetaStock and give them my 2 cents worth. And if you could let me know some of the tickers they come up with.
I'm making the organizer so you can see. We do have some requests already for TTM,
and
HIMS.
Okay, and where's the chat? Where can I see that?
I just opened it up. It should be under questions is what it shows up under.
There we go.
Yep.
Thank you, sir. And we are good.
And if we come through YouTube, I'll let you know too.
Okay, there we go. All right. Let's start now. And we're good. All right. Cool, traders, let's go ahead and get started. I'm Ken Calhoun. I want to share with you some of the strategies I use in trading breakouts. MetaStock's a great platform for that. And one of the things that I did $122 million worth of real money order flow just the year before last. So I'm an avid trader. And I've learned a lot from my stops and my wins. And the lessons learned is what I teach people. So let's go through some of the do's and don'ts and use some of the charts here as we get started. One of the things you always want to start at first, well, let me first start asking, how many of you are day traders? How many of you are swing traders? Or how many of you do both? You would type in D or S or day or swing or both. Let me know what kind of trader I've got in the house. I know where to focus the content. So you're day traders or swing traders or both. And Jeff, if you could help me read this here, I'm trying to look at the questions.
Oh, yeah. I sure can. I can tell you that I am a swing trader.
Yeah. Yeah, and swing trading is good. And one of the things that helps is to look for swing trades is always look at your, basically the only thing you should swing trade are special, say, post earnings gap continuations and 52-week highs. Okay, so
All right,
post
we're
gap.
trying to get some answers too.
Okay, cool.
Greg says he's a swing. Klaus says he's a swing. Yog says both. CJ says both. Omar says I prefer alerts when I'm day trading. And then Richard says swing. And MetaStock on YouTube says swing. So there you go.
So,
Also, since I'm talking right now, there's a couple comments I want to read to you. Blue in YouTube says, hi, Ken. Many thanks for the contributions over the years and great articles from time to time.
well, thanks. Yeah, I'll be back in tasks starting 2 months from now, so I will hit the next deadline. And I took some time off, but I'll be back as a regular columnist with my trading on momentum column, the 500 words or less the month. So thanks. Yeah, great magazine.
Neil says, welcome back. It's great to see you again, Ken.
Oh, thanks. Good to be back, guys. It's been quite a journey.
Day trades. So there you go.
Yeah.
I'm going to go ahead and be quiet now.
No, we like hearing you talk. So the only two things you need to do for swing trades are 52-week highs and post-gap continuations. Things after gap that goes up for a day or two. Like an earnings release is usually either gap up or gap down, or news or something like that. So the easiest thing to just remember is focus on 52-week highs. Here's one. AAM is the chart, and if we pull this up, you can see the detail. One of the things that I found and working with several thousand traders since 1999 is that a lot of y'all overtrade crummy charts. You guys ask me about terrible charts, and then no wonder I could make money with that chart. So you got to trade charts that are easy to make money with. Okay, keep life simple. Charts that continuously go up are a good start. 45-degree angle breakouts, nice tight charts like this are a good one. So this is a good example of one that's been going up for quite some time. So 52-week highs are great and they're easy to see. One of the things that traders do is they overcomplicate trading. The most money I've made in my biggest winning years, and I've certainly had profitable years, are those in which I've taken shots, a lot of shots at the best and strongest charts and done position sizing or scaling. So the second biggest tip is every single trade you make in your life, every trade for the rest of your life, should be seen as one of a sequence of 2 or 3 or more trades. Okay, always trade a sequence, never trade in isolation. Back when I first started trading on 26 years ago, I'd say, here's the magic chart pattern. It's a cup pattern and it's breaking out. So I'll buy, 500 shares. And then it craps out and I lose 500, 600 bucks. Now, I got to try it again. No. Start small, maybe 100 shares on the first breakout, get stopped out. 100 shares on the second time, that holds. Break even on the third. Fourth one, that holds. Now you're in 2 and build it from there. Third trade, maybe flat, you're still in 2, you hold it for 3 weeks and you make a couple thousand. You have to break your trades into 2 or more pieces. So instead of 1,000 shares off the gate, a lot, you maybe do 200 share trades. You want to nibble, feed the winners and starve the losers. So that's the most profound thing I learned is make sure that you trade a sequence of trades. Every trading thing that you do should be seen as, whether I'm day trading, as I'm looking at, say, Turner, TRNR is a good one for day trading yesterday. I'm gonna look at this one here, right? TRNR. Anyway, whether I'm day trading, I may do a sequence of 5 trades. I might buy like a 205, 220, 230, 240, 250, going at a few hundred shares at each of those levels. If it's able to break out and continue, then I tighten up the trailing stop. If it doesn't continue, then I don't. And with swing trades, I feed it every 2 or 3 days, over a course of maybe 3 or 4 weeks. So that's the best way to get into your trades. The other thing, and just a really quick note, is make sure that you only trade, and these are millions of dollars worth of trades I've done, actual trades. You can look on my site of tax return proof, because I'm the real deal. Only trade out charts, okay? Proof. By out meaning above, only buy things that are going above the previous day's high. Don't fool around with anything. And if you want to really get sophisticated, only trade out days and out charts. So S&P is above the previous day's high, and whatever you're trading is above the previous day's high, you're good to go. S&P is in the middle, charts in the middle, and it's going up. No, this we're good. And that's it. Very simple and very effective. Try it out. Proof. Go back over your last 30 trades, and I'll guarantee that the vast majority of the stop outs are in inside range charts. Things that you traded inside the previous day's range. So just stop that. You'll do a lot better in your trades. All right, let's see, what do we have? Oh, wow, a lot of charts. Some CFIT, the CF, no, it's hard to read the print. CFLT, the American Airlines, that's looking American. Just do the Control W to pull up your handy dandy power cancel and instrument chart. Well, what up in a second. Trying to pull that one up. You see, Jeff, can you help me out here? How do I pull up American? Is that
You got
it?
it. Yeah.
Okay, yeah. We got it, okay. We got it, okay. Now, this chart totally sucked. Why? Because they stopped buying it, Sparky. You got off the plane up here, that's great, but it's going to come in for a decent. It's not going to bounce my heart. It was great back then. That's another, brings up a really important lesson learned. Just because it looked good back then doesn't mean it looks good now. You look at online dating, you see the profile of a woman, she puts like a 10-year-old picture. That's not what she met in the coffee store. No. Oh, I got a call, I gotta go. Lesson learned. Just because it looked good back then doesn't mean it looks good now. So it's like their charts. Just because it looked good there doesn't make it a good candidate now. It's a terrible chart because it's indecent. If you want to short it down there, maybe. But no, that chart's not, no bueno. I wouldn't trade that one. It's once it's broken the trend and continue down, it's just gonna do chop city. It's not gonna make you money. That's not a good chart. Next, what's another CFLT? Let's give me your best charts. Meantime, let's take a look at the let's look at day traders. Let's take a look at a quick one that we nailed yesterday on TRNR. There we go. There we go. Now TRNR, really good bounce. So this is what we often see is charts that have taken a big nosedive over time and are suddenly coming back to life. And there's been quite a few the over $1 or $2 bouncing charts that have really good volatility. So this is one. If you go back in time, let's see. It was way the heck up here. Split adjusted, whatever, 4,000 shares. So, and now on sale for the low par price of $1.02 a share. Anyway, look at these. If I can get this in here. One of the things that you'll notice is there's two waves of buying, or two ways to buy what's often a short squeeze play, right? Pull this out. Swang, very clear. See, MetaStock, great chart. 1, 2, 3. One of the things I'm going to look at is a sequence of 3 or more candles on the upside. Now, I prefer 3 green candles, but after a big drop, mega drop, don't buy the little bitty bounces. I used to do that and get stopped out all the time. How many of you like taking stops? No. How many of you get frustrated with taking stops? Of course. How many of you learn your lessons about stops? It took me a lot of years, actually. Bottom fishing took me 7 years, maybe 7 or 8 years to finally get it right. And thousands of stop losses and lots of money gone. What I learned was the most important thing is don't buy the little bounces. This is like a bad chart. Who can tell me why is this a bad bounce? There's 2 things that jump out. That's a bad bounce because the candles are getting smaller and there's a shooting star as the 3rd candle. So that's no bueno. That's no good. Which one is 3 candles in a big chart, big candles, and are going up, right? So if they're getting smaller, that means bears are taking over, buyers are running out of steam. Watch out for what's likely to drop. I often would buy something like right here. Think, I'm smart, it's gonna run. No, you get stopped out. Don't. And by the time, it's stopped again. But the 3rd, make it the first time determined. What you want to look for are large candles, and you want to see 3 candles in a row. 3 for swing trading, cheap over, what you think are oversold stocks. You want 3 opposing upside candles with high volume, like a volume pivot, volume reversal, that are large, and then you go along above the high. So not a trade recommendation, but I think you'd be happy if you get long this thing over 3 a share if it pivots. So that's one thing to look at for pivots. So lots of things, lots to look for. So many patterns to learn and so much lessons learned to compress into a brief time. Let me get some more tickers. What do you guys, what are some charts on your mind? And we'll take a look. CFLT, American Airlines. One of the things too that you want to look for is breakout points that are continuous. And so, for example, well, here's ADT. Here's a new 52-week high chart. ADT. Let me pull this one up. Now this is a terrible chart to trade. This is a good example of a 52-week high. What I'm trying to teach you here is, you go through these various watch lists, and 52-week high lists with high volume, and the price range you like to trade. I like to trade stuff between like $3 or $4 a share up to 30 or 40 a share. So maybe 3 to 30 in a range. What I learned was, the big lessons learned was, wide charts going up are not good to trade. Even though it's a 52-week high, that's a technical plus. But from a trader's perspective, trading mechanics, I did stop not trying to trade this thing, right? Because it's choppy, it's a wide circle. So what you want is a nice tight clean range like that AAL chart was, but one that's taking out new highs at the time you're looking to trade it. So that's a very important lesson learned. And you have my word on that. Avoid charts that are what I call caterpillar charts. They have large ranges because it's very difficult to get the timing on when to get in, when to trail stop, when to get out, when to build a new trade. It's very difficult when it's all within a big range. When compressed, like nice clean, and that's really easy to trade, right? So that's like this one. That type of chart's much better than this. Even though they're both uptrends, both 52-week highs, something like this would be much better to trade than this because the risk of stopping is much larger. Let's see. Pull this one up. And Jeff, do you see any other tickers out there from people?
Yeah, we have a request from YouTube to look at GE.
Okay, sure thing. We bring good things to life. That's right. GE. Okay. That's the right way to do it, Jeff? Pretty sure for whatever. G.O, C.L.C.O.
GE, it doesn't require the O.
Okay.
But if you're trying to, but that is, so take off the .O after that GE. The rest of it looks fine.
Yeah, thanks.
You bet.
I'm still in the market to develop a MetaStock plugin for Breakouts. So that's on the to-do list. How do I get to some? Where's GE? Okay. Trying to get these charts pulled up. Now, what have you guys learned about position?
I think
Really going to do it kind of thing. And I realized it's essential to do that. So
that's interesting that it's kind of hanging on you a little bit.
yeah, we'll get it there. Anyway, so one thing I realized is position sizing or scaling is essential. You always want to start your new trade on 52-week high or a gap continuation. Nothing else. And you can take shots, but it's risky. 52-week highs are valuable because that's where institutional traders have large buy orders. So that's one thing to focus your energy on as well. Well, what am I doing here?
Yeah, I think you cracked. I think you broke it.
Good job, Calhoun. Break it to the
Yeah. It only happens when you're presenting.
And it's only for me. Especially for me.
I think it's a good time to maybe shut down MetaStock and restart it. It's gone unresponsive. So if you right-click on the icon in the task menu, it might give you an option to shut down.
Yeah.
Otherwise, we can shut it down.
It's task manager. Okay, let's see. Anyways, so well, let me talk forward some. Let's see. Sorry, some things I found in addition to position sizing is make sure that you use buy summit orders for if you buy stuff, you want to share 23 because you don't want to buy that. You buy stuff like 8 Okay, let's see.
I'm also getting quite a bit of choppiness from you as well. Do you know how to get into the task manager and shut it down, Ken?
Yeah, I'm trying to.
Yeah. It looks like it went out of commission hard on you.
Yeah, task manager.
This isn't Ken's fault. Something's going on with it. Control-Shift-Escape to bring up your task manager if you don't know. Ken?
Yeah, I'm here. Yeah, I'm trying to run task manager.
Hit Control-Shift-Escape on your keyboard and that'll pull up the task manager. If it's easier for you, I could start sharing some charts. Or you could talk about them.
Then task manager, and task manager.
Yeah, Control-Shift-Escape.
Okay. Okay, so we got task manager. First of all,
And then, yeah, just shut down the task MSWIN32.
right. And the browsers too, because they're taking up 150 megs each, so that's what overhead on.
Sorry about the problem.
You know, folks, well, think of some smart questions. I've got a lot of answers, so think of your best questions. I'm very good at answering things very quickly and correctly, so think of any question.
Yeah.
Okay, so kill the browsers and
Just
MS
MS
memory and
do it for you. Yeah, it doesn't. This is a pretty hard crash, which has. There we go. Okay. Okay. Sorry about that, everybody. I'm not sure what PDF you're talking about. Did you have a PDF bonus, Ken?
Yeah, I was going to make one from the charts that I do in today's event and get that to you to get to people. So it's going to be on the way. That'll be forthcoming. Let's see. Here we are. Looks like we're booting and the other screen. We'll be back. Here we go. And let's hope the launches now.
The good news is we do have a bunch of stocks. Yeah. I apologize, Ken, and everybody else for the. I know how frustrating it is when you get a little bit of a technical issue. Have you restarted MetaStock yet?
Yeah, and that's another monitor for me.
Oh, I see it.
Over here.
Yeah, okay.
We're gonna do he's back. All right, so
just hit the power cancel in the upper left-hand corner there. Yep, there we go. Now let's just do GE. We'll take a look at GE first. Then we've got some more charts we can look at as well.
Cool. Yeah, we'll keep it simple. That's one thing I learned in life, by the way, the hard way. Keep everything as simple as possible, right? Like I restructure my business, keep things, used to make things, kind of awful complicated. The success is doing a few things right, not trying to do everything okay. It's doing a few things really cool. So what I have here, GE, it's a wonderful chart. I love it. Be great for an investment portfolio. It's up at new highs. Topping range, long would be over 180. Now that's another quick tip, and this is very valuable too. Very valuable to tell. In swing trading, especially the higher priced instruments, often it's a good place to buy is above multiples of $10, like the $130, $140, $150, $160 share range. Never buy nines. So for example, never buy something that's $199 because it'll almost guaranteed go to 200, stop out, do a false breakout and crash. So to avoid false breakouts, don't buy at the upper range of a window. And for example, if you're trading a $20 stock, so it would not, and it's currently $19.30, $19.23 a share. I'm not going to buy it until it gets over 20, like 2010, 2020. It's at 13 share, 14.12. but don't buy right under the 9. Same thing within $1 range. Something that say it's $5 and say it's $4.90 a share. You wait till it gets over the 5, like 5.10, you buy that. You don't buy at 5, you don't buy over that, because market makers always, the specs are always sitting. I know a lot of institutional clients that they used to bring in the big firms out there, and they used to do squawks on the floor. Alcohol for back in the old days, back when we had fractions. I'm 61 years old. I'm a lot older than I look. But anyway, a lot of those tricks of the trade that like market makers and specialists are going to hunt for stops by sitting at the whole numbers. They know that inexperienced new traders will buy right over whole numbers, so they'll feed on you guys by putting a big ass sell order at 1905 or something, and drive the price down, wash you out, buy the shares, and then sell to you up a new high, and then you get stopped out again. So I know these tricks of the trade. So
yeah, from a perspective of that, just a follow-up question on that. If you say 200 is the magic number, does that get invalidated at 201, or is it 201 penny? Like, at what point do you consider that 200 value to be violated?
I look at 199.5, just right within a point under the point. And so 195. Now it looks like actually the high here is 208. So looking at a little bit early. So whenever you look at these charts, this actually by this I would use I'd wait till say 208 or 210 specifically. I'd just wait till 210. Round it up to the nearest time. So don't be too eager to get in on fear of missing out. Be more afraid of getting stopped out because you got in the choppy price action. Here's a quick tip. You're looking to buy at a price that acts like a magnet to draw in other traders. Those prices are not inside range chart. They're not inside range. Institutional traders, high frequency trading algos, and those home traders, what are the price points that will draw in new buyers that spike the price? It's really important. It makes a big difference. If you're speculating inside range, you're wasting your time. So.
All right, Yogs wants to look at AFRM.O. Now, instead of going to the Power Console, just type in A. Just start typing A. There you go, FRM. And then you see the .O, click on that one. And then just hit it. Makes it easy.
Our MetaStock with, there you go. Oh, there we go. Yeah, Jeff is one of the best guys in the whole industry to work with. He's like really one of the top guys. I know everybody's, well, at least one of my favorite people to work with. So it's knowledgeable, it's friendly, it's accurate. Anyway, so this chart, no, that sucks. I mean, I shouldn't say that doesn't have the technical properties that we look at for this professional trading. What did I tell you guys? I told you, don't be trading stuff with wide ranges like that. You're going to stop down that. That's a bad chart. Stinky chart. Yeah. How are you going to make money with that? I mean, seriously. How would you actually have traded this to try and make money? I mean, you probably get stopped out rather than make money. So trade charts with clean breakouts. Next chart.
Tesla, TSLA from Magellan.
Now I prefer trading the ETFs, the TSLS and TSLL.
That's fine.
You actually know this shit. I know stuff like the back of my head. You can drop me into trading pit and I'll kick everyone's ass up. Okay. It's true. I feel like a 20-year standing booyah at the money show events. I say, if anyone's willing to go head-to-head against me, I will bet 20,000 of my cash against 5,000. Here's 4-to-1 odds that I'll kick your butt in day trading open. Nobody, none of the educators have ever taken me up on that, except Rob Hoffman. And I don't trade against him because he trades futures and I trade stocks. But anyway, nobody will take me up on that. So I digress. Okay, Tesla.
TSLA.O.
Yes, I know. TSLA.O. And there we go. Oop, there it is. I've been in quite the retracement here lately. It's attractive to me off this pivot. Okay, so if we get here, which is around 250, might be good. We're at just under the 300. I like the bullish engulfing. Okay, that's a bullish engulfing candle, so that's good. I would go on it. Not a trade recommendation. But actually follow everything I say and hold me accountable. Follow what I say, and you'll see. Wow, it does stuff. 302 with a hard stop at 299. That's your long trade in Tesla. So write that down somewhere. Remember. Long at 302, hard stop at 299. Exit target be in the 340. So tighten the trail stop tighter and tighter, tighter, close to 350. So that's the balance of a trade. Buy the 350, buy the 302, and sell, say, the 347, 348. That's the trade in Tesla.
Ken, I'm not sure what happened, but like your audio got a lot kind of choppier. Did your microscope position move?
No, let's see. How's it coming through now?
It's still a little bit choppy. I wonder if it's just internet.
Probably it's the ghost of the machine. Live from New York. It's Saturday night.
Yeah. Sometimes when it's just internet, there's not much we can do. I just thought I'd ask.
Jeff, he might have some success if he unplugs and replugs the microphone in. If that's accessible, Kim, I don't know if it's way under your desk. I wouldn't worry about it, but it is distracting.
Yeah, it's a good idea. There we go. Okay, it's back. Does it sound better now? Testing 1, 2, 3.
It's actually not better, but I guess if we can't fix it, might as well proceed, and we'll just have to proceed the best we can.
Yeah.
Well, let me see.
Because it doesn't sound like it's mic distortion to me, Greg. It almost sounds like internet distortion.
I don't know. When I left my desk, it sounded great, and when I came back to my desk.
Okay. Yeah, the problem is I'm on a USB port, so.
And the fact that Ken's image is fine, it leads me to believe it might be a microphone issue. But again, Ken, we don't want to, sorry for this must be distracting, but it was getting bad, but we'll just have to deal with it.
We'll voice cat through.
Well, it's, I'm on a port, let me see if I can.
Oh, I just saw your message, Greg, about the mic.
Okay, is that better? Check 1, 2, 3. Testing 1, 2, 3. It should be better.
I'd say it's a little better. I think it's as good as we're probably going to get it. Yog says he wants to look
let's
at
see. Testing 1, 2, 3
data.
audio and pulling up the.
Oh, that sounds a lot better.
That is way better. Yeah.
Here we go. And let's see what are we using. Yeah, that's it should be. Yeah, that's.
Whatever you did, don't undo it.
Yeah, that's about as good as it's gonna get. So that's my Blue Yeti mic. So is it coming through okay for folks, or?
That is much better.
Is it doing okay?
It's way better. Far better.
Can you guys hear me okay?
Yes.
Can you hear me? Can you hear me or no?
Oh, now it sounds like he may not be able to hear us.
Yeah. We can hear you, Ken, and you sounded great.
Sorry about that. Can you guys hear me okay doing the 1, 2, 3 test?
We can hear you.
We will continue on.
Yes.
It's always something with technology, right?
You can't hear us at all, Greg.
I know.
Yeah.
Doing a test 1, 2 to see if our mics are working.
Your mic is working. We can hear you. I'm putting in the chat for it.
That's true. I cannot hear you guys.
I also put it in the chat.
If you got configure the speaker.
I can call it.
Guys. Hang there.
Okay, while Jeff's taking care of this, I want to apologize to everyone. We've been a little replete with technical issues today. Ken is having some audio issues in and out, and Jeff is going to go ahead and call him right now real quick to see if he can help him through it.
No, usually
we can hear Ken. Apparently, I don't think Ken can.
Okay, well, you can hear me, so that's we'll go with that. Okay, well, let's move on. We'll carry on. Yeah, this computer system is a really good one, but it's not behaving itself today. If you okay, audio. Come on. Okay, well, let us go on. Trying to find the audio control for speaker. Well, let's go on with our presentation. Okay, let's look at building a trade. One of the things we want to look at for pivot trades is a mean reversion pivot. So that's when it goes way up, it comes down to around half the range and then bounces. That's okay. So this one's okay. Generally, I do not like those charts like the previous chart. I think it was American Airlines, AAL, yeah. Whatever it was that went up and was in the process of a new downtrend. Those of you who don't trade, you really want to wait until it either pivots off of a previous pivot, like this is it would be what's called my colleague Steve Nissen would call it change in polarity, where previous support becomes new resistance. And so, or new resistance becomes old resistance becomes new support in this case. We have a bearish engulfing here, leads it down. Bullish engulfing may lead it up. So that would be the play in this Tesla chart. All right, now let's see. I really want to hear these people. Let's see. I know MetaStock people, can you call me on my cell phone? I'll get that turned back on.
Jeff, you want to give him a call?
Get annoyed. So mean reversion pivot, that's kind of fancy way of saying something that goes to the mean or the median, the X bar, the middle of the range. I used to be a statistician for Ford Motor Company. I developed a SPC, statistical process control, for the whole company. And if you're from a production background, you know, from there we want processes in control and capable. We want all the widgets to come out the same way. In trading, it's the exact polar opposite. We want maximum variation so we can trade and make money. So things are out of control and running. Okay. And Jeff, I don't know if you can call me on my cell and I'll be able to hear you. And we'll move on with some new charts.
I can. I don't think you can hear me, but your phone's got a voicemail.
Okay.
So
What's another good one to look at? Okay, let's see. Well, this newfangled technology stuff. And by the way, the things that I tell you are honest, the things I've learned from trading, I can show you. Oh. Hello, this is Ken. Hello? Yeah, I can hear you, yeah.
So I'll just give you the symbols that are coming in via phone. If I hear you, go straight to voicemail.
Yeah, okay.
Let's take a look at the AMPN.
Okay, Amazon, blah, blah, blah. Yep. See, can I type it just on the chart, right? AMZN, and puts up there. And sorry, folks, for the technology glitches. Let's see. And we will see. All right, good chart. All right, so when you take a look at this, I have a bullish cup here and it runs up, but again, this is a thing in decline. Here's another quick tip. When you have an existing trend, look at the ratio of green to red candles. And if it's dominant red, obviously you don't want to go long, unless it's been doing that for a long time and you have 3 green candle reversal. So you have lots of red here, and this is a really bad chart to trade. Perfectly terrible. Be very difficult to make money with this chart. Now I want to trade charts that are easy as possible to make money with, and so consistency over time, it just grinds up. It makes for a much easier trade. Let's see.
So look at this, which is, I believe, HIMS. Just have that much in,
Sure.
and it should pop up with the list of symbols. It might be.
Boom. There we go.
There you go. Yeah.
Yeah. Now this one's one of those exciting ones that you can really go broke on because, hey, it's going high. I'm going to bet the farm here because we're going to get rich, and then boom, you just lost your account. One of the things I encourage you to do is, and these kind of charts are fine for scalping or short-term day trading, maybe an overnight hold or two, but I wouldn't. Day trading, make sure that the chart that you're trading is something that is suited to your personal experience level. So the range is really important. Narrow range charts are good for beginners, like bunny slope charts, but large trading ranges are not. So things that are like this, a 20 to 70, that's a tripler. That's too dangerous for new traders because there's too much range and too much risk. I mean, if you buy at 70 and sell at 50, that's probably not too good. So well, it's good while it's going up, but this would be not good for inexperienced traders. Having said that, though, I would buy this at 40. The calls would be, I'd go long at 47 as a hard stop at 44, 47 long, 44 for the stop, and I'd use the high 50s, like 57 for an exit target. So that would be the range that I'd trade within here. Around 47, you might want to tighten up a stop as it gets to 50, because that might be a reversal. If not, then it may be good for the high 50s. So yeah, that's worth trading though. That's the number one thing is this dang chart worth trading in the first place? Okay. Oftentimes the answer is no. So, okay, any other tickers? Okay.
Jeff, it might be helpful if you turn your mic on while you're talking to Ken so we can hear what you're telling him.
AL. A, B. Villatoro helps. Okay. Yeah, that's another terrible chart. From now on, only ask me about charts that are going up, okay? Because you guys lose your butt trading charts that go down. Don't trade things, don't buy stuff that goes down, unless you're asking me for a short. It wouldn't be a short either because it's not taking a new low. Remember, anything that's inside a range sucks. Do not trade things that are inside ranges. You're going to lose your money. Only trade things that are taking out new highs. If it's going down, you don't trade it. And it's true. I mean, I've done millions of dollars worth of trades. I know it's stuff. I mean, it sounds that, well, all these reversal. No, keep it simple. Things are taking out new highs. All right, any other tickers?
Yogs wants to look at QQQ, which would be
Sure.
QQQ.O in MetaStock.
Okay. I actually like this one better than QQQ. I probably trade SQQs a lot, but so with our Qs, you can see pulling back off the highs. It's been in a choppy range. Now, is this one taking out new highs? No. So only ask about charts that are taking out new highs. I know it's a strange idea, making money trading stocks, but this is like a Warren Buffett type thing. You know, rule number one is don't lose money. Rule number two is see rule number one, only trade things that are going up. Don't try and outguess the market with things that are going down. I tried that. Years and years and years of experience of that doesn't work. So just keep it simple. Try slowly trading things, and not things that are sharply run up like that. Just a nice slow grind. A pattern that I love is called an acceleration ramp, and that's where you have a steady uptrend that then starts a hockey stick up. That's good on high volume. That's you trade that. Don't trade things that are down here. This is in a congestion box. No good till it breaks at 540. Any other tickers? Let's see.
Let's take a look at T.
Which one?
T. And it was just T.
Oh, it's AT&T?
Yeah.
Okay. I used to make fun of AT&T, but not lately. That one's a rock star chart. Surprisingly, because it's funny. I picked out AT&T for like 15 years as being an example of the chart not to trade, and it wasn't. Look back in the day, it was a stinky chart. It was on sideways forever, like Oracle or something. Now it's a rock star. That's a great chart. So that's what I'm talking about. See, that's good. I'll give the trader a hand. That's the kind of thing we're looking at. Now, how do you trade it? The first thing you have to do when you look at a new chart is evaluate whether or not it's worth trading in the first place. The way you do that is looking at the right side here on your MetaStock charts, the range. You want something, I'm not going to give any hard or fast rule, but you want to at least say, say a $20 stock, you want at least a 5-point range. A $50 stock, at least a 10-point range kind of thing. You don't want to trade a $20 stock with a $2 range on a multi-month time frame because that doesn't work. You want to make it worthwhile. That's a perfect chart. This is great. I see nothing wrong with this chart. This is a perfect 45-degree angle, tight, lots of green. That's good. That's muy bueno. That's a good chart. So
T's been cruising. Let's see. Let's take a look. Sunil wants to look at Apple, which would be AAPL.O.
Right. Familiar. I would hit 28. Again, not a trading recommendation, but I go long at 28.2 all day long with a hard stop at 27.8. So write that down. 28.2 long, 27.8 stop. If that one chops out, go in the 28.4 with again a 27.8 stop, and that would work out. So this is a great chart. I love this chart. Nothing wrong with this. That's good one. Okay. Next up is Apple. Now that's the worst chart in the world. Now is it taking out new highs? Is it choppy as heck? Yes. Are you destined to fail to lose your money trading this? Yes. Have you heard of Apple? Yeah. Doesn't mean you should trade it. That's a stinky chart.
Ken, you got Agilent.
Oh, I'm sorry.
Yeah. AAPL.O. I think it just got the first A.
Okay. Well, that chart that I just mentioned was an example of that. Okay. AAPL.O. Come on, chart.
Click on. Just go ahead and click on cancel.
Yeah.
Oh, let's. Looks like. Just go ahead and hit. Let's have you open it up a fresh chart from the Power Console. Yeah. AAPL.O.
AAPL.O.
There you go.
Open
chart.
Yeah, and that's a horrible chart, like I said, because it's the other one. You guys come up with stinky charts. No wonder you're losing money. Stop trading stupid charts. You got a brilliant charting platform. It tells you that's a stupid chart. Well, wisdom would tell you that's a stupid chart. Why on earth would you trade that? I mean, what are you thinking about? You heard of the stock? It's Apple. It's a horrible chart. Just because some guy says booyah on TV and talks about it does not make it a good thing for traders to trade. It sounds good for sponsors, but not for us traders. Traders, we need to trade stuff that goes up because we need to get paid, right? See, I like to make money as a trader, so charts like the AT&T one work. That one not so much. All right, now next chart.
Let's take a look at BRO, bro.
Okay, bro, let's see what we got. BRO. We're doing on time. Oh, we got plenty of time. That, well, 15 minutes.
I think it's just BRO. I don't think you need the .o on there. So just type in BRO.
Okay.
Yeah, there we go. It's coming.
There we go. Okay, cool. That's an okay chart. It's not terrible, but the thing I don't like about it is it has two, looks like an IPO, right? Or a new issue. No, that's a terrible chart to trade compared to the other ones like AT&T, because again, that's an example of a chart that has up and down range. It's too difficult to trade because the range here is too big. You get stopped out. Your odds of being successful, in other words, of being stopped out, are much higher than the odds of making money. If you buy here, you get stopped out. Buy there, you get picked out. And you want charts that like that AT&T chart that were a work of art, right? Okay, next ticker.
Meta. And I will point out, while you're pulling up Meta, META.O, that we are the original MetaStock.
Right. That's an okay chart, but again, with all the sell pressure, it kind of invalidates an uptrend until it takes that new
I
high.
think you're hitting enter a little bit too fast. Type in META, and let me help you look at a couple settings, because this is building Maverick something.
Okay,
So
let's see.
type in META and show me the dialog box. So change it to starts with. This is a change I make in my own MetaStock.
Okay, cool. So
And
you're getting
see
some
now-
good tips on user.
Now Meta.o, just go ahead and click on that and hit open. There. That'll help us get the right charts up.
Yeah, good. That's a pretty good chart for an uptrend, but it's had so much red pressure here. Yeah, it's a Meta platform. That's for the Oculus, right, and all that stuff or something. Anyway.
Yeah, Facebook.
Okay, yeah.
Yeah,
it's
we actually, now that they changed to Meta from FB, we get a lot of phone calls.
Yeah.
I had a call one time that was a guy that was looking to had some MetaStock. He wanted to know how to sell it, and we're like, no, we're not that.
It's a buy. If you guys have it, it should be buy. Yeah, that's it. Although it's a nice uptrend, the problem with this one is, again, the ranges are too big. Where you really, and it takes some time, it takes some effort and hard work, but look for 52-week highs for charts that go like this. They're really tight ranges. The bigger the range, the tougher it is to navigate, right? Because you'll go long here and it just, I gotta say, it's like maybe, I don't know, personal type thing. It's like going out with somebody who argues with you all the time, okay? And that's no fun. You're gonna go with somebody who's calm and peaceful. That's someone who's gonna give you a hard time about every little tiny thing, because that gets old real quick. You're gonna go with somebody who's peaceful and calm. That's like what straight charts are. Charts that chop around, that's like a argumentative person that you're with. So,
we want peace. HWM.
What's that?
HWM.
HWM?
Howard Whiskey Mary.
The first letter was?
H is in hotel.
Okay.
Hotel Whiskey M. Mary. Yeah, you got it.
There's a story in there somewhere, but I won't go there. Hotel and Whiskey and Mary. Okay. Anyway, that's a great chart. That one's actually pretty good. For that price range, yeah, that's a good chart. That's a good example of one that's tight enough. Do you guys see the difference between that and other charts? So whoever asked that one, that one's good. Yeah, because it's a nice, relatively clean chart. And for that price point, I don't mind this much of a variation in the patterns. Yeah, that's a good one. See, it's going up. That's the kind of chart you want to trade at new highs, right? And not a trading recommendation, but I would hit this at 142 and then put a hard stop at 138. Again, $2 on either side of things up here at 100. So 142 long, 138 stop. Exit target would be up near 150. So buy the 142 and sell the 148. Then buy the 151 or so, sell the 157. So yeah, that's a good chart. So that's a good one. Hats off to whoever came up with that one. See, and for all of you trading, there are charts out there like this. Just because it's a name brand company does not mean the stock is worth trading. Just because some moron in a chat room says it's going to the moon doesn't mean you should listen to them. So something a wise old trader said, was it listen to the math, not pay attention to the charts and not what you think. No, it's trade what you see, not what you think. Yeah, that's it. Trade what you see, not what you think. So that's a good chart though, yeah. Okay, next.
HSBC.
Sierra Bravo Charlie. Why on earth? Okay.
No, that's not the right one. Let's try it again. HSBC. I think I missed the H.
Okay, the H helps. Yeah, that's a great chart. Another great chart. Yay! See, people are smart out there. See, that's something a smart person would ask to trade. Well, I shouldn't say about the person, but that's a brilliant chart. That's a perfect chart. It's a little light on volume, I can tell, but it's a great chart. That's the best one people have come up with I think in any MetaStock event I've done. So that's a great chart. Wonderful chart. Now, what's the price here? 59.90, right? Something like that. Oh, 52. So I would wait till it breaks the double nickel. So I'd trade 50 right at 56. So I'd go along with 56, hard stop at 53, and exit target up in the low 60s. So at 56, maybe out at 64. You should always do that. And I say, the better you get as a trader, the more accurate you get with your calls and your hits. And it may, hopefully it won't take you 25 years like it took me, but make the trade, visualize the trade and mark the trade out on your chart and see how close reality comes to that. And the better you get at that, the closer your marks are. I do that in my room all the time. I mark out where it'll go in the market, and it's almost always hugs it almost exactly. And people say, how did you know? I called like within a nickel pivot of Turner yesterday at the exact bottom. It just takes a lot of practice. So yeah, that's a great chart. Yeah. Okay, next.
Yotes wants to look at RDVT.
RDVP, all right.
VT is in Tango.
Okay. That one's not too bad either, but okay,
RD, so radio, dog, Victor, Tango.
Okay, radio Delta Victor Tango.
Yeah, Victor Tango. I'm trying to remember my phonetic alphabet from the Army.
Right, it's Alpha Bravo Charlie Delta Echo Fox Golf Delta Juliet Kilo Lima Mike Lima Oscar Papa Quebec Whiskey X-ray Yankee Zulu Sir. Boom. Ha. If you don't get it fast, they make you what? Drop and give them 10, right? 10 push-ups. For those of you who are also in military service. Anyway, this is pretty good, but it's not good enough. There's better charts out there. That one's not bad, so I wouldn't dog it, but there's easier to trade instruments out there. That one's like a B chart. It's not bad. That chart is a good chart. So first of all, is it a good chart? Yeah. Is it tradable? Yeah. But there's easier charts with tighter ranges to trade, but that's still good. That one, that's a good trade. Yeah.
Neil wants to look at.
Yeah, the trade on this would be bearish engulfing here up at, somebody says, this. Well, I do 46 long. Okay. All right, next chart.
Neil wants to look at N.
How are we doing on timing?
We're okay. November,
time, right?
Yankee,
4 minutes.
Mike, Tango. Oh, I lost my phone call. Here,
My
let me
phone
talk.
went out of power. No power.
Oh. Well, you ran out of power.
Well, this is fun. It's always something. Yeah, I can trade like a champ, but some of this technology, that's what it's the charting software, yeah, but cell phones, I don't like cell phones. That's one thing too, if you spend time with younger people, you find out they spend all their life on a cell phone. I think that's sad. There's life without a cell phone, but anyway, I digress. All right, folks, well, I think we still have a few minutes, so let's see. A lot of people still here. Let's see.
I could tell him that we could wrap it up. He couldn't hear me, so.
Sharing. Trying to find how to configure trans view file. Well,
I'll try and call him again.
Yeah, sorry, Jeff, my phone lost power.
Yeah. I don't think he has any batteries right
Doing the
now.
whole power thing, so
Yeah, okay.
I've got it plugged in, so it'll come back to life in a minute. Now let's take a look at let's wrap up with some parting thoughts, right? Or some rules of engagement. So remember, best scans for swing trades are 52-week highs and gap continuations. For day trades, a word of warning: do not trade thinly traded meaning under 15,000 shares per minute stocks. Those are the low float stocks. What predatory chat room operators are called boiler room operators, or front running scam artists. Is they'll pick something that's intentionally low float. It's only trading a few thousand shares a minute. Then they'll buy like 50,000 shares. Then they'll make an announcement to their traders. Hey, ABC stock. It's like, I know it's only like no volume in it. It's going to the moon because it's going up a little. Then he gets all of the traders to buy it. It's called front running. It goes up when the traders buy it. He sells into them and it crashes. And the traders all lose money, but he magically made money trying to make himself look good at the expense of his trader. So never, ever, ever trade things that are cheap stock scalping is the worst form of day trading in the world. Only people who do that are predatory chat room operators or boiler room guys. Good day traders trade things that are liquid, lots of volatility and volume. Swing trades are like this, and it's really important. So do not day trade cheap stocks that are under 15,000 shares per minute. Compare with the most active pre-markets. When I do scans for pre-market for my traders, we look for things that have 50, 100,000 shares pre-market, even a cheap stock, $2, $3, but it's got at least half a point range on lots of volume. So you can't front run it. The chat room operator can't front run it. That's a word of the warning that everyone needs to hear. The other thing to be able to tell whether or not somebody running a trading room is a real trader or not is ask them to trade an odd lot and see if it shows up in the tape. They'll say, hey, chat room operator, I know we're talking about, say Marathon or something. Can you buy, say, 18 shares right now within the next minute, or 36 shares, or 116 shares, and look for time and sales if that number shows up. And if it won't, you know that the guy is just bullshitting, saying he's real trading, but he's just paper trading. They don't want spread the word on that one too. That's good. Ask the chat room operator to trade an odd number so that you can see it in the tape and say, trade it. Tell me when you put the trade on. You say, okay, 118 shares now. And if they're really trading, you'll see 118 or whatever, like 50 and 68 or whatever, 118 add up in the tape. So word of the wise. All right, let's see what else. This dang phone's not back to life. Well, folks, we have just a few minutes left. I wanted to thank Jeff Gibby and the team at MetaStock for putting these shindigs on. They're really good, right? I enjoy working with Jeff and the team, and it's a great platform. Really, the charts are great. So there's no excuse for not winning in trade, but you have to learn this stuff, right? It's hard to learn, and that you won't see this stuff in articles. You won't see it in books. I do publish my articles now. I will start again with a Trading on Momentum column and technical analysis of stocksandcommodities.com, traders.com. I've written 104 articles for them. You can join them as a member and download them all and look for new ones. But do that in conjunction with MetaStock and you'll be in good shape. What else? Other questions? Yeah, I can see the chat. Any other questions or tickers that you want me to pull up? Yeah, I'm reading the chat too. See, Carlos had American. Let me know. Anyway, so the other big thing is don't trade, or how to say, it's all about leverage and size. So if you do insist on trading something, trade small size. Say if you normally trade 300 shares, only trade 100 shares, something inside the previous day's range. That's a really good fix. That's what I had to do. It's like wearing a nicotine patch to quit smoking. You really want to trade inside range charts. There's a lot more of them, and you're impatient to trade, but trade smaller size on those. Save your bigger trades for things that are above the previous day's high, and also when the market's above the previous day's high. The other way to trade is things that are inverses, like UVIX and SOXS for when the market's down. SOXS is a really good instrument to trade. It's a short chip ETF. All right, well, I am about out of time, and my clock is still, my dang phone isn't back up, but was that helpful? I hope it was. It took me a long time to learn all this stuff, and you have my word, those are things that I actually learned that actually do work out for the most part. Not 100%, but very, very damn better than I ever saw anyone else or even myself do. So above the previous day's high. For day trades, make sure you're trading things that are liquid, at least 15, 20,000 shares a minute. Oh, my phone's back. Hey, just in the nick of time. So Jeff, we should be able to, can you give me a ring, Jeff? And I can hear you now. Got the power on here.
Thanks, Ken.
Can you call me on the phone for a sec?
Oh, yeah, sure.
I got it. It's back. Sorry for the hassle.
Just in case you're curious, you got a confused look on your face. Ken's audio is not working to hear us.
So give me a ring and I will answer and we'll be in business. Oh, there we go. Mr. Gibby, how you doing?
Hey, yeah, we can wrap up right there, Ken.
Hey, Norm, how you doing, man? Good to see friendly faces.
No, I can't hear Norm, but his mic's not on, so.
Hey, Norm. Good to see you, man. It's a familiar faces, yeah.
All right.
We're like a brotherhood of traders. We've been around forever together, right? So it's good. So Jeff, what's up? I don't see your. I see you, Norm. I don't see you.
Yeah. I think we're good to wrap. We put your web address in the chat. And
sure, it's day trading, and it's daytradinguniversity.com. So I've been running Trade Master. I like Day Trading University better. So, all right, well, you guys take care now. Good to see you, Norm, and good to see you. And take care, guys.
Thanks, Ken. Very good.
It was fun. I really enjoyed it. Thanks. Appreciate it. Yeah, you guys are aces. So thanks for working with y'all.
It's great to have you back.
You
All
too.
right.
Thanks. Take care. Bye.
Bye.
That was fun.
All right, let's go ahead. That was sometimes you have very little technical issues, and sometimes it just rains technical issues. So with that being said, that was a lot of fun. Norm, I'm going to go ahead and turn off your camera for just a minute, and we'll come back to you in just a second. Greg, can I hear you? Wait. Hold on. Greg, I'm not hearing you. Maybe this is a GoToWebinar issue. Man, this got fun. Here, let me make me the presenter real quick.
Jeff, can you hear me now?
Okay, I can hear you now.
I just did my mic, and I think I'm broadcasting now. Can you hear me, Jeff?
Yes,
Jeff.
I can hear you.
Okay, but now I can't hear you. Hope it's doing very strange.
Hold on.
This may in fact be a GoToWebinar meltdown. We apologize, folks, while we're trying to get our business together. Currently, I can see that I'm broadcasting. I can see that Jeff is broadcasting, but Jeff cannot hear me. Can you hear me, Jeff?
I can hear you. I can hear you.
And Norm is just sitting patiently on the sides until we work all this out. Thank you, Norm, so much for your patience.
Yeah, I can hear you, Greg, and I am going to just proceed. So from a perspective of that, I want to say thank you to Ken. That was.
Jeff, I'm going to guess that people can hear and it's just me. So go ahead and proceed, I think. I'm just working on some.
TJ says that was great info. Barry says that was very helpful. Neil says he misses Saturday mornings with Ken. TH says thank you. If you're listening in the audience and you can hear me, put it in the chat. That'll make me feel a little bit better. At least it's okay if Greg can't hear me. He doesn't need to hear me, but it is important that you guys hear me. So if you can hear me, let me know.
Jeff, I can hear you now.
Okay, cool.
Okay, I think.
Yeah,
I'm sorry to interrupt. I apologize. I couldn't hear what you were saying, so I don't know if I was interrupting. I apologize. And again, apologies to everyone who's waiting patiently on the sidelines.
Yeah.
I can hear you. You can hear me. So apparently the world can hear both of us.
Let's just do a prize.
Let's just do that. Because what could possibly go wrong with that?
Yeah.
Wow.
I got lots of prizes left.
Man, I have to say, Ken was quite the trooper dealing with all that.
Yeah, no kidding. Like, yeah. Not only did like his charts crash, his audio, we got it working so we could hear him, but then he couldn't hear us. That was, sometimes you don't have any technical issues and sometimes you get them all. And I don't think anything of that was his fault.
I assume Norm has submitted a written statement that there will be no problems during his presentation. I assume we have that sort of guarantee.
I think Ken took all the problems for Norm. So
okay.
Let's give away a prize.
Let's do it.
Silas Peters prize. We're going to give away the Price Action Weekly Playbook by Silas Peters. It's a $997 value. It's weekly price action alerts. You'll receive all the top trades of the week so you can avoid the hours of research that Silas is going to do for you. And what I need from you, you know what I need. I need a number. I need a random number. And the number, just to give you the range, is anywhere between 1 and 9,065.
Okay, according to Google Random Generator, that number would be 2,233. 2,233. And again,
Frank,
just pull that up. Do take some time to visit daytradinguniversity.com. Follow up with Kim, who we have to say didn't get quite the opportunity he could have today because of the technical issues.
He was a trooper, though.
Wow,
oh my gosh.
Telling you what.
All right, so that's all good to go. Let's kind of move on. Greg, thank you very much for the assist.
Thank you, and break a leg, and I'll be here maybe if things go right.
All right. Norm, let's make sure we can hear you now. Norm Hallett is our next guest, our next presenter, and we did have his audio on. I'm going to send him an unmute request right now. I'm going to also unmute his camera.
Me.
Woo! we have.
I was hoping to see your daughter and to do a couple of jokes.
I got a joke for you. Look, I got a box of them. You want one for real? Here we go. What has 1,000 ears and cannot hear?
1,000 ears and cannot hear. I don't know.
Oh, it's not a good joke. A cornfield.
No, it's typical of the quality. It's very good. But your daughter, she's got the pan face. You know, she's got.
Oh, right. Yeah. So, yeah. Yeah, she does great. Those are a lot of fun. For if anybody's my Facebook friend, once in a while we'll do a story, and I'll just tell my daughter a dad joke. It's hilarious. We only put them up as stories though because we don't want to go viral. All right, Norm, let's go ahead and do this. Let me make you the presenter. Norm has been a big friend of MetaStock. How many times have you spoke for one of our conferences? It's been
2 or 3 times at least. See what my office looks like? This is what it looks like when you're in the final stages of writing a book and the research that you have to do. So not usually like this, but I did want to be honest with everybody, you know?
Hey, it doesn't look too bad to me. It looks like the office of somebody that actually does work.
That's right.
Well, I can see your presentation.
Can you see that there? Can you see that okay?
Mm-hmm.
Hey, I want to say something about MetaStock before I start.
Okay.
Because you know, I work with a lot of traders on different platforms, and the one thing that is very common when I hear they're working with MetaStock is that it's easy to get started, you know, to create a chart and start trading. And I think that's a really important thing, because I think once you get going, then that inspires you to do more things and put on more indicators and so on. But I thought that was a very, very common thread that runs through the people when I ask them what they're trading, or when I work with them one-on-one. I'm always happy when they say they're working with MetaStock, because I know that they've probably already gotten going and have some experience. I wanted to give you that.
Oh, I appreciate that, Ken. Or Norm. We're a little flaccid over here. I'm just going to get out of the way. I'm going to let you go. Thank you for joining us today. It's great to have you.
Well, thanks. So hi to the daughter. She's the star of that show.
Yeah, for sure.
Okay, listen, everybody. I know you've been listening to. I saw the end of Ken with charts, and you know that's one end of trading that's very important. You know, whenever I do stage work with the expos and so on, I always ask the audience, how important is the mental and emotional piece? And I always get 90%, and then somebody who's nuts will say 99%. Some will say 50%, but it's always 50 or above, mostly in the 90 range. So I know that there is an appreciation for the mental part of trading. But the sad part is that I think because it says something about you and your vision of yourself, that I would say that 90% of traders do little or nothing for the mental part of trading, even though it is an equal key to success. And you know, they say that 85–90% of traders fail, and that's an accurate figure for most studies that I've seen. And I can tell you that 80 or 90% do nothing about the mental and emotional. I think those two pieces pretty much go together. So I'm here to give you 2 steps to eliminate the fear of losing, revenge trading, lack of patience, hesitation to pull the trigger, strength to take your losses, whatever it is. And at the end, I'm going to offer you something for $197 that could literally change everything for you in this status. So I want you to stay to the end. It's something that everybody needs. I know I need it, and I know every successful trader that went through all the gamut. The last hurdle seemed to be that mental and emotional piece. Look, you know you have the strength and the mental knowledge to put up a chart, identify trends, so on, but somehow it's not working. And all of these things, whether it's fear of losing, revenge trading, lack of patience, it can all be fixed with the same process. And that process is working with your subconscious mind. And I'm going to show you how to do that and why it's important, and where the science is behind it, so that maybe I can take you by the shoulders and shake you a little bit to have you at least try it and see it work. It doesn't take long for what I'm about to show you to take effect. So if I can just get you to do it for a short time, a week, a couple of weeks, you'll see the benefits almost right away, because the difference between break even and making a little bit of money, that little bit of money compounding can do very well. Now, if you get really good at it, you really can start taking leaps and bounds. So let's get going. This is a book that I've written on trading plans, and I show it to you just because if you didn't, you know, as Ken accused many of us, I do trade, and I have built many trading plans. I used to do that exclusively for institutional traders as well as retail traders. I've written several books and industry papers. This is one I think that still exists on Amazon. Some have been written about me. This particular one was written by somebody who used to work for me. I think you know Bryce, don't you? Probably know Bryce. He said, you know, all of your 4-minute drill for traders, I did almost 208 4-minute drill for traders. I did it for every Saturday for 4 years, where I would just go right between the eyes and give you the truth about what it really takes to win. Not just the chart, but you and how you have to position your mental state. And this is a book that quotes me in those, went through all of my videos and made a book out of it. That's also, I think, on Amazon. This was actually one of those expo presentations. Whoever ran the expo filmed it and is selling it for your pleasure. And here's what that looks like when I did my 4-minute drill for traders. Looks like I went a little OT, 9 minutes, but I was on a cruise ship one time about 5 years ago, and somebody said to me, I was wearing the black t-shirt like this. It was a piano bar. The guy was playing the piano, and I was sitting around the piano. He said, "You're Norman Hallett. You do the 4-minute drill." Recognized I did so many of them that it became pretty popular and got me on the map. I did work for Payne Weber. I did before Payne Weber in the 80s. I ran one of the largest option firms in the country, and that's where I learned about trading plans. I was responsible for their performance, and I realized very early that it was simplicity that wins in trading. Too many hoops, too many resistances to taking a trade you're much better off knowing how to manage a trade than starting to hesitate to get in a trade. Yes, getting in is important, but you need to test early triggers. That's another discussion, but I learned all of that at the option firm, and I brought that over to Payne Weber and was a commodity trading advisor for them, managing millions for clients, of which I earned 20% of what I created in profit, which was a really good time at the time. But there was a selling part of it that I really didn't like. I wasn't really good on the phone. You know, in the evening, I had to come in and convince some of the clients that they should. Yeah, I didn't like that part. So I went out on my own. I started Hallett Commodities, which was a clearing firm, and started managing as a commodity trading advisor in my own firm. That leads me to what I felt was the most important thing when I talked with traders about trading, and that is the mental issue. 2000, I started the Disciplined Trader, so it's now almost 25 years where I exclusively dealt with traders and their mental piece, because that was the winning piece. And it was and it still is very rewarding to see somebody turn around on a dime. Their struggle to success because they get the mental part straight. And it's understanding the science behind the mental part that has us type A's. I mean, about a third of us are former engineers. I know that from those hand raising at the expos. We need proof. We need a reason. And I'm going to give it to you today to get you serious about being responsible as far as the mental piece. It's not about getting a better trading system. It's about getting a better you, a more responsible you, and a more predictable you, where you take the trades where you should and leave those go when you shouldn't. So let's get into the presentation. I want to talk just a second about Tisha, my wife, who turned me around. I was trading, and when I was trading after the option firms and after Payne Weber, I traded on my own. It was a lot of pressure because I was used to living on the high life, and here I had a big salary, and now I had nothing. And so I started on my own, and there was a lot of stress. Well, she could tell where I was going as far as whether I had a good or bad day, how I left the office. It shouldn't be like that. So she sat me down. My wife is and was and still is one of the most recognized subconscious trainers in the world. And she has helped everything from professional basketball players to Olympic athletes, a lot of athletes, because they can get serious really fast. And that's what you need. I need you to get serious about your trading. She's recognized as an innovator in the field of subconscious training, over 32 years of private practice. She's developed several breakthrough processes and tools. In the 80s, while I was doing the option thing, she developed something called Fast Start, accelerated learning program, study habits, memories for students, still being used to this day. And since 2000, I brought her into the system here. She's focused primarily on helping stock, futures, Forex, option traders to be disciplined to follow their plan. The Disciplined Trader Mastery Program is something that we offer. I'm not going to offer you that today. We're going to offer you something even more direct and even more capable of turning you around quickly. Okay, so the other credentials, I listed some of them here. Believe me, all you got to do is Google it, you'll find out. Here is a picture of what it's all about in your mind. The conscious mind is the top of the iceberg. We all know that 90% of the iceberg is underwater. At least the Titanic knew that, but wasn't responsible enough to do anything about it. The bottom here. This is the subconscious mind. Is the conscious mind, the voice that talks to you in your head. That voice is your conscious mind. It's telling you, should I take the trade? I just lost a couple of times before. Maybe my system, and maybe this is not a good day. I hate to lose another one. I'm going to hit my limit for the day. Should I take the trade? Should I wait for the perfect trade? The conscious mind is always talking to you. It's your discussion. But it is the subconscious mind that is the basis for your decision. It's the subconscious mind that makes your decision. So that when your conscious mind is done discussing this with you, the movement that you take, the action that you take, is based on what your subconscious mind believes is true for you. And I'm going to show you the science on that in a second. So that's really where you want. So when somebody says, well, I can watch somebody trade, I can interview them, watch them, I know exactly what's in their subconscious mind. I don't listen to what they're saying to me. Well, I take a trade here and I want to see how you act. I want to see how you perform, where you take action. That will tell me exactly what your subconscious mind believes is true for you. You see, you've submitted thought to your subconscious mind. The conscious mind part does commit thought energy to your subconscious mind. And if you have many like thoughts, I'm not sure trading is for me, maybe I shouldn't do that, I don't know if I should refund, those doubtful thoughts are called neural pathways. And those neural pathways, enough like energy pathways, and thought is energy. And if you don't believe that, there's really nothing I can do other than say, check the science. Thought is energy. And as you create thoughts, multiple thoughts in the same direction will create a neural net. And that neural net will guide you so that if you have negative thoughts about your successful possibilities in trading, when you have a trade to take, your conscious mind will discuss it, but will always make the decision based on what you've already input without sometimes even knowing it. Now, here is a picture. This is scientists at the Cold Spring Harbor Laboratory in New York and announced today, was about 10 years ago, that they discovered a new neural circuit linking deep fears with the area of the brainstem that controls behavior. That content is not as important as this picture for us, because these neural pathways, this is a picture of thought energy. So whatever doubt you had before, you can throw it out the window. This is thought energy. These are thought energies with the same literal content in maybe different dimensions. I'm not sure if I'm a great trader. I just lost. I'm not sure if I should do it. Should I? And you start repeating history yourself. This is elements of doubt, so that when you have a fear taking the next trade, hesitation to pull the trigger, you can rest assured that this neural net that you created is the cause of your hesitation. And when you hesitate to take a trade, what happens is the market, and they have a decent system, the market will move in your direction. You'll take it late, which increases your risk and decreases your profit potential, and you won't have the success that you had designed before you decided to start in this game of trading. Okay, so you need to get serious about what you put in your mind. Now, with all of these like thoughts, and that create a neural pathway, that you've done it with negative thoughts, and this is controlling you, say, in your hesitation to pull the trigger. How do you fix it? Well, how you fix it is to create a neural net that is stronger, more recent, and larger than this neural net, and this will start to atrophy. So what I'm saying is that if you were to listen, say, to one of our 7 or 8 minute meditations, and the meditation, say, on strength to pull the trigger, would sound something like you would take, and I'm not talking about, a meditation where you're kind of going down and you're walking in a forest and there's birds tweeting and ocean sounds. No, I'm talking, take a few deep breaths, sit there before you start trading, close your eyes and listen to my wife, Tisha, give you the exact well-constructed suggestions, and they need to be the way these sentences and what she says, and that you hear, that when they're constructed in the right way, you can get almost a speed train to the neural net that you're budding and want to expand. So when you sit there before you start trading and you take a deep breath and you turn on the 7-minute meditation, you'll hear something like, I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. When my trading plan gives me a signal, a signal to take a trade from my tested trading plan, I take it immediately, because I know that over time, fast action will serve me as a wise and disciplined trader. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. Okay, there was all positive comments in there. One attacked the situation that you seem to be having trouble with, and you just sit there and listen to 5 or 6 variations of the same statement with laced in. That's our favorite expression. I'm a wise and disciplined trader. Wisdom is much better than being smart. We're all smart. We're smart to be here. Okay, I'm going to assume that. I know that that's usually the case. But it's the wisdom. It's the wisdom to do the right thing at the right time. That's not smart. That's wise. So I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. I understand that when I take my trade immediately after the stimulus of my trading plan gives it to me, I know that will benefit me in the short and long term. I'm a wise and disciplined trader. I do the things that a wise and disciplined trader. So you're going to sit there for 6 or 7 minutes, and you're going to listen and just in a lightly meditative. You don't have to be a professional. When my wife gave me this in the beginning, I said, I can't. I'm not a meditator, and I'm ashamed. I'm kind of getting into it now, but to me, I'm kind of a ADD guy. I probably haven't been diagnosed, but I'm probably on the spectrum somewhere. I can't sit there for 20 minutes walking down steps and listen to birds. Give it to me. Tell me what I need to do. I'll do it in 7 minutes. I can do, and I'm telling you, it changed everything for me. It changes everything for people that are serious about this. So this is an actual picture of how it works. This is another close-up. It's more of a cellular view of the same thing. Here's the neural pathways. Very, very interesting, right? These are the thoughts. I'm not sure I can do it. I hate the markets. They took my trade. The professionals took my stuff. I shouldn't have. I'm pissed now. I'm going to get back. And this is how revenge trading starts. I got to get to my goal. I don't have much time. And now you have a neural net that wants you to do things recklessly because you've justified it with some logic that prevents you from doing the right thing. So you wind up revenge trading, which is the worst thing I think that you can do. That's how most blowouts, a lot of blowouts accounts happened. Okay. In any event, but this is another video. This is another photograph of what it looks like. It is a close-up of a neural net, okay? This is what controls. So what you're thinking in your head has nothing to do with the way you act, other than give you the options and discuss it with yourself. But the way you actually press the button or not press the mouse is based on what you fed your mind. It's time to feed it the right stuff. So it's good to identify, are you revenge trading? Are you fear of losing, which is a very big one? In fact, things like the fear of losing is one that if you can turn that around, and you can, it's like dominoes. All of a sudden, the thing that you thought like hesitation to pull the trigger, it blocks, it falls away like a domino. So it's important for you to sit down and analyze yourself and come up with what you believe is the, we have sessions on all of them. So, you know, you can do them individually. How many times does it take for 7 minute, 8 minute trade? I think the longest one is 10 minutes. How long, how many times do you have to listen to it? How about once a day for 2 weeks? Even the hardest head. So before you start trading, take the subconscious training and start to go. Now, it may not have a great effect the first time, but keep taking the trading. You know, by the fifth day you take it, you're going to start doing more good than bad. You'll slip and do. By the 10th day, if you're doing this consistently, even the slipping stops. Okay, so you know, listen, there's negative thoughts happening all the time. You hear all the time about losing traders. You go into a trade room and you hear somebody discussing something which is not what you're doing. You start trading. You start doubting your own plan. And you start feeding your mind the crap again. So all you need to do is just every day, you know, is just refresh that neural net. Okay, that's how it works. Okay, now I'm going to show you a second methodology, and this methodology is called the emotional freedom technique. We use both when we work with traders, and in our recordings, in the recording of what I'm going to offer you is a recording of $1,000 5-week extravaganza that we did with traders that paid $9.97, and we did it with all the little boxes, but I don't have time to do it this year, so I'm going to offer you the recording of one of these where you'll get all the same information. The only thing you'll have to do it on your own, and you won't be meeting with us every week. You can do it as fast or as slow as you can. And one of the things that we use and that you'll have access to is something called the emotional freedom technique. It's also known as the tapping solution. It's more of an Eastern philosophy, meaning that it works on the same principles that acupuncture and acupressure works. In that principle, very simply put, you have meridians in your body. And again, we're all energy. I don't want to go through that because it's out there, and it took me a while to have it sink into my head. What do you mean, we're all energy? Yeah, we're all energy. We're all vibration. You know, your desk is not really solid, but everything's tight. So all the cells are tight and the vibration is very tight. That's why it's solid. It's all a matter of how we're all vibrating in a certain way. And when these vibrations are blocked, and they get blocked in these areas that I'm talking about, where the acupuncturist will put in a needle, or the acupressure person, the meridians. And when that's blocked, it stops the flow, and you don't think clearly, you don't act responsibly sometimes, because you're not able to process thought energy the way you can. And that's really what it's all about in simple form. You can look into it yourself, but I will say right up front that the emotional freedom technique is the go-to therapy for post-traumatic stress disorder, and the chaos in your brain, and the trauma that's caused by post-traumatic stress disorder is probably one of the toughest things to unwind and deal with. And the emotional freedom technique is the go-to therapy for that. And I can, if we had a longer presentation, I can show you all the studies. You can look this up. This is, and so what I'm saying, listen, I'm not comparing our traumas of having a bad trading day with the traumas of a soldier coming back from war, but I am saying that if it works for them, it can work for us, okay? And so we use that, and it's almost an emergency thing. You can almost get an immediate turnaround in the way you think, from hesitation to confidence to pull the trigger, etc. Even with one session. Most of the time 2 or 3, but I have seen it too many times to say that it's not, that it's to tell you that it's possible to do that. This is exactly what it looks like. These are the 8 top of the head, right in front of the eyebrows, the temples, under the eyelid, that space nowhere land between the nose and the top lip, under the chin, the collarbone, and under the arm, my favorite place to tap. And what you're going to do is you're going to take your fingers, the tips of your fingers, and you're going to tap these areas. And when you tap these areas, Tisha, in the video that you'll have, Tisha will make a statement based on what she had discussed with you, or in this case, you've already identified and gone to the tapping session that helps the particular malady that you're having in trading. And she will repeat a statement, and she will make a statement, and then in that video leave you 5 seconds to repeat that statement that she makes. And while you're repeating what she's saying, she's moving through this tapping. She'll start at the top. She'll start at here, usually at the eyebrow, and have you repeat something. Then she'll move to the side of the eye. She'll make a statement and have you repeat it. And by repeating it, and the process really works, you come out with what's bothering you first, and then you tap out the energy that's hurting you, and tap in the energy that's going to serve you. So it's like 2 rounds with each one. She'll do a couple of rounds with you. It's scientific. It sounds crazy to some people, but until you realize that we are just energy bags. You look like a Star Trek guy. But we're carbon bags, and I think that's what they call us on Star Trek. Well, it's even more than that. We're energy bags. So by moving through the meridians and making statements that correct your situation becomes the solution. Now, it is an Eastern Western science of separating emotion from thought, because for every, I'm assuming that you can see me on the video here. For every thought, there is an emotion. You can't have a thought without an emotion, and you can't have an emotion without a thought. So when you're angry, or when you're doing things that you shouldn't be doing, say revenge trading, you have a thought, and you have energy around that thought, having you take action. When you do this tapping, it separates the emotion from the thought. And so if all of a sudden you lose the emotion, or you can't, many times, and I've seen this a dozen times, more than that, you can't even remember what you're training on. You can't even remember why you even tapped. I know that sounds crazy, but until you experience it, you won't believe it. Now that's a minor, maybe 10% of the situations. It takes a few, but it doesn't take many. You're separating the thought, and it doesn't have to be complete. Sometimes you have the thought and you say it's not important to me, and you go on. But separating the thought from emotion stops you from doing the wrong thing. So if you had access to this training, to this kind of thought emotion separation on the issue that's bothering you, and you also had access to subconscious trainings so that you can build a neural net that serves you, that supplants the one that was destroying you. If you have both of those things, now you have the solution to the at least equal component to successful trading. I'm half sweating, and I got the goosebumps, because I'm just imagining some of the things that I've seen. Again, maybe this is from my own transformation 25 years ago, but I've seen it. I saw it last week again. It works. It's science. You just have to accept it and go forward. This is what one of the videos looks like. There's a session on pulling the trigger without hesitation, overcoming thoughts of fear and greed, trading to make money mindset. This is an interesting one. This is one we created because you got to frame what you're doing as a business. This is not a joke. You're not trying, or you're not giving trading a shot. You're not, let's see what happens. I'm not sure if no, you got to go in this saying this is going to be a consistent stream of income. And I know that's multiple streams of income, and it may wind up being the only stream of income I need when I get it right. You've got to treat it as a business. And this right here is a session. Trading to Make Money Mindset really is has that theme in mind, trading as a business. For instance, when you take a loss or 2 losses in a row, that can hurt your enthusiasm and your ability to take the next great setup. You got to keep going, okay, in trading. You can't, and so when if you're in business, and I put an ad on YouTube or something to have somebody grab one of my free reports, and nobody answers, okay, I've just wasted $500 or $1,000. I'm not going to lament on that, because what I've learned is that I shouldn't do that anymore. Okay, I'm not going down that path. Now I'm going to try. I'll try LinkedIn and see if I can get responsible traders there to understand the importance of the mental and emotional. So when you're trading, if you make a mistake, you can't just you can't lament and say, I don't know if I should be in business. I don't know. No, it's just something you don't want to do again. Okay, you analyze your trade. If you made a mistake, admit it and go on. If you followed your system and you lost in the trade, that is a check mark. You've done the right thing. You happen to have lost. Now, if you have, of course, reasonable risk control, you can lose several times. And as long as you've followed your tested trading plan, that is a check mark. That's a pat on the back. That's a celebration. Okay? You've got to run your trading as a business. Okay? And you've got to frame it as a business. Losses are things to learn by. Okay? You may say to me, that's easy to say. It's easy to say. Well, yes, it's easy to say when you got it in your head that it's the truth. If you have it, listen, if you're trading by the seat of your pants, I can't do anything for you. But if you have a responsible guru and you have a tested trading plan, this is the way to go. You have to pat yourself on the back. Winning or losing, the only judgment is, did I follow my trading plan? Okay, that's what session 3 is about. I love that session. Sustaining discipline. This is kind of a potpourri of different suggestions. I like to suggest that traders use it, and you're going to have lifetime access to all of these. The sustaining discipline is something that you'll have access to, or something that really maintains all of the neural nets that you've built, whether you were working on patience or pulling the trigger without hesitation. So you got one on patience. Coping with losses. That's different from overcoming a loss. Okay, I mean, taking your losses, moving your stops around. That's an issue. So we've got a training for that. Okay, if you're moving your stops around, that's an issue. That's usually a me issue. This is, I don't want to lose issue. I'm equating myself. A winning trade, I'm a good person. A losing trade, I'm a schmuck. That's not what it's all about. Okay, if you keep moving your stops, you're saying, I don't want to lose, and that's bad. Lose. I'm dying to lose. Dying to lose. If it's not going my way, lose. I'm ready to lose. You should be excited about losing when it's following your trading plan. I know that sounds maybe crazy to some, especially new people, and then there's coping with losses. Let's say you follow your trading plan and you took 3 trades and they all lost. That was against the odds and followed. I mean, you can't go to sleep saying, I hope my trading plan still works. The market is changing. Maybe I should trade. No. Coping with losses just says, actually, some of it extends the time. Listen, any kind of, if I've got a trading plan that works 2 out of 3 times, having success, that's enough. If it's tested, you can have 3 or 4 in a row. It happens. Doesn't happen often, but it happens. So coping with losses is different from taking your loss. Taking is the action when you're trading. Coping is afterwards. So we've got it broken down for you. Every trader is different. Okay. So I hope I'm shaking you a little bit, because I know that 90% of you have not done nothing like this for yourself, and likely are struggling with the winning part. Traders go from trading plan to trading plan to trading plan. Somehow I know that you're believing that's the issue, and it is the logical issue, but you've got to look in the mirror. You got to look in the mirror. Most of the trading plans that you had would have worked, some better than others. but it's, you know, and when you get one that works, experiment with another one, see if it works even better, but stick to trading plans that work and stick to being able to follow it, okay? So now you got two roads. That's the way I look right after my workout, that fanned lat spread. The left is just do nothing, you know, do nothing, and continue to hit yourself over the head with the iceberg, or commit to change. I'm asking you to try it for $197 and experience what can happen, okay? And I think that I just think I'm just trying to make you break the mold, your mold about it's not me. You know, the person who admits weakness is the brave person. I mean, you all know that. You all know that. The person that says I'm sorry is the person that hangs on to an untruth. It's better than the person that hangs on to the untruth. Look, take the right road with me, the right-hand side. I'm going to show you that road right now. It's called Excel. Excel is a program we ran several times. We were running it once a year for a few years. This year, I'm writing a book. You saw what my office looked like, and you can probably see I'm kind of this is the way it looks on Friday. I usually take I take half of Saturday off, and I take Sunday off. But I got to put everything back, and because I'm done with all this research. But I'm writing a book on prop trading. But this Excel is a program that we ran for 3 sequences, and we're not doing it this year because I just don't have the time. So what I'm offering you today is the recording. We did it 3 times. One, I think, is the best of all of them. I'm giving you the recording for life of that session, of that 5-week session. And I urge you to take a few weeks to do it. Don't rush through it. Take the trainings. Look at how long you've been the way you are. It won't take long to trade, to change, but give it a couple of weeks. You can combine this 5 weeks into 2 weeks. You can, but if you do it slow and steady, even if you do it in 7 weeks, just do it in a relaxed way and see. Once you start doing it, you'll see the change, and that will motivate you to continue to go. It's a transformative, trader transformative shtick in 28 days, okay? And it's composed of 5 weekly meetings, of which you can do it as fast or as slow as you want. Again, you're getting the recordings of what I'm describing here. And you'll actually see the little boxes of people in this particular recording that you'll see, and you'll see what you'll see how that session goes. You'll get a copy of that recording of the session, besides having all of the elements to work with that I've just shown you in the first 40 minutes of this. And there are also worksheets. I just wanted to show you that in this weekly session, there are 5 of them. In this weekly session, we do a worksheet together to kind of bring out your issues. And each one brings out is about something different, but we work together in the worksheet. It's only an hour long, and then we prescribe to you an EFT session and or a subconscious training session for you to use. Okay, so these weekly meetings are important to just sit there. So watch the weekly meetings and pretend that you're in them. Okay, then you get to work with the proven assets between meetings. So when we were doing this live, we'd have a meeting, and every Tuesday, and then between that and the next Tuesday, we would ask you to work with the assets. We ask you to take a specific maybe 1 week we work on patience, which is probably, we get more testimonials, and you'll see it on the page. You'll see more testimonials on the lack of patience and turning that around than probably any other thing, maybe besides fear of losing. But each week we work on something different. So you can target, because you have the recording. We were laying it out week by week, but you actually have the advantage in the recording of going straight to the issue that's your shtick. Okay, so we're gonna do the weekly meeting, and then we're going to focus. Then we're going to prescribe to you the subconscious training that we want you to work on, and the EFT session that we want you to use. Okay, so you're going to do that every day. I mean, sometimes we only subscribe to the subconscious training, sometimes just the EFT session, sometimes both, but maximum. The EFT training, incidentally, is about 5 minutes. So even if we ask you to do both, I'm asking you to take 14 minutes a day to solve this problem. And I'm not asking you to dig a ditch. I'm asking you to sit there in a relaxed way, close your eyes and not fall. You won't fall asleep, believe me, you'll be energized. Okay, so that's the way it works. Meetings, and then you use your assets between meetings. And then there's the piece of accountability. That I'm not giving you. That's an important piece to some degree, to a large degree. But maybe you want to ask your significant other, or maybe you want to just buckle down and be accountable in a log and check each time you do it, so that you're doing it every day. You're doing the subconscious trainings. You're doing the EFT sessions. You want to be accountable. If you want to be accountable yourself, get a friend to call you every day after trading. Did you do the subconscious training? You got to be serious. We were doing that for you, okay? Not that we call you every day, but you were being accountable to us, because you show up at the weekly meetings and we'd ask you some pretty tough questions to make sure that we know that you were listening to the sessions. And describe one suggestion that you got from. Do it. Don't fake yourself out. Okay, we used to call it faking out. Do they still use that? Jeff, I don't know. But here's what it looks like when you get into the program, okay? When you get into the trading, to Excel, this is where you'll log in. Now, I see here's week 1 and week 2. This is just a snapshot. There's 5 weeks. And so each week has the recording, okay? So you'll first start the recording. Now, it's the last element here in this. It should be the first, but when we were doing it, we were having a session and then we would record it and put it on, so we tagged it on live. But here are your elements. So look at the recording first. You know, imagine that you're within the group, do the work, it's the sheet that we talk about, which is important to really get a fix on why we're doing this. You need, listen, we're traders. We need logical reasons to do things. This is why. This really bulks the science behind what we're doing. And then we'll say, hey, do the subconscious training on pull the trigger without hesitation. And here's the worksheet. You saw the first one that I showed you in the last slide, a couple of slides ago, where I showed you the worksheet behind the first meeting, and where we had the computer. And in that, here's the worksheet we use. So you'll download the worksheet and you'll do the session just like you were there live. And here's the subconscious training. Here's the EFT. Hesitation to pull the trigger EFT session. So in this particular case, we subscribed both of these to get you going. We really wanted to get you to a fast start, okay? And so in this is now week 2. There's the recording. It's not enough room here, but we had the recording. You watch the recording first, and then this one we didn't have a worksheet, but I gave you a special report on the Creator's Guide to Dominating Fear of Losing. I want you to read the report so that you get some science behind what you're doing. And then go ahead and take the subconscious training every day for 7 or 8 or 10 minutes, and take the EFT session on overcoming thoughts of fear and greed. So you see what we're doing here. You're going to watch the video, and then every day for the rest of the week, the 5 days in the middle of the week, you're going to take these sessions. Okay, and you're going to act as if you're doing it, and you're going to have it at 20% of the price with the same value as what was offered before. Okay, so this is very, very, we are the best at this. You can ask any of the traders in this entire symposium, who is the best at the mental and emotional piece. They will all tell you. I think they will all tell you, let's just say 90%, that I can be assured of, will tell you that it's us. We've been doing this since 2000. We got it down. If you're ready to change, this is going to be your answer, okay? So Norman and Tisha, and I took these from, hopefully you can't read his name, but I have permission to, but not Tom's last name. This is the actual email that I got. Norman and Tisha, I'm very grateful for your evolutionary development that I've experienced through your mentorship, through your Excel workshop. Norman and Tisha provided me with the cutting edge advantage. I need to turn all the frustration from years of heartache and disappointing results into professional strategy that I'm now implementing consistently as a wise, disciplined. So you can tell he took the input from the subconscious training. Wise, disciplined, patient, and profitable trader, averaging between 150 and 200 a day. I got him to ask for a little bit more at the end, but Tom, this is the kind of turnaround that I'm offering to you. The evolution I've achieved by attending an Excel workshop have molded my trading abilities from haphazard activities to specific systemized steps that when executed with discipline are now spelling out consistent profit. I'm so happy to share with you that I'm well on the road to becoming a truly wise and disciplined professional trader. I'm getting goosebumps again just because I got a lot of energy. I just came back from a trip from 9 days helping my brother out with something in Egypt. And I should have jet lag, but I don't when I'm making this presentation. I'm excited to help you if you're ready to be helped. You got to be ready. Okay, here's another email that we got. Often traders getting wrapped up in indicators, patterns, moving averages, time frames, and the like to try to tweak their process ad nauseum. The true holy grail of trading is the mental component. This 5-week Excel course has helped me develop the daily routine designed to improve my confidence and hone my ability to deal with losses. Subconscious training, EFT exercises have been immensely helpful. Any trader who does not work hard on their mental approach is doomed to failure, and Norman and Tisha have the exact program you need to hone this key area of your trading performance. And that's Lee from Arkansas. So I still talk to him. This was written 2 years ago, but I just wanted to, maybe I cherry picked them. Okay, I cherry picked some of them, but I wanted a complete description on some, but they all have pieces of what you're reading here. There's another one. I believe that developing the mindset of the professional trader is a holy grail of trading, not only of numerous trading plans out there. Having worked with Norman and Tisha in the past, I know that they do an excellent job of addressing the mental and emotional issues many traders struggle with. We were working privately with Andrew, and then I said, hey, just go to Excel. It's uniform, and it'll get you where you want to go in maximum 5 weeks. If you want to accelerate it, we can accelerate it with our private sessions, but get on the track, get on the train. So when they announced their Excel program, I knew they would deliver, and I noticed significant improvement in my trading performance in only a few weeks. I highly recommend you to join Excel, especially if you believe that you're getting it out in your own way and it's not your trading plan. A lack of better trading plan is holding you back from success. And that's Andrew from California. I think I hope I'm getting my point across. This is a $997 program, and we had a limit of 15 people, and we sold out every one of them. We had a waiting list for the last one, but I want to say it's because, well, listen, we have a particular reputation out there for some of the work we've done with a Disciplined Trader Mastery program that we used to have on 12 CDs in the day when CDs were cool, but $997 for the transformations that I'm talking about is peanuts. Okay, it's peanuts. So I'm sorry, an American Top Trader what's his name? I'm doing the same thing I did for him. I'm doing for you. It's the only two people I'm doing this for. I'm giving you the replay of Excel. I wish what's his name? Ken was still here. That was a thing I did for his group. And again, I wanted to redo it for you because of the success we're having with his people. So this is an ongoing thing. And I did it for them. I'm doing it for you. The replay of Excel. I'm giving you 80% off. It's just $197. Okay. And you're going to get 5 weeks the way I just showed it to you. And, I don't know, listen, it's easy to say no to things. Sometimes it's hard to say yes because what you're saying is I'm the problem, I'm the issue. But what you're also saying is I'm professional enough to fix that issue, to recognize the issue and do something about it. And they're not asking me to pay even $1,000. They're asking me to pay $197. The doubt you should have is their value to it for $197. I'm telling you, and I think that Ken before me will tell you, and everybody from MetaStock will tell you the same thing. We know what we're doing, and we want to do it for you. Okay, all you have to do is go to thedisciplinedtrader.com/Excel and use the coupon code SOLUTION. Okay, it's going to be your solution as it's been for others. Thedisciplinedtrader.com/Excel. Okay, the coupon code SOLUTION. So that is my presentation proper. If you've got any questions about any of these work, you've got some scientific questions for me, you think I slipped up on something, let me know. Let me justify myself. Let me correct myself if you're right. I'm always open to correction. But if you've got issues and you have questions about how all of this works, make it happen. There's no guarantee. I'm not giving you any guarantees with this because I know it works. The guarantee is up to you. But look at the potential loss here, $197. I want you to do it. Okay. I want you to make this happen for yourself, and you're going to have lifetime access to this. Okay, so I appreciate you putting that in there. Jeff, if anybody has any questions, this would be the time. I'm not sure I can see the questions, but if you have any questions around this, or you'd like to compliment Jeff for having me, or you'd like to compliment me for being here, I'll take that too. Listen, I'm always looking for, hey, you did a good job. I'm honest, I'm a human being, you know. But I get a lot of energy around this, and it's not just from, I told you I was a lousy salesman. I probably still am. But, you know, with Payne Weber, this is why I walked out the door. You know, when I walked out the door that day, they said, Norman, you're making plenty of money, more than you ever made. Why are you walking out the door? I said, I hate the selling part. I said, they said, well, what if we reduce it? If I let you stop selling, then the other guy, no, I can't do it anymore. I just want to be the doer, not the seller. And so, you know, when the technology industry came in, and I started in 2000 online, that's when the data was rolling out on your screen. And then we got famous with our kit, with the Discipline Trader Mastery Kit, which had 12 CDs. That's really what put us on the map. And I started working with firms. I don't know if I ever really worked with, I think I must have over the years with most of the trading firms, including MetaStock. But I just want to impress on you again. Think back at what's important about trading. And listen, if you've bought more than 3 or 4 trading plans, and most of the people I bump into have bought 8 or 9 or 10, it's you. It's you. It's not the trading plan. I'm handing you the solution here that has worked for 9 out of 10 people. Now, if you're not going to try it because you're always the 10th person, I can understand that, and I wish you the very, very best. I do. But I think you're going to continue to have a tough time of it. Listen, it was tough for me. It took me years. I was married to the solution. I was literally married to the solution, and that's even worse. You know, I don't like, you know, when Tish and I've been married 44 years. When we get into an argument, and we don't have many, we don't, you know, as soon as any voice gets raised, my wife says, "You're raising your voice, okay?" But you know, you're right. You know, that's how stops it. You're right. You're right. You stop. You don't. You know. And so, come on, Norman, let me help you with it. Look, you told everybody else how to trade, and now you're trading on your own, and maybe we do need to stay in this gigantic house in Woodside, California, if you know Woodside. I was living right next to Joe Montana. It was going so well, and well, he lived up the block, up the hill, but you know, I had a lot to maintain, and I went from a big earning to nothing, but I knew I can do it. But the stress of having to perform hurt my production. My wife said, if you don't let me sit down, there's going to be an issue here with us. And so I sat down, I started listening. She was doing it live with me, doing the subconscious trains with me live. And I'm telling you, within weeks, so all of a sudden it evened out. And then I started to climb. And I'm telling you, I'm handing you over my wife's talent to do it for you. And I'm really honored to be able to do that. She is the best in the world at this. She's been on the cover of many psychological magazines. Just trust that you're making the right $197 decision if this at all sounds interesting to you. Okay, there seems to be no questions unless you see one, Jeff, but I appreciate you having me here.
There's a few, yeah.
Oh, okay, shoot.
Yeah. Let's see. Norman wants to know, this is very interesting. Do you happen to have this in French or Spanish?
Do I have it in what?
French or Spanish?
Oh, you know, that's a great, no, I don't, but I wish there was a way that I could suggest to you, but I guess the difference between 197 and what it's worth, 997, you can get an interpreter, yeah, but then you'd have to have somebody do the voice. My answer is no, and I'm sorry that I don't.
Bob said that was awesome, thank you. Tracy says, does this also go over the trading plan that you recommend? Thank you for the question, Tracy.
The trading plans that I recommend?
Correct, or the trading plan that you recommend.
Okay, the trading plan that I recommend, and it's an interesting that you asked for it. I recommend our trading plan. It's the other half of what we do. It's called the Loaded Gun Simple Trading Plan. Again, it's simplicity, and it infuses some of this mental stuff that I talked about. If you go to theirmoneyyourprofit.com, if you go to theirmoneyyourprofit.com, you can take a look there, and and you will see the trading plan that we offer. So if you do that, use the coupon code, if you, you see their money, that's the, but if you go to this disciplinetrader.com right here, the disciplinetrader.com, and go to the, where you ask me a question, you go to contact, click on the contact, not /Excel, but click on the disciplinetrader.com, and on the top bar, you'll see contact. Just send me a contact and I'll give you a nice discount on the Loaded Gun Simple Trading Plan. Just email me there, email me at the contact, and make sure I have your email, and I'll respond to you. And I can give you, I'll give you 50% off. This is, Jeff is, he's going to get angry at me. So I will let 50% off I can give you on that, on the Loaded Gun Simple Trading Plan. Any other questions?
That's it. We got to the end of them. Thank you, Norman.
And at perfect timing. Who's following me?
Jackie Munro. Jacqueline
Munro, another great. So stick around for Jackie. Thank you for having me.
Absolutely. Thanks for being here, Norm. Appreciate it. TheDisciplineTrader.com. We've got the links in the chat. Norm, thank you very much. I did find another dad joke that I was ready to read to you.
Go for it. Go for it.
This one I think Greg would particularly like as a photographer. What do you call a camera with a temper?
Camera with a short shot? I don't know.
A loose cannon.
I like it.
I do shoot cannon, so I did appreciate it.
You almost don't need your daughter, but I think you got to have that pan face and the sideways stuff. It's good stuff. It's good stuff. All right, man. Be well.
Thanks, Norm.
Thanks
See you
again.
next time. Okay, let me go ahead and do this. Show my screen. Greg, did you like that one?
I did enjoy that. Thank you for sharing the. I'm just glad I could stop holding my breath, and Norm got through the entire presentation without any technical difficulties.
Hey,
I don't want to jinx Jackie, but I'm sure she'll do the same.
We've been giving away prizes off that list all day long, and I wanted to do something a little bit different for the last prize.
All right.
This is the last prize, not only of the day, but of the entire mega conference.
That's true.
So it's going to be a big one. And I have a different way we're going to give it away. So this prize is going to be 3 months of MetaStock, our award-winning software program that's been rated #1 in its price category for 32 years in a row.
You don't say.
It's going to be MetaStock Zenith, so you get the real-time data that's very similar in quality to what you'd get if you had a Bloomberg subscription. They spend $1 billion on it. You can get that as well. I'm going to throw in 3 months of Learn MetaStock, which is a website that'll help you learn about MetaStock. It's not a MetaStock owned company. It's actually a separate company that all they do is teach people how to use MetaStock. And there's lots of training, and it's really a pretty cool website. So we're going to get you set up for that. I'm going to also give you 3 months of the Magic Trader add-on, which is a software Peter came in and talked about yesterday. I'm going to give you 3 months of the RMO ATM add-on that Rahul talked about. When was Rahul on? I don't know. All the days are blurred together.
I don't know. It's all a blur now. That's the Grand Slam, right? That's the big giveaway of the entire conference, right?
Mm-hmm. This is the biggest
a lot.
prize. Yeah.
Is it still more?
No,
Good.
that's yeah.
I think that's enough.
Yeah.
That's
So
enough.
how am I going to give it away? You might ask. I'm glad you asked.
I am asking, Jeff. How are you going to give that away?
I want to reward somebody for being here right now on basically 3 Eastern on a Saturday afternoon after we've already done 43 hours or so of presentations. So I'm going to go to the attendees list, and I'm just going to, right now we've got about 78 people that are logged in to go to webinar. And I'm going to start at the very top of this list right now.
Okay.
And then what I want you to do is just tell me when to stop. I'll tell you when I'm starting.
Tell me when to start.
I'm going.
Stop.
I only got to the B's. The winner is Bertrand P.
Bertrand.
Bertrand.
Bertrand, get it.
Yeah, okay, yeah. Let me copy that off here.
Do we know where Bertrand resides or anything else?
Don't, without kind of going in and looking him up. So.
Oh, okay. Well, we don't need to do that right now. But congratulations to Bertrand. That's a heck of a prize. just for being here.
Okay, and that is saved. All right, very cool. And thank you for being here. I hope it's been worthwhile for you. It's
It's been
such a
worthwhile
great
for me.
conference.
Oh, you mean Bertrand?
No, everybody.
Okay.
Including you, Greg. I'm glad you're here. It does
Thank
make it a little less lonely when I have somebody to kind of help
Thank
me
you.
with
On that
prizes.
note, I'll go ahead and bow out. And let you
Very
introduce-
good. We're going to go ahead and roll into the last presentation. All of the offers, all the MetaStock offers that we've had, is you can find at metastock.com/promo. We do have people working today, so if you want to talk to us, you can chat with us at metastock.com/saleschat. You can also give us a call at 800-882-3040. Yog says Rahul was on Tuesday. Thank you, Yogs. All right, very cool. Our next speaker is Jackie. I've got a picture of her right here. Jackie does a really, really good job. I love having her on here. I love kind of the style that she has and the personality that she has, and the style of slides that she brings are very, very nice as well. We've had her on the show. I think this is maybe her third or fourth time, and she always does a really, really good job. So let me go ahead and Jackie, let's bring you on. How are you doing?
I'm really well, thanks, Jeff. Thank you for having me here.
I also meant to say that I love your accent as well.
Oh, really? That's what everybody says. Often people can't pick it, and they say, "Am I English?"
Oh, yeah. No, I can tell it's Australian. Hopefully.
Okay, so I click share my screen.
Correct.
Okay. All right.
Now I can see the go to webinar screen.
So I just delete that, minimize it.
Yeah. You can minimize it, and then I assume your PowerPoint. Yeah. You can minimize that. It won't hurt anything if you minimize that. Now we can read your email, and now we can see your slides.
Okay, so I'll just get this started. Slideshow from beginning. Okay, can everybody see that?
Yes, we can.
Okay. So am I the last speaker, Jeff?
You are, yeah. You could even say, if you wanted to, that we saved the best for last.
Okay. All right. Okay.
But I will get out of your way. We can hear you. We can see your slides. Everything looks really good. And so I'm gonna get out of the way.
Okay. Lovely. All right. Okay. Thanks, Jeff, for having me here at this wonderful MetaStock event. And thank you, everybody, for hanging around for the last speaker. I'm going to try and really pack the information in here for you so you get a lot out of it. So let's just minimize this at the side. I think I just pressed that and get rid of that. Okay, so I'm going to be talking about understanding gold and the stock market in 2025. And with those areas of gold and silver, I'll be talking and touching on psychology, not as much as Norman was, but I'll be touching on psychology, mindset, strategies to use in the market, bonds, a little bit on Bitcoin, and a little bit on tokenization. So let's get started. And thank you very much for hanging around again. Okay, so a lot of people ask me, how did I make money in the markets? And my answer always is using multiple vehicles and understanding my psychology, being able to hang around when I've had a really bad trade and go back in, being able to live through the really tough times like 2000 and 2008 and staying actually in the market while everyone was selling at the bottom. So that's what you don't want to do, is sell at the bottom. If you want to get out at the top and take your profits at the top, or take even 75% and then buy more at that bottom ledger, that's great. But don't sell at the bottom. That's all I would say. Patience is a really big thing. Also have a plan. And as Norman was saying, your psychology is really important. And I'll get into exercise a little bit later. Okay, so what does it mean when I say to use different vehicles? So say, for example, I wanted to buy Tesla or NVIDIA. I could buy a small parcel of the stock. I could purchase options, and I could purchase ROM, that's the technology ETF. So what you're doing is effectively multiplying your returns in a massive way by incorporating various vehicles. Or you could build really a ladder of positions in focusing on a sector, say the tech sector. So pick a list of technology stocks and build a ladder of positions with those stocks. Or you could build a pyramid of positions. Say you wanted to focus on NVIDIA. So you would build, you'd go in an entry in NVIDIA stock at different entries. So you'd enter at one price, then the next day or the next week enter at another price, and so on and so on. So you have various positions in the market. So here's an example of Commonwealth Bank that I own in my portfolio in Australia. I went into the 300 shares when it was floated in 1996, and the full price was $6, and it was paid for in 2 tranches. So in the first tranche it was $4.45, and the balance was paid in the following year. So I got 300 shares. So after 2008 and the very big crash, a lot of the companies sent out share purchase plans, and Commonwealth Bank was just one of them. I mean, the other ones were, I know I got ones from NAB, I got ones from BHP and Rio Tinto. So this was brokerage free, and you could buy, $1,000 worth, $5,000 worth, $10,000, $50,000, $150,000 worth of these shares. So the offer closed in 2009, and I sent a check for $10,000, and the price of Commonwealth Bank at that time was around $26. Now the price, as at February 28, just day or two ago, yesterday, is $156.74. So you can see by staying in the market and just buying in, averaging in, what you can do with just one share. Okay, the best strategies to use to make money in the stock market. Just buy the stock, as I've just shown you. Or you can do option spreads or leaps, which I'll talk about a bit in a minute, or ETFs. Or you can use all 3 like I do. So if the market's going up, you could use a bull call debit spread, and this involves buying a call option, selling a call option at a higher strike price, and the maximum loss is limited to the initial debit paid, so you know exactly where you are when you enter this type of vehicle. So the advantages here, there's a higher probability of profit, it's a lower cost, and there's also limited risk. But I really want to point out that there's no single market secret to discover. There's no real holy grail, no single correct way to trade the markets. So I would suggest, stop trying to look for that genie in the bottle. The illusion of knowledge in the financial industry. Okay, I just want to touch on this for a moment. The pretty graphs, the fancy terminology, the unnecessary complex plans that an investment bank might come to your place and deliver to you and show you what the potential is you could make. Be very, very, nervous of that, because I had the experience of that actually happening, and the investment banker that came to our place was almost like a car salesman, like a salesman. And we took that up and we stayed with them for about 2 years or so. They charged $30,000 to manage our money, and we went backwards. That's what happened to us. And our buy and sell statements, I'd say, were about, in a folder, I kept them all, and it came to about 4 inches thick. So they were making a lot of money out of us through brokerage as well. So, I mean, what Warren Buffett says, if you've got 4th grade maths, that's all you need to be a good investor. So just keep that in mind. So investing, as I said, is for everybody. Everybody can do it. And I mean, you don't need $1 million to start with or 500,000 to start with. You just need to start and be disciplined by putting a little bit away every week. This is a few notable stats on Jackie's post. So the return on our portfolio that I kept for 2024 was 30.82%. These are some of the stocks that we've actually sold out of this year and pared down. This was Arista Networks, 86.29%, Taiwan Semiconductor, 48.6%, DigitalOcean, 29.35%, BlackRock, 29.63%. And here's an example of a ladder position in Dell. So I got people to buy it at different levels in the market, and these are their returns as we closed each level out. Bought Palantir last year for 23 and sold out at 112.82. It's a nice 390% return. And Tesla, we bought at 260 last year and we sold out at 328.50. So what do I need to know before I enter a trade? Okay, so you need to know the macro picture. What is actually happening in the economy? So would you say the economy is slowing now or growing? So if it's growing, you need to use bullish strategies like calls and call spreads and short volatility plays. If it's slowing and shrinking, you need to use bearish strategies, puts, put spreads, and long volatility plays. So what you need to do is think about where the economy is headed next. You need to target really good industry fundamentals. So focus on a handful of industries that are booming. So what you need to do is make your list and have it right at your fingertips. Skip over most of it and seize the leaders that have the momentum in the new world narrative. So get really clear on the micro picture. So you know the economy, you know the industries that you're going to look at. So then zero in on individual companies to trade. That's going to be your micro selection. Individual companies return double or triple the returns compared to stock indexes. So don't try and put all your money in stock indexes. You know, you put a little bit in there, but also have a few individual companies. So the market pays a higher implied volatility for an individual company as opposed to a basket of companies. Of course, you've got to remember that you're taking on greater risk trading individual companies. If earnings take a miss, as we know, the stock can slide down a very, very slippery slope. So then you need to hone in on the technicals. You need to read the chart, look at the patterns in the chart, look at the price action, what is actually happening in the chart. Then buy the option or scale into the market using small parcels. And of course, know your calendar. We all know the adage, sell in May and go away. So if 10,000 was invested on November the 1st, sold at the end of April, that would be worth about 702,000, giving you an annual return of 7.10. And the opposite happens beginning in May and sold at the end of October, would be showing a loss. So you also want to think about the calendar. So a quick recap. Know your macro picture, check out most and follow the good industry fundamentals. You know the micro picture, targeting individual stocks. Get clear with technicals and remember your calendar. So if you're trading outside the US time zone, I know it's difficult. So in Australia, I get subscribers always complaining to me, oh, they can't get the really good entry price I gave to them, etc., etc. So get up early in the morning, 1 hour before the market closes. Employ a longer time horizon. So for example, you could do more leaps, which gives you more time, or put in several price orders to ensure your trade is taken, or buy stocks and keep scaling in at regular intervals, which is what I'm always saying to my subscribers. So, but what's all this about leaps? People always ask me, what are leaps? So leaps stand for long-term equity anticipation security. They are options contracts with expiration dates that are a year or longer. So there's not any real complication to them. They're not complex. They just have a longer dated expiration. So they allow investors to benefit from potential rises in a specific stock while using less capital than purchasing shares with cash up front. But I'm sort of, call me a bit greedy. If you want to, I buy the stock and buy leaps on top of it. So I've got as I said in the beginning, I use various vehicles. Okay, so this is a really good entry for leaps. So remember COVID and when the market crashed in March 2020, here would have been a great entry for leaps, because you don't want to buy leaps at the top of the market or when the market's just motoring along nicely. You want to buy it after a really big pullback. So after that pullback in March 2020, by February 21, this is where we were, 22,580. So anyone that bought leaps then would have done very, very well. So making money in the market, psychology. Now, psychology accounts for about 80% to 90% of your trading or investing. So it's really, really important. So the basics of psychology, you need to manage your emotions, of course, develop a trading plan, and especially maintain discipline. But you also need to understand the market behavior, how it moves. So let's take a look at a couple of things here. Oops, going backwards. Okay, so why do we mess it up all the time? We have overconfidence, loss aversion, or confirmation bias. So in loss aversion, this is a bias that causes traders to hold on to their losing positions for too long. And I'm sure many of us have done that when we first started to trade. And they think by holding on, oh yes, the market's going to turn, the market's going to turn, I'm sure it's going to turn, I'll just hold on for a bit longer. So this can lead to significant losses and a lack of discipline in time management. So when you enter a trade, you need to have a take profit target and your stop loss already there right at the entry. So what you need to do here is be willing to cut your losses and move on to the next trade. Set stop loss orders, as I said, to limit losses, and this takes out the emotion. Confirmation bias. The bias can lead to traders to seek out information that supports their existing beliefs and ignore information that contradicts those beliefs. So you really need to consider all the information and not just be influenced by preconceived notions. So recognizing the steps to take, be realistic about your abilities, set realistic goals, be disciplined in risk management, and seek advice if you're not sure, and guidance from other traders. So mindset, this is really, really important. Resilience, you must have resilience, because if you have 2 or 3 trades that are losing trades, what are you going to do? You're going to get very upset. You're going to throw the laptop out the window, or you're going to, keep trading. Oh, I've got to make that money back. I must keep trading. Okay, you need to take a step back. Patience, you need to wait for the trade setup to come to you. Don't go out looking for trades that are not there. Focus, you need to be very, very focused. And focus is all tied up with exercise, which I'm going to go into in a minute now. So the benefits of exercise for the trader or investor, it keeps the mind sharp. It's essential for improved concentration. It gives better mood. It reduces your stress levels. It releases hormones like dopamine and serotonin, which help improve focus and concentration. And it aids in impulse control and planning and fear management. So, I mean, we all know how we feel after we go for a really good run or do a session in the gym. It makes you feel so much better, and it gives you really good concentration levels and focus. Okay. See if we can get this. Sorry about this. Okay, wait for the market to come to you. This is all about patience. These quotes here. Trading is 10% buying, 10% selling, and 80% waiting. And Warren Buffett says the stock market is a device for transferring money from the impatient to the patient. And if most traders would just learn to sit on their hands 50% of the time, they would make a lot more money. So time in the markets, not timing the markets. So we're always saying, oh, the market's too high, I better not invest now, I'm going to wait for a pullback. Oh, I think it could go lower, I won't invest now. So there's always a reason people find for not putting their money in the markets. So even the worst investor in the world bought the top of the market of each decade and still fared pretty well. So, you know, 500,000 in the tops all through here, the dot-com crash, subprime crisis, 2020, and 500,000 invested became 7,782,639, a 1,557% return, which is not too shabby if you ask me. Okay, so your responses when you're trading or investing, whether you win, lose, or draw, your response should be the same. You control your behavior. Make sure the action of trading and investing does not control you. The markets really don't care what is happening in your life. So a handwritten record of trades and investments. I find this is really helpful because it means that you're approaching your trading and investing as a business. The benefits of writing things down compels you to organize your thoughts. Putting pen to paper boosts connectivity between different areas of the brain, so you will retain the information a lot better. So you can say that was good because when you lose, you are learning something from your loss. When you profit, you are understanding and reinforcing what you did well. So losing is not essentially bad per se, but it's part of the business of being in the markets. So it's a lesson, store it. The more lessons, the better you'll become. And as you keep writing down what happened with each trade or each investment, you could probably see as time goes by that you're gaining those lessons and improving. So your rules, are you going to trade every day? Time of day? What's your strategy going to be? Which sector are you going to trade, or which stock? So what's the time period you're going to use to enter a trade? How are you going to exit? Do you take half off and let the other half run to a secondary level, or do you take all profits? What's the size of your trade going to be? I recommend always to start small and accumulate over time and average in. So you need, as I said before, you need to know your exit level when you place the trade. You can have more than one exit level. So you always need your stop loss in place, just above the resistance level or below the support level. And of course, be careful not to get too cocky and add too many trades. You must be able to manage your trades and sleep at night. So reading the charts, we're going to focus here on patterns, moving averages, RSI candlesticks, and time periods. So the best chart patterns to be able to identify are really head and shoulders, pennants, and triangles. So let's look here. The head and shoulder pattern. This is what it looks like mostly, and this is the neckline support here. And it's a good idea to be able to draw this neckline and put an entry order for a trade here, and it can just be taken if this follows through. The double top, the double top in the market here, this is what it looks like. And of course, you draw your line here indicating the neckline support, and your entry order should be here. This is the flag pattern. You can draw it on your chart so you can really, it stands out and recognize it. Notice the price action continues in the direction of the original trend once the price breaks out of the flag. So this can be seen actually as the flagpole. This is the flag, and then there's just a continuation of the price action. Triple points, what I call 2 points makes a third, and this is one of my favorite chart patterns to recognize. Okay, so you can draw your line at the top of those 3 points, and then a line underneath at the neckline, and put your entry order here, and you'll have a measured target price here because you're measuring the difference between the top and the bottom level here, and this is your price target here. Candlesticks. It's a really good idea to be able to identify candlesticks when you're reading a chart, because it often helps with turns in the market, either at the top or the bottom. So we're looking at inverse hammer for bullish direction, hammer, bullish engulfing candle. For bearish direction, we're looking at hanging man, shooting star, bearish engulfing candle, and spinning top. And the doji is a representation of continuing patterns. So here we have the shooting star at the top of a market trend, and the potential direction can be bearish, can be lower. And here we have the hanging man, which just looks like a hanging man with the head at the top and the tail, and the potential direction here is lower. And the opposite here is with a hammer. This is a hammer candlestick, and the direction could be bullish, higher. And an inverse hammer here also indicates the potential direction could be higher. So let me get on to the S&P 500. Now, we had a fall this last week, but I think the market could still be heading up to a last upside between 6150 and 6300 before we actually have a fall, quite a severe fall, down to the 4800 to 4400 area. Okay, so let's have a look at the chart. This is the S&P monthly chart, and I've drawn all sorts of lines here and target levels here. So this is where we are now, roundabout. This is where I think we could go, where we could rally up to. I think we could rally up to this wedge trend line resistance level up here. So that would be, we could reach 6150, 6200 or 6300. But then I think that that's going to be our last move before we have quite a severe and violent down move. And I mean, we're going to get some serious national news or international news that is going to frighten everybody. I think we're going to break through that 5,000 level. I don't think we'll get down to this 4,000 level, but we could trade between this 5,000 level down to 4,500 if it's really bad. Then we're going to get this up move. This is going to be sort of like an ABC pattern. We're going to get an up move, and we'll land around here around the 5,000. Okay, so this was the COVID low. This area is not likely to be broken for many, many, many years to come. But what's going to happen after we do have this serious correction is the market's going to really rally, but we're going to have the biggest rally you've probably seen in decades. We're going to rally for the next 30 years. So think of ideas like 150,000 in the Dow plus 32,000 in the S&P or 37,000 in the S&P by 2060. That's what's ahead of us. So just think about those levels. So we may find a bottom between these levels in the next 4 to 8 months. So Treasury bond yields. This is a monthly 10-year yield chart, and we can see we've had this 40-year downtrend in yields ending at the March 2020 low here. And you can also see we went up to 5% and we've pulled back a little from that 5% level. But I'm anticipating yields to keep rising and quite substantially up here. I can actually see 8% or higher. And we have this inverted, if you look at this pattern here, we have this inverted head and shoulders pattern here with the head here, the shoulder here, shoulder here. So this is basically the neckline support of that. And if we break that, you'll know that that pattern has been confirmed. This is the 10-year yield chart going back to 1960. And you can see here, this is where we are now. And these are weekly overbought readings. And you can see we have them here. We had them here in the 1980s and back in the 1970s. So I am anticipating that we could repeat these levels here. We know that history doesn't repeat, but it does rhyme. So if we do break that inverted head and shoulder level, I'm anticipating that we could go up toward these levels at 8%. Okay, the US national debt. Now, some people say it's not a problem. Other people say it is a problem. I see it as a little bit of a problem, actually. I mean, look at the level here around the World War II, the Great Depression, even COVID. Now, it's not going to go down from COVID. It's just going to keep rising. And when you have rising debt levels, that's when the yields in bonds start to keep rising, because lenders are going to be a bit nervous about lending to the US. Right, this is the public debt for every American. Okay, so the public debt for each child born in 2024 was 82,000 plus. 2040, it'll be 143,000 plus, and 2050, 209,000 plus. So it just keeps going up. So what's happening with gold? We've seen that it's had an enormous rally last year and even early this year. So the movement in gold has decoupled from its economic and financial influences. There is really a geopolitical angle present here, which is overwhelming the economics and the finance. So first of all, let's ask, who is buying the gold? It's foreign central banks. And why are they doing that? They're diversifying their reserves away from the dollar. So really we can call that de-dollarization. So gold has become a store of value and a protection of wealth. So when Russia rolled their tanks into Ukraine, the sanctions were imposed on the country. They were effectively thrown out of the SWIFT system, and all their everything was frozen. All their funds were frozen. Their money was frozen. But you know, the question is, has the economy collapsed? No. Russia is continuing to trade. They built a system that includes 4 or 5 other countries, which totally bypasses the dollar. So a lot of people, you could argue, have lost trust in the ability of the US to be a responsible steward of the international system. So they built what's called BRICS. It's a group of countries challenging the dominance of the dollar in the global financial system. And the BRICS stands for Brazil, Russia, India, China, and South Africa. And actually several other countries have begun to join this group of countries as well. And Saudi Arabia is one of them. We've had a lot of talk about the revaluation of gold. It's currently priced at $42, and I think it's 22 cents. But pricing it in today's price is a notion which could pay down a lot of the US debt, but certainly it wouldn't pay all that debt down. So that's the notion being floated around. So let's recap what's moving gold. Central banks are buying gold, and actually you could say China. I mean, the Chinese people are shopping for gold like you're going grocery shopping. Market sentiment, there's fear at the moment, and that produces a poor sentiment, and people go out and buy gold for insurance. Economic and geopolitical uncertainty, and it's also used in industrial applications for building of AI. So the gold price prediction, where do we think it's going? These are some predictions. So 2024 was 3,000. We got there, we nearly got there. 2025, 3.5, and let's go up here to 2029, 8,000. By 2030, over 9,000. 2031, 10,000. So we're actually heading up toward 5 and 10. And really, as the US debt gets worse, the gold price keeps going up. So factors influencing the silver price in the future. There's insufficient investment in mining production. There have been mine closures and increasing operating costs manifesting themselves in market prices. Major mines forecasting a reduction in silver supply. New China stimulus package, which we saw recently, boosted demand for the industrial metal as China focuses on domestic demand. The monetary policies have also an influence on the silver price, and geopolitical tensions also. Here's the silver weekly chart, and you can see down here at the bottom level of near 2023, it just started to gradually rise. And I think we got up to a peak close near $36. So it's just come down for a rest at the moment. Okay, so silver is not just used for pretty jewelry or family silverware. It has a lot of industrial uses as well. So we can see here it's used, 17%, just over 17% for jewelry, silverware not quite 5%, and photography, bullion needs to come, it comes up near to 30%. Industrial, not quite 50%, and we get a lot of use for silver in solar. Also, we see applications in tech and batteries will drive the demand for silver higher in the future. So how do we invest in silver? We can buy silver coins or silver bars, purchase silver ETFs such as the iShares Silver Trust, which is SLV, SILV, which is the Aberdeen Physical Silver Shares, ProShares Ultra Silver, which is AGQ. We can buy futures contracts, which is for the experienced investors, or we can purchase Wheaton Precious Metals, WPM. So here's the chart of SLV, the iShares Silver Trust. I recommended to all my subscribers to scale into SLV back on the 15th of the 2nd, 24. So that's even off the charts here, back here at $20.70. So here we are up near 28.31. So we've enjoyed all that uptrend there. Wheat and precious metals are recommended at 15th of the 2nd at $35. So right down here in February. So we're up now at $68, nearly $69. Gold stocks and ETFs. We're looking at Barrick Gold, VanEck Gold Miners GDX, and Gold Shares GLD. This is the GLD daily chart, which tracks the price of gold. So I recommended GLD on the 21st of June last year, which is around here when it was $215. So we've enjoyed all that movement up to here to 263. And I also issued leaps on this pullback here, which are probably doing very, very well at the moment. This is the GLD 4-hourly chart, and you can see this pullback here nicely, which I would actually recommend you can buy into this dip on GLD now. Barrick Gold, which is the biggest gold miner, you can recommend, we recommended going into Barrick on February 2024, which is of course off the chart here to the left at $15.09. And again, I recommended it on the 15th at $14.50. So this is like building a pyramid, as I showed you right at the beginning. So you're building a ladder of positions. GDX, I recommended GDX on the 15th of February last year at $26, and we're now up to nearly $40. Currencies. The US dollar will be strong for the medium term. There's growth and production expansion will be happening. It's pulled back a little bit since Trump got into power, but that is just a pullback, that's a correction. But it's likely to fall in the long term because of the fiscal situation in the US. So we need to avoid the euro, the pound, Japanese yen, and the Australian dollar for now. This is the euro. We can see it had a short rally up to here, and that would have been a good sell position here, as it will continue down to, I think, a new low around 92, and we should get to that by the end of the year or September, October. This is the British pound, same here. We've had a nice little retracement, but then again, this is a nice sell area. Australian dollar, once again, had a retracement up here, but as you can see, it's already been falling. This is the US dollar. As you can see, we had this huge rally up in the latter part of last year, and we peaked just early in 2025, and we've had this retracement here. But this will just be a retracement. We will resume, the US dollar will resume its rally. Crypto and Bitcoin. Okay, this is the Bitcoin 5-year chart. And you can see the rally that has happened right up to the nearly 100,000 mark. We topped it 108,000, and then it started to go sideways and pull back. And it's pulled back significantly just this week. This week it's just been, and I think we got to a low of around 78,000. But I would be suggesting a buy here, because we're going to get a rally up to at least 120,000, between 120 and 150,000. Okay, this is the Bitcoin daily chart, and you can see this fall here. As I said, I would be recommending to buy Bitcoin here, target 120, 128 to 160, and put your stop loss at 70K. Okay, Michael Saylor, the CEO of MicroStrategy, or should I say Strategy, which he's changed the name. He provides business intelligence, mobile software, cloud-based services. He's bought 8 billion of Bitcoin since embarking on the Bitcoin strategies from August 2020. So MicroStrategy's been up around 840,000, though it has retraced quite a bit recently, but he's certainly made a huge percentage in that share since he's been buying that stock. And all during, whether it's going up, whether it's going sideways, whether it's going down, he just keeps on buying. Okay. Okay, the future of digital assets and tokenization. According to Larry Fink, CEO of BlackRock, he believes tokenization and exchange-traded funds will revolutionize finance, and many experts believe the tokenization market could reach 10 trillion in 2030. He says, we believe Bitcoin is an asset class in itself. It is an alternative to other commodities like gold. Fink believes tokenization will be 100 times bigger than Bitcoin. So he explains tokenization here, and I don't know whether I've got time, but hopefully I do to play this.
This groundbreaking charger is taking the tech world by storm. It can charge your
It's
phone
just
from
an ad.
0 to 100% in record time.
Imagine turning your house, stocks, or even a bar of gold into digital tokens. Sounds futuristic? Well, it's happening now. BlackRock, the world's largest asset manager, is stepping boldly into the blockchain world with their Bitcoin ETF and advocating for more cryptocurrency ETFs. Their CEO, Larry Fink, envisions these moves as mere stepping stones towards a groundbreaking concept, tokenization.
Let me be clear. I think ETFs are step one in the technological revolution in the financial markets. Step two is going to be the tokenization of every financial asset. And to me, this is where we believe it's going. So we're looking at Bitcoin, we're looking at ETFs in the same manner. These are technological changes that can allow us to move forward.
What exactly is tokenization, and how might it transform our approach to real-world assets? At its core, tokenization involves converting the rights to an asset, whether it be bonds or real estate, into a digital token on a blockchain network. It enhances liquidity, turning previously illiquid assets like buildings or artwork into easily traded tokens. Traditionally, bonds have been the domain of large financial institutions, often out of reach for everyday investors. Furthermore, the traditional bond issuance process is costly, involving intermediaries like clearinghouses and underwriters, not to mention significant legal fees. By tokenizing bonds, the asset becomes available to retail investors, increasing their liquidity and affordability. Smart contracts, which can be thought of as self-operating sets of rules coded into the blockchain, function like a vending machine. Just as a vending machine automatically dispenses your chosen snack after you input the correct amount, smart contracts automatically execute agreed-upon actions, such as distributing interest payments, thereby reducing the costs associated with issuing bonds. This not only makes the process cheaper for borrowers, but also more profitable for lenders. It's a win-win in the world of finance. And speaking of wins, if you're curious about how the blockchain is transforming bonds, don't miss our in-depth video on this topic. Another asset class, among others, heading towards tokenization is real estate, as seen with the St. Regis Aspen Resort. Here, 19.9% of the property was transformed into Aspen coins, each representing a share in the luxury resort. Tokenization transforms real estate by turning traditionally illiquid assets into liquid ones, enabling fractional ownership. For example, investors can now own a portion, like 3%, of a property, making it easier to buy and sell these fractions. Tokenization also democratizes real estate investments. By breaking down properties into tokens, it lowers the entry barrier for investors, broadening market accessibility. Moreover, it cuts out many intermediaries such as brokers and agents, reducing costs and simplifying transactions. Furthermore, the blockchain technology underpinning tokenization ensures both transparency and security. Its immutable ledger offers equal access to asset information and robust protection against data tampering, enhancing trust in ownership records and transaction history. As we reach the end of our exploration into the world of asset tokenization, let's examine what BlackRock's CEO Larry Fink highlighted. We have the technology to tokenize today. If you have a tokenized security and identity, the moment you buy or sell an instrument on a general ledger, that is all created together. You want to talk about issues around money laundering. This eliminates all corruption by having a tokenized system. What are your thoughts on this vision of a tokenized future? Do you see it as the key to eliminating financial corruption and enhancing security? Or are there aspects of this technology that you believe need further exploration or caution?
Okay. Here it is. Oops. Okay, so that's Larry, an explanation of tokenization. So what is it again? It refers to turning physical assets such as real estate, artwork, really anything you could think of, commodities, into digital token, which resides on the blockchain. These tokens signify ownership of a share in an asset, facilitating its exchange or transfer. Blockchain technology promotes security and transparency. So I recently bought a digital token in gold, and it's really great to have an extra vehicle that you can use in the financial space. Which assets? So the tokens can represent assets, including physical assets like real estate, art, equities, bonds, even intellectual property, and even identity and data. Benefits, as it said, it fractionalizes the asset, so there's a piece for everybody. It lowers the barriers to entry. It increases liquidity. It's an immediate settlement. There's no waiting. So when you sell shares today, you have to wait 3 days, I think, for the money to appear in your bank account. With this, it would be immediate. And it's also cheaper for the buyer and seller. There's no middleman. It's transparent and secure. So a little bit about my background. I travel a lot, and this is my son, Alex. I worked in a mental health facility for at least 10 years in the Toowoomba Hospital. I've done about 3 or 4 degrees, which finished with my MBA. I'm a qualified TEFLA teacher, which is teaching English to foreigners, which I've done for around 30 years. I've run my own fund. I've worked with John Thomas, Mad Hedge Fund Trader, for several years. I've also had a stint in the outback of Australia as a Jillaroo, or cowgirl, as they call it in the US. What have I done with the money and funds I've earned through trading and investing? I've poured it into education. I sent my son to a prep boarding school in the UK, in Wokingham, called Ludgrove, and he spent 5 years there boarding. The fees were quite exy, £9,364 per term, and that's 3 terms in the year. It was equated to about 60,000 Australian dollars a year. We used to go on holidays when the summer break, and this is Alex on the shores of Lake Tahoe with the beautiful snowy mountains in the background. I travel a lot, especially when I put my son into summer camps in Switzerland and France, where he used to learn French and improve his French, because he actually, at the end of year 8 in Ludgrove, he actually topped French and got the French prize and the Latin prize as well. So this is me in Switzerland. Excuse me. This is me on the at restaurant beside the Thames, down here at Mackay in Australia, and on the Gold Coast in Queensland. So can you manage your own money without any direction at all? Over the next 10 years, 20 years, the investment space is going to look enormously different. Are you going to be able to identify the winners from the losers? And will you have access to the latest updates? Or would you actually like some help? Excuse me. And the best moves, I like these quotes from Warren Buffett here, the best moves are usually boring and most news is noise. So the trader survival rate of every trader is about 1%. 1% of all traders survive net of fees. 7% remain after 5 years, 80% quit within the first 2 years. The markets must remember are unforgiving, and emotional trading always results in losses. And the market does not know that you exist. So you can do nothing to influence it. You can only control your behavior. So this is stock market returns over the past 90 years. You can see the median annual return was 14% plus, and the average return was 12%. So much more positive gains than negative. So this is my argument for just staying in the market because you never know if you sell out what's going to happen next, and most people sell out on the lows. Excuse me, I'll just have it up and drink. Okay. So could the S&P rally to 14,000? Certainly it can. There have been 2 secular bull markets since 1929, with both generating returns of 2,300%. So if this current cycle generates a similar rally of plus 2,000%, the S&P could rally towards 14,000 by 2034, which was when we expect the current 16 to 18 year secular bull cycle to peak. And of course, what I'm saying is we're going to get a pullback in the not too distant future, and then we're just going to keep rallying. So what's going to make the market rally? And it's going to be technology. That's going to supercharge everything. And it will impact all sectors: health, finance, transport, agriculture, housing, retail, etc. Quantum computing will have big impacts on the tech industry and the world. And you'll have all these things happening in the not too distant future. And some of them are even happening now. I mean, I saw an ad for actually flying vehicles just the other day. We'll have anti-aging drugs, teleportation, space mining, quantum internet. And the advances in medicine will be huge. I mean, eventually they'll find a tablet that you can take to cure cancer. So how do you benefit from Jackie's post? You get up-to-date information on the market, the economy, and geopolitical events. 3 newsletters a week. I will go through all the stock market terminology as you start to learn about the markets. John holds a webinar once per fortnight. I summarize the main points and send it out to you in a post. I give you trade ideas and explain why the trade is a good idea. For example, we had this Tesla buy in 27th of September last year at 260. We bought Palantir at $23 in March 20 last year. And I also recommended on June 21 last year, Disney, when it was really down in the doldrums at 101.22. I recommended a buy, and also Leaps. I think it's now up around $113. So the Leaps are doing really well. I have Zoom monthly meetings. I hold a Zoom meeting on a monthly basis to bring subscribers together and connect the community and give them an update on what's happening in the markets. And actually, I'm doing one in 3 hours after this is finished for February. I often have luncheons and get-togethers. This was in Melbourne in January last year. Testimonials, I get Larry says I'm awesome. Ralph says she keeps her finger on the pulse in the markets, but generously researches and answers more esoteric financial questions. a rare resource for any trader. And James says, I give consistent and accurate analysis of the markets. And of course, John Morrison says, I won't read all this out, but she talks from experience and educates you how to shut out the noise and focus on the opportunity at hand. And Jackie's guided me to many successful trades, which I'm forever grateful for. Okay, so what do you receive with Jackie's post? 3 newsletters a week, a summary of John's webinar sent out once per fortnight. Trade investment ideas will be shared when the risk reward is in your favor. Monthly Zooms to educate, share ideas, experiences, and ask questions. And occasionally I will organize a luncheon as well. I don't supply DVDs, pamphlets, books, or anything else. This is just raw data I'm going to give you because I find most people receive those things and put them in the cupboard and don't ever look at them again. So your price today, $397 for 6 months, and you're going to get a free trade alert and an options trading course. So click on that link in the chat box on the right. This is a mystery chart. Is this stock a buy or a sell? If you purchase my newsletter today, you will receive this trade alert direct to your inbox. So if you sign up for Jackie's post today, you will receive John's course, The Option Traders for Beginners. It's a 12-chapter course about everything you ever wanted to know about options, written for the basic beginner. So take a step and change your life. $397 for 6 months. Click on the link, change your life, join our community and learn about the markets, how to make money, boost your income and your wealth. Okay, all right, I'll stop here. So thank you for joining me today. Jeff, I'll hand it back to you. I've gone a bit over time, sorry about that. But if there are any questions, I'm happy to
that's fine.
answer them as best I can.
No worries at all. You're the final speaker, the grand finale, if you would.
Okay.
So let's see. Juan asked earlier, is there a suspicion within the current U.S. government that the golden Fort Knox has been stolen or misused by corruption?
Well, I don't think, I mean, they talk about Fort Knox as being the only place that the US holds gold. Gold is held in various locations, and I really don't think that you'll open Fort Knox and it'll all be missing. I think that's a nice story that's going around the media at the moment.
Okay, Rich wants to know, how can he invest in companies that provide tech for tokenization? Thanks, Rich.
Yeah, you have to talk to me about that because I've only recently invested in my gold token. So that's sort of a separate area that I've got into. But for anyone that's interested in going into tokenization through stocks, please talk to me.
Cool. Reg wanted to know if he could get the video to the link to the video for tokenization. Is that possible?
Yes, I could send that to you, Jeff. Would that work?
Yeah, that'll work. Reg, if you want to reach out to me, I'll email it to you, jeffrey.gibby@metastock.com.
Okay, I'll send it to you, and then it's probably better if whoever requests it from you, you can send it out, or you could send it out to everybody.
Okay. Rich said, what an excellent presentation. I agree with him. Saturday afternoon well spent. Also agree with him. Thank you.
Great. Thank you very much. And thank you everyone for staying around for the last presentation. I appreciate it. I hope you really got a lot out of it. And just think about what I said on the S&P, Bitcoin, and gold in GLD.
Barry said, what a great summary. And that is the end of the questions, the end of the comments.
Okay, lovely. Thanks for your event, Jeff. Great to be here. Hopefully I can join the next one. And thank you everyone very much for taking the time out to spend this time with me.
Well, we'll definitely make sure you're invited to the next one. Great job. Thank you.
Thank you.
All right, thanks, Jackie. You can go ahead and we'll wrap up. Thank you very much. Okay, and as we wrap up, I just want to say, here, we'll do this on camera. As we do, I want to, look, the sun. We have one of the nicest spring days that we've had so far here in Utah right now. And I'm going to go outside and walk the dogs as soon as I'm done here. But before I'm done, I want to say thank you to all of our presenters and all of our sponsors. I think all of our presenters did a really great job. Very much appreciate everybody for coming in and sharing ideas. And I hope it was useful for you. It was useful for me. So I want to thank all of our sponsors. We'll start with AAII. You can find out more about AAII at AAII.com. I want to say thank you to Stocks and Commodities Magazine. Well, I accidentally turned off my camera. You can find out more about them at traders.com. If you haven't yet, join the Traders Forum. You can do it for free right now. You can go to www.thetradersforum.com. We do lessons up there. Last week we did Dow theory. We've covered stochastics and moving averages, and there's all kinds of PDFs and resource materials about candle patterns that you can get. A ton of good stuff. One of the things I really like is it's an open chat room. You could go in there. There's not anybody in there right now because the markets are closed, but you can go and share ideas or pick up ideas from other traders. We have a really good group of traders that are up there, and all of that is free. thetradersforum.com. So we talked a lot about the products we offer, our award-winning MetaStock product. We've developed a lot of add-ons with some of these speakers, and all of the stuff that's MetaStock related, you can get at metastock.com/conf-promo. Or if you have questions, you can go to metastock.com/sales-chat. Or if you're in the US and Canada and want to call us, you can, 800-882-3040. The offer that we're doing for MetaStock, our software that's been rated #1 for 32 years in a row, is if you buy a month, you can get your second and third month for free. We're going to sit down with you and do a white glove installation appointment where we kind of show you around the program, make sure you understand how to use it. We're going to give you unlimited access to our technical support. We're going to give you training that you can go through at your own pace to kind of help you get going. I love the scanning features of MetaStock. I wouldn't trade without it. If you haven't used MetaStock, you deserve a chance to try it. And on the special that we're running right now, if you buy a month, you get the second and third month for free. And that'll be about $25 a month is all. And there's no commitment to keep it. If it's helpful, it's helpful. It'll pay for itself over and over again. So there you go. Metastock.com/conf-promo, metastock.com/sales-chat, 800-882-3040. Yog says, thanks, great presentation, Jeff. I thoroughly enjoyed the whole 6 days of the conference, even though I missed 2 days. Those 2 days are on youtube.com/metastock, Yog, so you can go watch them now if you want. Jeff, Greg, and the crew, thanks to a job well done. I appreciate it. And then Juan says, thank you, excellent event. Thanks everybody for, again, thank you all the sponsors for helping us make it possible. All of the speakers for coming and spending some time with us, and telling us some really good ideas. And you for being here. Like nobody would come and be here if you're not here. So it was good. Thanks for all the questions. If you're watching us on YouTube, like and subscribe. It does help a lot. It does help us kind of provide, it does help us get the word out. It does help us build events that are big. It helps a great deal. I'll see you at the next one. Enjoy the rest of your weekend, and I appreciate your being here. Thanks, guys. Stay well.